results out from Chevron. Earnings coming in at $1.52 a share. That beat estimates of $1.45. Revenue fell 10% to $46.87 billion. The company is increasing its quarterly dividend by 4% to $1.78 a share. And if you look at production, I think that's where the huge improvements have come, the big increases. Over the course of the year, this was their fourth quarter. For the fiscal year 2025, worldwide production was up 12% and U.S. production was up 16%. I spoke with Mike Wirth, the CEO of Chevron, and he says if you look just back 2 years ago, they were producing not even 2 million barrels per day. Now they're producing over 4 million barrels per day. Adjusted free cash flow is up 35% year over year, and that comes despite the fact that crude oil prices were down by 15%. Chevron and some of the other big majors getting really good at making sure they are more efficient and more effective in how they're doing things. Mike talked a little bit about the restructuring that they had last year. They let go about 20% of their workforce, and that did add to about $1.5 billion in additional cash coming in through the course of the year. They expect that run rate to grow to $4 billion for 2026. And I spoke with them about Venezuela because obviously that's the big issue right now. Chevron is the only U.S. company that's been operating in Venezuela. The rest have all left. They've been talking about how they can't get their money back out of them. Mike Wirth says, we stayed when others left. We've been getting repaid. The other companies have not. He said, we're on the ground there and we have a real advantage. They know the government. They know the supply chain. They know how things work. He says, I think we're in pole position, assuming things continue to move in the right direction. He did say it's very early days for that, but it is looking good. And he says when it comes to the new petrochemical issues, they've got a plan on all of this. If the reforms in the law go through, he thinks that it would be a much more competitive place with the rest of the world. But just over the last 2 years, Chevron has increased their capex in Venezuela by 5 times. They grew their production there just by doing basic maintenance on all of the older equipment that needed to be updated, things that needed to be done to the wells. I never understood, Joe, entirely how it worked in Venezuela for Chevron, why they were able to make money on this. He said the oil comes out of 3 joint ventures. They have the right to sell all of that oil to U.S. customers. First of all, it goes to pay taxes and royalties. Second of all, they're recovering the debts that they're owed. They've not said how much that is, but he did say it's in the billions, not the millions, the B's, not the M's. And then the third leg of that is anything that's left over, they will put back into operations to try and continue to update and fix. As a result, he says that they think they can get another 50% of additional output in Venezuela over the next 18 to 24 months without putting in additional capex that's not coming from the royalties coming out of the ground there. He says if these reforms pass, it could be a more attractive place for others to reinvest. When I asked if he'd put more of their own capital in right now, he said, well, we have to see if these reforms pass in the law there because it's got to be competitive with the rest of the globe. You've got Brazil, Argentina, Nigeria that all look pretty good too. But when he says early days, things seem to be going pretty well there, moving in the right direction.
So there's all the commentary from Chevron. We have Darren on too.
We do. Darren Woods is going to be joining us a little later this morning from ExxonMobil to get his perspective on these things. Remember, they left a while ago, and Darren Woods was pretty outspoken where he said, look, this didn't work for us. They fooled me twice. They've lost money there twice. They want to see things on the ground improve before they will put more money to work because they're still owed billions and billions of dollars.
I don't know how it plays out there. The latest over the weekend, administration officials saying Delsey's interim. She's not going to be there. No, so I don't know what that means.
Look, what I will say from people that I've talked to about this is the administration has watched what happened with Saddam Hussein. The problem with Saddam Hussein was they took out not only Saddam Hussein, but the head of every organization there, anybody affiliated with the party. The problem was you didn't get a job in that party, even to remove garbage or run the schools or run the hospitals, unless you were a member of the party. So all of civil society broke down.
Exactly.
They don't want to see that happen in this situation.
Right.
And that's why they're moving more carefully with this and trying to make sure that you can have the continuation of a civil society and not have a complete breakdown of all of that to continue to operate. And when you've got talk right now of what's going to happen potentially in Iran, same story. Nobody wants another Iraq.
Right.
We're going to be watching all of
how
this.
it all plays into oil is
pretty key. And you've been watching oil move back up above 65. I don't know where it is this morning. Right at $65 a barrel. That's been a huge help to the administration, having it down so low for the last year. Again, oil prices were down 35%, as Mike Wirth pointed out. they were still able to improve with that consideration. Big issue for inflation. It's been a huge help to inflationary pressures here at home. Anyway, that's what Chevron's saying right now. If you take a look at where the stock is trading, I missed that last tick. This is what Mike Wirth has told us about all of these things. It's down by about $1.20 right now. Earnings did beat pretty handily on the bottom line, but obviously there's a lot of moving pieces there. You don't want to miss an interview with Chevron CEO Mike Wirth. That's coming up at 9 a.m. on Squawk on the Street.
Yeah, with Darren Woods on this show. Joining us now with his take on the markets and the potential selection of Kevin Warsh as the next Fed chief, David Bahnsen, Chief Investment Officer of the Bahnsen Group. Why did you, and welcome, it's good to see you on set. Why are you such a fan of Warsh, and why are you hoping that it's him?
He was a realistic candidate compared to a lot of the others. I knew he was in the running. He has the respect and credibility of financial markets. I worked with him at Morgan Stanley, thought very highly of him. Look, there was no person who was going to get this job who wasn't going to be cutting rates in the short term. However, I think just longer term, I believe he will be a credible candidate, and his opposition to QE in the early days of Bernanke put him on a little different place as far as his intellectual position. I think that Warsh has credibility.
And Becky, I don't know if you've seen all the sort of I'm not going to call it a cabal, and I'm not going to say Scott Besson is the adult in the room, but the whole Besson, Druckenmiller, Warsh triumvirate is, maybe we should have never been that surprised that, but he, the Treasury Secretary holds a lot of sway with the president, and that could explain why.
But it was not.
The president's not dragged kicking and screaming.
Not at all. This was he was somebody who the president liked in the first term.
Almost did it the first time. So it all sort of came in. But there were times when Warsh, his Kalshi numbers dropped into the teens. I mean, as the horse race.
The president kind of likes the horse race.
Yeah.
And by the way, also doesn't want
Wasn't
to say.
there a time when you thought? And Kevin's a friend of the show as well. And weren't there times when you thought it was much less likely? I thought there were times when he was a dark horse.
But
and then he, it was
the race and the horse.
It was a horse race.
Fun.
David, the other. Summarizing, January doesn't mean squat for you in terms of the markets. How it does it in January, you think that's overrated as an indicator, but you do have major concerns about not maybe the overall market, but AI, tech stocks.
Yeah, well, that becomes the overall market at these market weightings. When 40% of S&P is about 10 companies, then it becomes the overall market. You know what I think you're seeing this week in spades? When you have that kind of response with Meta and that kind of response with Microsoft on the same day, the whole Mag 7 thing is done. And it's one thing if one is up 1 or 2% and another's down 1 or 2. Up 10 and down 10% in the same day. Looks like Apple's going to open down this morning. I think that big tech trade is a total dispersion of results. That it's going to be very, very different.
The market cap of those 7 stocks is still pretty unbelievable. As they go, they're going to drag the market any direction that any of them move.
I totally agree. I think that the rotation is going to be the big story, because I think that much like 2000, there is a good argument for certain things in the market to not have to be dragged down. They're not at 25 times, let alone 40 times. That segment is just so price sensitive because of the high valuations. And the Microsoft thing yesterday was stunning.
That said, momentum can carry things a lot further than fundamentals normally would. So you're not saying that this isn't going to be a winning trade.
I am too humble to say that momentum has reversed, but momentum carrying it one way can go further than fundamentals, but momentum can also go the other way. And that is the issue, that a lot of people that own NVIDIA currently own Microsoft and so forth, they've never seen it. They've never been part of it. Even 2022 is ancient history for a lot of current investors. And so just a year like 22, I think, would be very unsettling for a lot of people. And I think there's a good chance of that. But when you're at 5 trillion, 4 trillion market caps, you can drop 20% very easily, still be $3.5 trillion companies. So I think it's a vulnerable part of the market.
And what is dictating the near-term future for AI? Things that these incestuous relations, because it's great when one $3 trillion company,
Yeah.
says, well, I'm going to help this $4 trillion company,
Yeah.
and you start wondering about
You
whether
and I can
that's
do a
real.
lot of business together that way, just paying each other to do business with each other. The
And then-
problem is that can't catalyze what I'm talking about anymore because everyone's talking about it. A year ago, I thought I was brilliant for pointing this stuff out, but by November, it's now kind of baked in. There is some question. Anthropic announces a deal with so-and-so, and markets don't respond anymore. So what could catalyze some weakness? I think it's people reducing orders. Just any kind of indication we're not going to put the same capex forward we were. Now, Meta didn't
But
say
I was
that.
gonna say, that's not what
Oh,
we heard so far.
Meta went the other way, but then I did see announcements yesterday of big spending plans at Amazon, and the market didn't respond.
We had Corning's CEO, Wendell Weeks, on this week, and they had the big deal that they announced with Meta too.
Yeah.
That didn't feel like a circular deal to me. That felt like Corning trying to protect itself from winding up in the position it wound up in with communication services back in 99, 2000, where they said, okay, you want all of our fiber optics, we can definitely meet that demand. We're going to have to increase our employee base by 15 to 20% in some of these factories. We're going to have to build out the factory, and we want you to kind of guarantee that revenue before we do.
Yeah, that's not a circular
Yeah, that
deal.
felt like
That's a company with cash paying a company for a product.
So, yes.
It's when the LLMs are involved.
Yeah.
That they're going to be the end recipient, and they're the ones paying for the order, but getting an equity contribution from one of the people in that.
No, just pointing out
value
that some of these deals further down the line don't feel the same. They feel different, and they feel like real deals.
Yes.
And that what you're talking about broadening out, the shares of Corning were up 15%.
But it's still a pick and shovel deal, though. Like, it's still about making the infrastructure of AI, and I still think at some point someone has to tell me, how do the hyperscalers get an ROI on the capex? And I'm not saying they won't, but my own theory, having gone through all the .com stuff we went through, is I think there will be huge winners, but that nobody can actually tell you how it will play out right now, because it will change. The revenue model will change, the business models will change, and I think there's going to be losers. And it's priced as if everybody's going to win.
And then Amazon $50 billion to OpenAI. I guess maybe some of the money they're saving from the 16,000 layoffs or whatever it is, they can put in OpenAI to help OpenAI go public faster than Anthropic. So there's a race now to
That's what I'm
IPO.
saying.
And then, the op-ed today about the only two entities that can really harness AI if something starts going in this or China and the United States. I mean, this is a burgeoning technology that could end up killing us all if we're not careful.
On that,
I'm gonna be careful.
Yeah, there's nothing you can do.
Dario Modi's essay that he put out this week on
Yeah,
just that. It's
yeah, it is. It is. It's out. The cat's out of the stable. The toothpaste is out of the Humpty Dumpty's wallet. David, thank you.
Thanks, man.
All right, when we come back, Elon Musk reportedly weighing combining SpaceX with Tesla or XAI. That's got people in a tizzy. We've got the details on that story after a break. Squawk Box. We'll be right back. back, everybody. Fourth quarter results just out from ExxonMobil. Earnings came in at $1.71 a share. That beat the Street's expectations by 3 cents. Street was looking for $1.68. It came on revenue of $82.6 billion. That did beat the expectations of $81.4 billion. You can see the stock off slightly, down by about 2.3% right now. We'll continue to keep an eye on this, and we do have Exxon's CEO, Chairman and CEO Darren Woods. He's going to be joining us in the 8 o'clock hour in a CNBC exclusive interview. A lot to discuss with him, everything from what he's seeing with oil prices, if he expects these gains to continue, what he thinks about Venezuela, the potential for any action in Iran, and much more. We'll be speaking with Darren Woods coming up a little later this morning.
Got to ask him about whether he's talked to Trump too, and how
it went down since he said.
How's that going?
Right, since he said not interested in Venezuela at the moment.
Right. I think Trump was mad.
He was.
Yeah.
He was not happy with that.
Yeah.
But Darren Woods tends to call it like he sees it. He has come down on the side of shareholders again and again. Joining us right now on set to talk about affordability, the energy grid, and much more is Maryland Governor Wes Moore. Governor, it is great to see you.
It's great to be back with you. Thank you.
Thank you for coming in.
My pleasure. My pleasure.
I guess front and center, affordability issues. That's been something we've spoken with you about in the past. It seems to be resonating through both political parties because it is something that hits so close to home for so many Americans right now. Where do we stand on the affordability issue? Do you think things are going to be better or worse in 2026?
Well, and it's also important to remember that this is not a new issue.
Yeah.
I mean, when I ran in 2022, the issue that we talked about, it's about creating pathways for work, wages, wealth, right? That's essentially affordability, right? It's making sure that people can find good jobs, that can pay them fair wages, and people have a chance to own more than they owe. That's essentially all people are asking for. And so even if you look at the policies that we have laid out and the things that we are, really prioritizing for this year, it's things like going after price manipulation, where you have large corporations when people walk into grocery stores and their data is being used against them to adjust prices. That we're going after things like housing, where I am probably one of the most bullish governors in this country on increasing housing inventory, because if you increase inventory, you're going to, by in essence, help to drop costs. That we are focusing on things like energy, where I want to have more energy options. I want to invest in nuclear and solar and additional nuclear options, where I believe in an all-of-the-above approach when it comes to energy, because that will help to drive down cost. And so I do think this is an issue now, but also I don't think this is a new issue for many people in our community.
It's not a new issue, and let's be honest, this came from the huge increase in inflation that we saw post-COVID or during COVID and then post-COVID.
Absolutely.
Started in the Biden administration. It was really strong, and that inflation has tamped down, but prices haven't come down. And so Americans are still feeling this pinch.
But they are, and I think what we're also seeing is you have that combination of inflation and now rising unemployment. So you're having those stagflation pressures.
The wages are rising at least, finally.
We're finally watching wages rise, but we're not watching wages rise to the same extent as prices. Right, and that's the thing I think people feel.
Their real wages have been rising.
Correct, but
that means that it's faster than inflation, just by definition.
Than the old inflation.
Than the old inflation. But I think the challenge also becomes this: is that if we're watching unemployment also rise, you can raise wages. And for people who have work, that's great. But we're watching more and more people who now no longer have work, or at least a steady type of
Fed. And then most recently said the risk of a real weakness in the labor market has subsided, and we're still basically at full employment.
We are
4.5, 4.6.
About that. That's exactly right. And honestly, listen, if you look at the state of Maryland, when I was first inaugurated as governor, we were ranked 43rd in the country in unemployment. We have taken a greater hit of federal employees being fired than anyone else. I mean, we've now had over 25,000 federal employees fired who are Marylanders, just in Maryland alone, more than any other state in this country. But because we've seen private sector employment kick up, and because we've been really creative about ways to support our federal workers, we've actually had an unemployment rate that's still significantly lower than national average.
Look, this is an issue that both political parties are trying to capitalize on. They say the word affordability, they say the words trying to make it easier for Americans, but they both have pretty different ideas, at least if you're looking at the national level of these politicians who are talking about how to bring some of those ideas down. Here in New York City, Zohran Mamdani has made a lot of headlines this week talking about how he thinks the wealthiest individuals and the biggest corporations are going to have to understand that their relationship with the city is going to have to change, that they will be paying more to offer more services to those who are at the bottom end of that. I don't think that's necessarily the same school of thought that you come at with some of these issues.
Yeah, I mean, I just introduced my most recent budget, last week, and for the fourth year in a row, I did something that no one in Washington can do, which is actually present a balanced budget.
You have to.
Yeah, no, it's fair, but we present a balanced budget that does not raise taxes or fees on the people of the state of Maryland, that still keeps a very healthy 8% within our rainy day fund, that actually significantly cuts the structural deficit that Maryland had, that I inherited when I first became the governor. And if you look at what we did last year, we actually did tax reforms, but the tax reforms we did was actually giving the middle class a tax cut, military veterans a tax cut. And we asked those who were doing well to invest a little bit more. But when I'm talking about a little bit more, for a person who's making over $750,000 a year, their increase was about $1,400. And so we think that was a smart way of being able to say we're going to make investments in our public schools, we're going to make investments in law enforcement, and we've seen the results of those types of investments already.
Wes, do you wish Democrats had listened when these Trump accounts were proposed? Because that was proposed in the Biden administration. They had this idea to do it, and why do you think that went nowhere? And why isn't it getting more bipartisan praise for the potential to have every child participating in what we do so well here in this country, and that's create wealth and capitalism?
The truth is that baby bonds and these type of structures are things that I have advocated for years. I think it's one of the more effective things that you can do to actually impact the issue of childhood poverty, which is the reason why I ran for governor in the first place.
But then you get some billionaires that step up and match things, and maybe they're not all, headed, straight to hell when they die. Maybe
Well,
some of them are.
Yeah, well, no, and listen, and I believe in public-private partnerships. If you look at the work that we're doing in Maryland, we actually have, the most aggressive push towards ending child poverty through our ENOUGH Act. And ENOUGH is actually an acronym that stands for Engaging Neighborhoods, Organizations, Unions, Governments, and Households.
Wow.
Where it's actually, it is pretty good, but it's actually focusing on how do we come up with a public-private type of partnership to be able to use data to understand what were the areas in our communities, urban, rural, and suburban, that have been most inflicted by this issue of concentrated and generational childhood poverty. That's the kind of smart initiative that I think can work, but I do think that these accounts are something that can actually work, and people should be honest about that.
Like, what are you, moderate? I'm just trying to figure out with your party where you come down. Do you want more government? Do you think that's where the solutions are? You think that less government, the private sector is where it is? Are you ever watching some of your co-Democrats, whatever that is, they're called, Chris Murphy, someone like that? You ever watching them where you go, I don't know, there's someone in the squad where you're just like, you're at a loss for words on how to react to where the geographic center of that party is right now?
Well, it's funny, Joe, because again, I had never run for office for my life.
I remember.
When I ran for governor.
It doesn't mean you weren't on our show.
It's true.
Yeah.
I was on for years.
For 15 years you've been coming.
When I was running Robin.
Long before Robin.
Correct.
Yeah,
That's exactly right.
Yeah.
But I remember people were asking me. They'd say like, so where are you? And they're like,
I ask you again because I'm still.
Yeah.
Because I want to hear. I'm hopeful.
Yeah.
I'm hopeful you're going to give me an answer that I would like.
So you know where I am. So like for example, when people said, well, we're going to deal with the issue of violence, and I said, well, are you pro-police or are you pro-community? And I said, I'm not choosing. And so what we've done in Maryland, I've made the largest investments in law enforcement and local law enforcement in our state's history.
Right.
But you know what I've also done? Made investments in community groups and community violence intervention groups. And I've worked with both the mayor, the state's attorney, and the public defender.
Right.
That we've invested in technology and said if someone commits a violent crime, particularly with a firearm, I want them in handcuffs in 24 hours. And we've also invested and said making sure that Maryland is one of the only states that actually invests in the U.S. attorney out of balance sheet. And what have been the results? Maryland has had the fastest drop in violent crime anywhere in the United States of America over the past 2 years. Violent crime is down nearly 50% since I put my hand on the Bible and was inaugurated.
Because you could stake out a whole new territory. In the
Yeah, I don't do the are you this or are you that. I'm like, what makes sense?
Help
What
us
does the data
pigeonhole.
show?
Help us pigeonhole.
Please. Your part, you can. I just am thinking about. Let's talk. I can help you. I can just give you some friendly advice on how to approach it. Because, I think the country's looking for. There will be a post-Trump United States, obviously.
Yeah.
And I just don't think it's going to be quite as polarized as it is. But it's hard to find a candidate that appeals to anyone on both. It's like there's what is it?
The Venn diagram.
The Venn diagram is like this right now.
Yeah.
It's nice to find some.
And it could be.
Right, it doesn't have to be. But honestly, I think that's why I love being a governor. Because as a governor, you don't get a chance to just, rail. I don't,
That's all they do.
Well, and that's the thing, as a governor, my job is not just to push back, right? My job is to push forward.
Right.
And my job is to show what an alternative
Right.
actually look like. And so when we say things like, I believe in economic growth and economic development, if you look at the state of Maryland, just in these past months, we've seen how AstraZeneca has made the largest private sector investment in the history of the state of Maryland. It's going to support about 2,600 jobs. Now, you've seen how Samsung Biologics is making their first investment in the United States, and where are they making it? In the state of Maryland.
Are these all things that you have done to
Oh,
meet
absolutely.
CEOs, basically one-on-one to see
I
them
have
come
been
here?
very clear. When I go to other cities, I'm bringing 3 jobs back. I'm bringing 3 businesses back with me. I am very, very aggressive and very competitive, and people know that we believe in economic growth, particularly when we're trying to diversify our economy off of Washington, D.C. But I can say that I'm very pro-business. But you know what I also did? I made sure we raised the minimum wage. I made sure that we're protecting our workers. We did procurement reform to actually support more minority-owned businesses and women-owned businesses and veteran-owned businesses. And we also did things like regulatory and permitting reform and making it easier for businesses to grow. So I guess, so the answer is, where do you fall? Is I just like getting things done, and I don't like falling into the ideological boxes.
Governor Moore, thank you.
Thank
I have
you.
the feeling we'll see you again soon, Wes.
Yes, we will.
I could have said, if you were a tree, what kind of tree would you be? That was a famous Barbara Walters question. So I just said, what are? I want to be like an oak or something like that.
All firm.
Steady.
You're right.
Yeah.
But I don't know if that's what I want to be. That's who I am. Coming up. Yeah. Coming up, Verizon jumping on quarterly results. We're going to bring you the numbers after the break. The fourth quarter results from Verizon just out. Stocks actually up. Earnings of $1. Of course, it's been a tough go of late. $1.09 a share. Beat estimates of $1.05. Revenue was $36.4 billion, also topped expectations. The company reported more than 1 million total net adds across mobility and broadband, the highest quarterly net adds since 2019. As for full year guidance, Verizon sees earnings in a range of 490 to 495, and that's above where the street is at 475, and hence up about 3.5%.
All right, it is official. The breaking news that we've all been waiting for is now out on Truth Social. President Trump saying that he has picked Kevin Warsh as his choice for the next chairman of the FOMC, next chairman of the Fed. We will continue to get some of these numbers up. I have some of this information up. It is literally just hitting. But this is what we've been talking about since last night, really. The news was first out, kind of been reported in several different outlets that President Trump had honed in on his choice. He said that
have
himself.
you seen the actual Truth
No, I
Social?
haven't.
I got it, because
Okay. Oh, here it
he's
is.
really got a lot that he's saying here. We should probably go.
Yeah.
Is that all we're going to
Well,
say?
go ahead and read
Yeah,
what
the
you've got.
federal- Kevin currently serves as the Shepherd Family Distinguished Visiting Fellow in Economics at the Hoover Institution, lecturer at Stanford Graduate School of Business. He's a partner of Stan Druckenmiller at Duquesne Family Office, LLC. He received an AB from Stanford. Guess couldn't get in anywhere else. And a JD, kidding, from Harvard Law. Also, he has conducted extensive research in the field of economics and finance, issued an independent report to the Bank of England proposing reforms and conduct of monetary policy in the UK. Wow, the president went wild here with all this. Parliament adopted the report's recommendations. He became the youngest Fed governor ever at 35, and is a member of the Board of Governors of the Federal Reserve from 2006 until 2011 as the federal representative to the Group of 20, G20 as the board's emissary to the emerging and advanced economies in Asia. This is really long. In addition, he was administrative governor, managing and overseeing the board's operations, personnel, and financial performance. And prior to this appointment to the Fed, from 2000 to 2002 to 2006, he served as special assistant to the president for economic policy and executive secretary of the White House National Economic Council. Previously, Kevin was a member of Mergers and Acquisitions Department at Morgan Stanley in New York, and I think did Bonson mention that he knew him at Morgan Stanley? I think that's
Is that what he
said.
said?
Yeah. Serving as vice president and as an executive director. I've known, and here's this is the last and maybe most salient thing here. I have known Kevin for a long period of time. I have no doubt that he will go down as one of the great Fed chairmen, maybe the best. On top of everything else, he is central casting, and he will never.
Yeah, I should say that.
Yeah, and he will never let you down. Congratulations, Kevin, President Donald Trump. He's a married guy, but I can just tell you one funny anecdote. I don't think he cared if I told you. I was at lunch with him at Michael's, and a very attractive woman came over after he had gone to the bathroom and said, "Would you give that gentleman my card?" And I'm like,
Are you serious?
"Yes." And he's all dapper and
Say
decked out.
no.
I don't know what I said at that point.
Go away.
What I said was, I go, "What? I'm sitting right here. I'm sitting right here. What am I?" And I guess I was chopped liver. Let's get let's get to our senior economics reporter, Steve Leisman. That never happened to me, Steve. Never happened in college. Never happened no one ever came up and gave me a card.
Yes, Joe. Well, the president, as you just said, announcing moments ago that former Fed Governor Kevin Warsh will be his pick for nominee. That concludes a very months-long process. I believe it began back in the summertime. There's a picture of Kevin Warsh. He was, as you said, at Duquesne Family Office partner going back to 2011, working with famed investor Stanley Druckenmiller, governor from 2006 to 2011, and a special assistant to George Bush in 2002 and 2008. He's been a sharp critic, as you know, Joe, of the Fed, and Powell blames them for the pandemic inflation. There you go. And it says the balance sheet can be, quote, reduced significantly. That's one of the concerns out there in the market. But he has said do that over time, and it would allow for rates to be reduced further. He has praised the pro-growth policies of championed by President Trump and said the Fed should abandon the dogma that growth creates inflation. I'm not sure the Fed has that dogma, but he says the Fed should abandon it. He supported the initial QE purchases of the Fed in the great financial crisis. Then he broke with Bernanke over subsequent QE purchases, in part because of his concern over inflation. That inflation didn't appear, and he's been criticized for that. His concern over inflation, one of the reasons why people think he's somewhat hawkish. He further argued that QE encouraged Congress to spend, leading to massive deficits out there. He thinks the Fed responsible for that. Now, on Fed independence, Warsh told us in July, quote, "I've strongly believed for 20 years, and history tells us, that independent conduct of monetary policy is essential." But Warsh has said repeatedly the Fed will secure that independence by reducing its footprint in the economy, balance sheet, and its political profile. That's what makes some on Wall Street a little bit wary that Warsh will be less likely to come to the market's rescue in a crisis, or if it does, that he will withdraw the support far more quickly than it has in the past. It's kind of old school thinking. We're going to talk to Raphael Bosca, the Fed president, about this and other issues. But Joe, it's kind of like an old school idea of central bank going back to Bagehot in the 19th century, that the Fed should be the provider of liquidity, a banker of last resort, but not go further than that.
You know, over the years, we've seen so many op-eds from Kevin Warsh in the Journal arguing different points, and I think he. Maybe sometimes great minds think alike. I know he and Stan Druckenmiller obviously discuss a lot of these issues, and he used the word the words regime change in a way that it was hard to really understand exactly what he mean. But if you talk about regime change at the Fed, there's a lot of things that you have a problem with, other than just who the current Fed chair is. It's sort of a systemic issue that I think he has about transparency as well. Every waking thought coming from the Fed and dot plots and all those things. I think he'd like to change that a little bit too, Steve, right?
I think that's right. Some of the things that Warsh has said make a lot of sense, and some people puzzle over some of these things, I have to say. When I talk to other people who are, I guess, maybe part of the current regime, they're a little puzzled by some of the comments that Warsh makes, and there's some questions about exactly what he'll do. I mean, what he has is this notion, and this is out there as a conservative critique, I guess, right now. Maybe it's more from the Trump side than it's the conservative side, that if growth is high, that the Fed raises rates. That's not actually accurate. The Fed raises rates when it looks at growth as relative to potential and says there's a risk there of inflation, but it's really hard to find a situation where the Fed has really cut off growth too dramatically by raising rates in the face of strong growth that wasn't accompanied by inflation.
We think about that every single time it's the good news, bad news. We always talk about it. Something comes out, it's either a good jobs number or a hot GDP number or something. It doesn't have to be inflation, and we'll say, the market's down because now they think the future rate cuts are in jeopardy because the economy's running hot. That's the whole nature of what
weird thing, Joe.
But we think about that all the time, and maybe it's not true.
Absolutely right.
And we
absolutely right.
Why should we always think, we need to slow the economy down? If there's productivity and there's no inflation, it's like, let it ride, baby. And actually, Besson has said they want someone like that. The president has innovated someone like Greenspan back in the 90s.
What about a market melt-up? That's the...
Wait, Joe, what is the actual...
That's the same thing.
What were the actual instances of that? And hasn't the conservative critique of the Fed been that the Fed is too easy? That has been the running critique of the Federal Reserve for decades. And when I think back on the situations that you were talking about, you're right. The market does get concerned about that, but the real actions of the Fed, as at least critiqued from the right, have been that the Fed is too easy. Think about, it raised rates in 99. Was that wrong? That was, and he let them ride in 96. Go back through the decades, Joe, and it's hard to find a case where the Fed said, well, because of high growth, we're raising rates. It does so when inflation ticks up.
Steve, let me ask you this. Because Kevin Warsh has been so critical of the Fed for so long, I know there are some people inside the Federal Reserve right now who are not huge fans. What's the relationship going to be like with him coming in? And I ask that specifically because the chairman of the Fed is not necessarily handed a mandate to be able to determine how the FOMC will vote on any given day. Will he be able to come in and build a consensus to say, here's what I think, and that's why I'm going to convince the rest of you that this is what we're doing?
You know, Becky, what you're just pointed to is essentially the Federal Reserve Chair's job, right? Congress creates this Federal Reserve that has representatives from districts all through the country. And I'll get to the staff in a second. That's a separate order because Warsh has criticized staff, he's criticized the PhD, he's criticized the elite running policy, and he also has said that policy has been favoring the wealthy rather than people. And I think rightly so when it comes to criticizing, by the way, the Fed's actions during the pandemic. But
Right.
he's going to have to put a consensus together. And by the way, that's one of the things that, at least in our Fed survey, is something that makes people a little less concerned about whoever this chair is going to be, is that the committee is still there. He still needs the committee. He has to work with them. Now, the Fed chair has a lot of sway over the committee, especially the Board of Governors typically. But there's going to be people like, you think about the tradition at Kansas City, which has been, leaning against lower rates for a very long time, back through many presidents. We have Esther George on all the time, Tom Honig, and now Alberto Musalem, who's in there, has been somewhat hawkish. Sorry, that's St. Louis. Jeff Schmidt from Kansas City has dissented several times. So Fed Chair Becky's going to have to put the together. He's going to have to work with the staff. But you can imagine, you're right. There are people who disagree with Warsh's ideas, especially about QE, and they think that Warsh was wrong essentially in the wake of the great financial crisis about his concern about inflation when it came to
Steve,
QE.
don't we need, with as much hand-wringing and pearl-clutching as there was from Fed watchers about the independence of the Fed, don't we at least need to give Trump some credit that it has not, at least this is an indication that he's not putting in a rubber stamp for lower rates? If he had picked Hassett, that's the first thing that would have been displayed across every newspaper in the land, that the independence of the Fed is gone because he put one of his cronies in. So can we at least,
Yep.
I like
I'm
your,
not
I like
singling
your
you
quoting
out
of- I like your-
specifically, but can't we just say for Fed watchers that had hair and that was on fire, that the worst did not come to pass?
Were you making an anti-baldite comment there, Joe? That's okay. I'll let that one go.
It was not anti-baldite. I'm not an anti-baldite because I'm accused of it a
I think
lot.
you
and
are.
I feel
I think you are, but more-
I feel for follically challenged individuals. I feel your pain.
I'm not challenged, Joe. I'm happy and proud about it. Okay, it's maybe my.
I've asked you
my
to
most,
shave it completely, so you'd look like a
It's
total
my
badass.
most redeeming feature, and I'm sure our producers don't want us talking about this because I will answer your question. I like your Churchill analogy, and I do need to point out that
Oh,
it
you did.
was sort of market resistance and Wall Street resistance
Yep.
to Hassett
I agree.
that caused the president to change his mind. So
Trial balloons.
yeah,
Trial
I
balloons
don't-
were not good.
Nobody.
The
Look,
balloons were
let me
not
give
good.
the president. Let me give the president and Treasury credit in the following way. This was a very public and transparent process. We were able to have several scoops on what was going on. We're not the only ones. We understood what was going on. These things were out there, and the president got a view of what was happening. I think perhaps the criminal investigation of Powell played a role in some of this. But in terms of finding somebody who I think the market can count on to be independent, I don't think that Kevin Warsh is going to preside over runaway inflation in this economy. And I think that there is room for the Federal Reserve to be tighter with its policy. I think the Federal Reserve, and I think Powell has acknowledged this, was wrong to hang on to QE as long as it did in the wake of the pandemic. I think that was a problem. I don't think the rate thing is more of a debatable issue right there. So I don't think that we have abiding concern right now with Kevin Warsh being the nominee about independence of the Federal Reserve.
Great. He's got great hair. Not that Jay Powell has pretty darn good hair. Well, he's but problem. You have good hair.
Steve, you're amazing and we love you. You're an incredible reporter and you're hot.
He's very, very hot. But I
People
have
say I
asked
shouldn't
you,
wear a hat because it covers up my most important feature.
get rid of this, and you will, I'm telling you, you will be a babe magnet. Get rid of that. Not that you
I'm only on TV because I have to be the reporter. Otherwise, I'm better on radio, I'm sure.
checking the futures. Thank you, Steve Lee.
Thank you, Steve. You're amazing.
Anti all night. You remember that? That was a good. They went to meetings. George did. Yeah, just stands there. Can't stand you. Checking the futures this morning, you can see that they have they've improved maybe just a little bit from where they were. I think that was the knee-jerk reaction to not getting a more dovish picture. But there's a lot of things obviously going on in the world right now. It's hard to ever say what on any given day.
That's pretty massive improvement.
Yeah, it
we were
has
down
gotten a lot better.
330 plus points
It's
just an
gotten
hour
better.
ago.
And
And by the way, the 2-year yield has now moved lower. It was higher.
10 years behaved. Take a quick look at the dollar, then we'll get to Dom Chu, who has a look at this morning.
I just want to see gold real quickly too.
Pre-market movers, yeah, gold was actually
Down by more than 4% earlier.
Yep, that's, I mean, silver. How do you explain that, Dom? Silver. I've given up.
I think a lot of people have, especially with the kind of parabolic moves that we've seen just over the course of the past maybe week and a half in silver especially. But, you know, with that kind of a move, maybe a 4% pullback isn't out of the realm of reason, I guess, in that kind of a mode. But to your point about the kind of multiple catalysts, Joe, Becky, right, that are kind of moving things around, the Fed pick Warsh is certainly one of them. We saw movements there based upon the social media post from the president. But we're going to take you through some of the other reasons why markets are gyrating around the way that they are right now, predominantly to the downside for the most part in some of those tech trades. But it has to do with a lot of these individual movers that are setting the tone for what's happening. So we're going to start with shares of SanDisk, which are actually bucking the trend right now, soaring by about 23% after its second quarter results blew past Wall Street expectations. The data storage company said despite pulling in over $3 billion in revenue during the quarter, the company was still unable to meet demand for all of its products, and it expects demand will continue to outpace supply throughout the course of the year. So that bullish commentary and the results helping to pump SanDisk up 22%. Now, Visa shares right now are dropping by just about 1.25%, despite a fiscal first quarter beat. The company said payments surged 8% from a year ago amid strong holiday spending. Visa and its competitors have been under pressure after President Trump called in a 1-year 10% cap on credit card interest rates. Those shares right now just down about 4.5% over the course of a 1-year period. And then shares of Deckers Outdoor gaining just about maybe 13% as the maker of shoe brands like Uggs, Hoka, and Teva beat estimates. The company also issued fiscal 2026 guidance above expectations. Net sales for the Hoka brand, by the way, jumped 10% during the quarter to over $600 million. It's become a real cornerstone for those brands. Now, with regard to the big tech trade, software, of course, big tech, a big part of the market story in just the last couple of days. Microsoft reported that surge in spending, maybe perhaps punished for it. Investors also wanted more from the cloud business there, Azure. That stock is flat, maybe-ish this morning, just about 0.5% gain, but it was 10% down yesterday since that Wednesday report. Meta spent on CapEx and was actually rewarded for it. Those shares are maybe right now down about 1.75%, but 8% up since its report. And the software troubles go beyond Microsoft this week, though. The IGV, which is one of the big ETFs that tracks that sector, is down roughly 13% just the past couple of weeks, and just through today, down about 6.5% from the end of probably the 28th there as well. So keep an eye on the IGV software, cloud computing overall, guys. It's become a big part of that market narrative, Becky. I'll send things back over to you guys, Joe.
All right, Tom. Thank you.
You got it.
No.
When we come back, American Express just out with earnings. We've got some insight on the consumer, and we will cover that for you next. You can see the stock right now is off by about 0.8%. 355.55 is the last trade. We'll tell you all about the earnings and what the CFO is saying. We'll be right back. All right, welcome back, everybody. Results out from American Express. Earnings came in at $3.53 a share. That missed estimates just by a penny. Revenue came in at $18.98 billion, and that did beat expectations. Card member spending in the fourth quarter was up by 9%. As for the guidance, the company says it sees full-year revenue growth of 9 to 10%. The street was looking for 9%. The midpoint of the full-year earnings guidance was above what Wall Street was expecting, too. They're saying that they see $17.30 to $17.90. The consensus was only at $17.41. And I spoke with the CFO, Christoph Lakayak, about this. That same story is continuing that we've seen for many quarters now, just where high-end consumers are really doing pretty well. That tale of two cities that we've talked about, or tale of two economies that we've talked about, high-end is doing well, and American Express tends to skew to the high end. I asked him about that. He said, yeah, since we over-index on premium cards, the front of the cabin is full, luxury spending is up. Clearly, we're riding that wave of a strong consumer on the high end of things. Run through a couple of these numbers. Billing up by 8%. Travel and entertainment was strong. Retail was strong. Luxury spending was up by 15%. Restaurant spend was up by 9%. International spend was up by 12%. And their travel agency, this is an interesting AI aspect of things right here. They said typically the fourth quarter is not as strong for their travel agency, but bookings were up 30% in the fourth quarter. He attributed that to a new travel app that was introduced in September. He said the old experience wasn't great, the new experience is much better, but they are using AI to make offers and things, and that is making an impact. The average age of a new Platinum card member is now 33 years old. They have not disclosed these numbers in the past. They are now, just to kind of show off how young they are. They wouldn't give me a comparison age of what it was before, but for a new Platinum card member, 33 years old. For a new Gold card member, just 29 years old. And those have been the two things that American Express has really played so well. The idea that they are that they are giving their cards to people who have more money, the high-end consumers have done better, and they are also getting younger consumers, and that's pretty important too, just in terms of the spend and the life of the consumer that you will see. Stock right now is down by about 0.7% over the last year, though. It's up by 11.6%, and they have pointed to what they have done just over the last few years in revenue and earnings per share. Revenue from fiscal year 2022 was $52.9 billion. Now it's $72.2 billion. So you've seen some huge growth there. Earnings per share have gone from $9.85 over that period of time to $15.38. And that's a CAGR of 16%. So they are a company that has done very well. And if you look at the stock's performance over the last few years, you can see that.
Before we head to break, though, here's a look at precious metals. We were talking about that after President Trump announced Kevin Warsh as his pick to be the next Fed chair. You can see gold down 3%, silver 9% sounds like a lot, but I can't even. I have no comment. $103 for an ounce of silver, ridiculous. I'm looking through all my old. I'm looking through all my old. The things we collect the change to bring, and you usually give to try and get paper money. I'm looking for quarters, real ones. Much more on wars throughout the morning. Squawk Box will be right back.
tax hikes on the rich gathering steam in blue states. Robert Frank joins us right now with more. What's happening?
Good morning, Becky. Good to see you. Well, from California and Washington State to Michigan, Virginia, and Rhode Island, a growing number of states are looking to tax the wealthy. California billionaires tax, of course, has gotten the most attention, so that would be the nation's first state tax on wealth rather than income. Yet Washington State is aiming to get its first statewide income tax after a capital gains tax in Seattle passed back in 2022. So what they're proposing is a 9.9% tax rate on those making $1 million or more. Virginia, with that new Democratic governor, they're considering bills to hike the top rate from 5.75 to 10%, so a big jump there. That would just be on those making more than $1 million. That comes as many of Virginia's neighbors, meanwhile, are cutting or eliminating their state income taxes. Then in Michigan, you've got a proposed Invest in Michigan Kids bill that would raise revenue for education with a new rate of 9.25% on single filers making more than $500K or joint making more than $1 million. Then you've got Rhode Island, which last year passed that special tax on expensive vacation homes that was called the Taylor Swift tax. They're now looking to raise the top rate from 5.9 to 8.9%. Some say these increases will accelerate wealth migration from blue to red states. We've already seen a lot of that. But proponents point to Massachusetts' Fair Share Amendment that added 4% to those making more than $1 million. It passed in 2022. It has raised $5.7 billion in its first 2 years. That was about twice the original estimate. So a lot of people pointing to that, saying, see, this is proof they don't leave. Now, for a full breakdown on what states are doing to tax the wealthy and what it could mean for wealth migration, you can sign up for the Inside Wealth newsletter at cbc.com/insidewealth.
Okay, here's my question. The Massachusetts law is interesting. People who are making $1 million are far less likely to leave than billionaires, because if you've got $1 million or $2 million job, you're not going anywhere. Leave,
100%.
lose your job. I wonder what the impact is on Washington State after what they passed, because I believe both Bill Gates and Jeff Bezos. Jeff Bezos definitely left.
Definitely left.
I don't know about Bill Gates,
I-
but it wouldn't surprise me if he has redomiciled too. What does just losing those two people mean for Washington State, especially for an estate tax?
Yeah,
Or for
Washington-
like a death tax?
I mean, there is a big tech community, probably a lot of seven-figure earners there, and I think the big question there is, whether it survives a constitutional challenge, because they've never had a state income tax, and everyone warned, look, if you get this Seattle tax and the court approves it in the state, they're going to go with an income tax, and proponents will say, no, we're not going to do that, and of course we're seeing that. Now that tech is relocating everywhere, I mean, you've got a big tech community in Texas, you've got tech communities in Tennessee and Florida,
Miami.
in Miami. So I think that it may not affect the existing tech base in Seattle, but if you're starting a company now and you're figuring out where to go, where are you going to go? You're probably not going to go to Washington State.
again,
You're probably not going to go to
Those
California.
highest earners, those wealthiest people, if they move and leave a state, it can impact the state's budget.
You're right, and we saw that
It
with
happened with
David
David Tepper in
in
Jersey.
New Jersey.
One guy leaves and it affects the state's
And
budget.
the proponents say, well, you focus on a couple of high-profile investors.
Good reason.
And whereas in New York, as Mamdani rightly told Andrew Ross Sorkin, the number of millionaires in New York has continued to grow, but it's far
take care of
underpaced the
that.
rest of the country.
No,
Millionaire growth in the rest of the country is
Campaign
much
flag.
faster.
That's interesting.
Put a stop
Much
to it.
faster. So yes, it's grown,
I
but
think
not as fast as the rest of the
I'm
country.
thinking Texas, as in Florida.
You think of going to Texas?
Thinking Texas, if I ever had to. I mean,
Wait,
Florida's
did
got
you
no.
change your mind about Florida because you spent some time there?
Well, let's see, it's 40 degrees in the morning, and you know what my real problem with Florida is?
Yeah.
The traffic lights.
Traffic is bad.
The traffic lights. I was like, they last 5 minutes. They last 5 minutes, and then there's another one.
You're going
Forget it.
nowhere.
I'm not going to
Answer
Florida.
my viewer.
I am not going to Florida.
Spend some time
Maybe
in
Georgia. Georgia needs to get rid of the state income.
You've got, if
Florida is off of my list for
Florida's off your list because of the traffic lights?
yeah.
Robert, thank you.
Thank you, guys.
Great to see you.
Coming up, shares of SoFi on the rise. After earnings, Anthony Noto, the CEO, is going to join us. We'll be right back. Starbucks out with new guidance at yesterday's Investor Day. The coffee chain projecting global and U.S. same-store sales growth of at least 3%. This is by fiscal 2028. It also plans to add 400 net new company-owned locations in the U.S. in the next 2 years. Andrew sat down with CEO Brian Niccol, asked him what it will take to reach these targets.
Efficiency gains, I think everybody's been talking about. Obviously, we're hard at work on that aspect, right? The scheduling, the labor forecasting, the supply chain elements. But what I also get really excited about is AI is going to allow us to really ramp up our personalization. So in our CRM program, behind the rewards program, AI allows us to create more personalization faster and more targeted to people. It also allows us in like ordering to make it even more frictionless. One of the pilots I'm really excited about is in our drive-through, we think it's important to still have the human-to-human interaction,
Right.
but our partner will no longer have to input the order because the AI system will be listening to the conversation, placing the order into the POS system, so that then our partners can focus on craft, connection, and ultimately getting you your drink.
We're going to check out the stocks. Shares of Starbucks jumped after earnings on Wednesday. However, it gave back those gains, now down about 4% on the week.
All right, fintech company SoFi just out with its fourth quarter results, coming in at 13 cents a share. That compares to the 12 cents the street was expecting. Revenue also beating at $1.01 billion versus the $985 million that the street was looking for. And joining us right now is Anthony Noto. He is SoFi's CEO. Anthony, just tell us a little bit about the quarter. Numbers did come in a little better than had been expected. Why?
Sure, it ended an incredible year for SoFi. In the quarter, we had 37% revenue growth, 35% member growth, and 37% product growth, with really strong margins at 29%, and our EBITDA increased 60% year over year. Overall, we've been driving more than 30% revenue growth each quarter throughout the year, and as we go into 2026, things look incredibly strong and guided the first quarter to 35% year-over-year revenue growth, and the full year at 30%. It really reflects the innovation that we're driving, the number of new products that we're building, as well as the increased awareness through our branding efforts. So all cylinders are hitting very strongly right now, and it's coming out with these results. It's really unprecedented, 37% revenue growth with 29% margins.
Yeah, Anthony, over the last year, your stock has performed remarkably well. It's up by about 55% over the last year. But if you look at it for the year to date, it's down. And there are several reasons for that. The first would be that capital raise that you all did in December, $1.5 billion. People are a little worried about dilution there. Another issue is just you guys have all these new offerings that you mentioned. Cryptocurrency has been under some pressure, and that has weighed on everybody who is making some of those offerings. But why don't we go through those one by one? First of all, the capital raise that you did, what are you doing with the money? What do you say back to any concerns on Wall Street about that?
Sure, it was really an opportunistic capital raise. We saw an opportunity to add to our balance sheet. Many people are looking at it in different lenses, but the way we look at it is it was accretive to our tangible book value. Our tangible book value increased by more than $2 per share to $7 overall, and the capital that we put on the balance sheet gives us great flexibility to either drive faster growth in 2026. If we find something from an M&A perspective that would fortify our competitive position, we could do that. We can also reduce debt and improve our cost of funding. So, accretive to tangible book value is a really great measurement for us to evaluate these capital raises by. There's no specific use, but it gives us a lot of optionality. One of the things that happened in the quarter was we had over 40% loan origination growth, but only 15% actual lending revenue growth, because we've built this business called the loan platform business, where we use our technology and our marketing capabilities and our underwriting capabilities and our balance sheet to produce loans for other people. Now we have so much capital on our balance sheet, we're at like 2x our statutory required leverage ratios. We have an optionality to grow the business in any direction as it relates to lending that we'd like, in addition to doing things like M&A or reducing our cost of debt.
We should point out that the shares are up by about 5.3% this morning on some of this news too. But let's talk about what's been happening with crypto, some of the pressure that have been on those cryptocurrencies, and what that has meant just in terms of how you see things, what that means for the new products that you're offering.
Sure, we used to offer buy, sell, and hold crypto tokens that we had to exit 2 years ago based on guidance from the OCC. With the new administration and new leadership of the OCC in April of 2025, we were given permissibility to operate in crypto, and we've run as fast as we possibly could to get to market. We launched SoFi Pay, which is using Bitcoin to send money internationally. We launched SoFi Buy, Sell, and Hold in December, and then SoFi USD stablecoin. It's very early days, but the reaction from our members in these offerings has been quite positive. We feel like we're just getting started. We're benefiting from two technology super cycles. One is crypto and blockchain, and the second is AI. And it's unique that one company could benefit from both of those. So there's much more horizon for what we'll do from an innovation standpoint. But it's only been about a month since we've entered the two new areas that we're in. And I think the price of crypto has an impact on some companies, but we have very little revenue from it today, so it's not really a direct impact there. I think what you've seen in the sector since the beginning of the year is uncertainty around interest rates, and the naming of a new Fed chair, I think, will start to put some stability under the market as it relates to interest rates. We'll have to see how things transition with the confirmation with the Senate, and then what ultimately the new secretary decides to do.
What do you think of Kevin Warsh being named as the president's nominee to head the Fed?
Yeah, we at SoFi and I personally are huge fans of Kevin. We think it's a great choice, and really look for the leadership change and a new mindset as it relates to the role of the Fed.
And very quickly, Anthony, we've spoken with a lot of the big bank CEOs about what it would mean if the president's proposal to put a 10% cap on credit cards actually went through. It's an issue for you too. What would it mean if that cap went through for 1 year?
Sure. The revenue that we generate from credit card is quite small today. It's almost immaterial relative to the over $1 billion of revenue that we're producing per quarter now, and over $3.5 billion for the year. We have a product called personal loans, and our average loan size for a personal loan is about $30,000, and our average interest rate on personal loans is around 12%. It's about half the average interest rate of a credit card. So the demand that we get for our personal loans is actually people refinancing their credit card into lower cost debt that amortizes down. The credit card industry has a lot of different players, but ultimately you make money in that business because people keep the revolving balances out, and you can charge 25% interest. That is not a good product. That is not getting your money right. Using a SoFi personal loan to cut that rate from 25% to 12% and having it amortized down so you get out of debt is a much better value proposition. So if there is a cap on credit cards, we think the demand for a personal loan will actually go up, and people will use that as a first product as opposed to refinancing the credit card debt in the first place.
Anthony Noto, great to see you this morning. We appreciate your time.
Becky, thank you very much.
Thank you.
So coming up, Atlanta Fed President Raphael Bostic is going to join us to react to today's inflation data. Also, President Trump's announcement that Kevin Warsh is his Fed chair pick. A lot more to talk about. Squawk Box coming right back.
here yet, and another winter storm bearing down on the East Coast. AccuWeather's Bernie Rayno joins us with more right now. Bernie, sock it to us. What's the good, the bad, the ugly here?
The ugly, well, I won't say that's me. But the good is that for New York City, Philadelphia, Washington, D.C., this is wide left, or in your case, Becky, wide right. It's all offshore. Even Boston may not get a whole lot of snow with this. I can see it's off to their east as well. The epicenter is North Carolina. That's where the storm is going to be intensifying off the North Carolina coast. As we head toward later tomorrow night, this will be a bomb cyclone. More on that in a second. But the one thing that we are going to see up and down the eastern seaboard is rough surf, beach erosion, and there's going to be coastal flooding during times of high tide. Saturday into Sunday from the Outer Banks all the way up in eastern Massachusetts, and there could be some coastal damage with this. There's the Bob cyclone when late Saturday afternoon, Saturday night. This occurs when the pressure drops 24 millibars in 24 hours. How about this drop in pressure? Over 60 millibars in 24 hours. With that, damaging winds and heavy precipitation across North Carolina, where we're looking at 10 inches of snow. Charlotte, Raleigh toward Virginia Beach, 3 to 6 inches in Columbia toward Wilmington. We're going to have snow all the way down to Charleston, South Carolina, according to an agent. Boy, be careful in Atlanta late tonight for some snow showers and some slippery travel. And this will be a blizzard, no doubt about it. Tomorrow afternoon, tomorrow night from southeastern Virginia into eastern North Carolina. For the Northeast, for the most part, this is a miss, but you know what's not going to miss? What hasn't missed the Northeast all winter, it seems like cold. That's going to be widespread, teens and 20s. And by the way, look out in Florida. Saturday, Sunday morning and Monday morning. Look at these temperatures below freezing. And Becky, listen, I'm not an economist, but I'll tell you what, this cold's going to have an impact on the citrus crop. No doubt about that. Not only Sunday morning, but Monday morning.
And we're looking at very high tides all along the coast too, because of where the moon is right now.
Yeah,
Keeps
full
on.
moon is Monday, Becky. Yep,
Yeah.
absolutely. It's going to be damage from the Outer Banks to eastern Massachusetts from the coastal impacts. No doubt about it.
Bernie, you called it here. You called it first. What was it, Monday, that you said this storm was
On
coming?
Monday we saw this. Yeah, we saw it on Monday. Hey, listen, the big other thing, Becky, moving forward, no big storms, but I'm here to tell you the cold's not going anywhere from the lakes toward the Northeast right to mid to end of February.
All right, that's enough from you, Bernie. We're done. We'll talk to you later. No more bad news. Bernie Rayno, goodbye. We'll talk to you later.
All right, coming up, U.S. Navy Secretary John Phelan is going to join us on set to talk geopolitics, the rise of AI, and why he's in New York. Meeting with investors. Squawk Boss will be right back. U.S. Navy sent an additional warship to the Middle East as tensions rise with Iran. Joining us now in an exclusive interview, Secretary of the Navy, John Phelan. Mr. Secretary, it is good to see you.
It's good to see you, Joe. Good to see you, Becky. Thank you for having me back.
We definitely want to talk about Iran, and I don't know how much information you can necessarily give us. I just don't think that the president at this point, even though the hangings were stopped, I still don't think he's finished there. I don't know what finally happens. Assets are moving in that direction. I don't know what his options are. We're all just in wait and see mode at this point.
Yeah, look, I think the president's been pretty clear, and I think the president has told Iran that no nuclear, and if they don't really follow that, then I think he's shown you before that he will follow out on his wishes. And at the end of the day, we have the Abraham Lincoln Carrier Strike Group there with 6 destroyers and 3 littoral combat ships. It is the most versatile asset in the United States Navy is a Carrier Strike Group, all weather, cruise missiles, electronic warfare, air capability. So I would suggest Iran settle this soon.
And I don't know what that entails in terms of, violently putting down protests, because we know that's still happening, and it's probably worse than what we know, what actually went on. So I don't know whether agreeing to some concessions for nuclear development is going to satisfy the president in terms of averting additional military action. Yeah?
Yeah, look, those are policy issues, and that's really something that the Secretary of State and the President deal with.
Right.
When the President says, I need assets, that's my job, is to get it to him.
And you're here meeting with investors, and I was thinking about the Navy itself, and thinking about what a Navy means to a country. And I know that that's a priority of yours, to get back to maybe what some of people would say we've lost some of our preeminence. And I think World War II, what's the first thing that you would attack for a country if you wanted to get a leg up? You'd attack, and that's exactly what Japan did at Pearl Harbor. And I think about how inextricably the development of new technology for the Navy, how that plays into our economy, the maritime economy, how quickly we're able to deliver on these unbelievably huge projects that it takes, expensive projects that it takes, but we cannot avoid it any longer.
Yeah, but look, this is really the President's vision, which is to reinvigorate the maritime industrial base. The fact is, to be a superpower, you have to be a sea power. You look at it through history.
There's just no way around it.
No way around. And we are the dominant Navy, and I think what we're doing is we're having our adversaries.
China's not dominant now, John?
I don't think they're more dominant than us, no. But I think they are catching us at an accelerating rate.
Not for lack of trying.
And so I think the President's identified that. We've let our maritime industrial base atrophy. We can't build things as fast anymore or as good. And so part of the Golden Fleet is really 3 things. It's 1, getting ships into our Navy faster and in a more cost-effective manner. 2, is to restore the maritime industrial base, create jobs. And 3, is to change how the Navy does business. We're now open for business, and that's why I was here meeting with investors.
Mr. Secretary, let me just ask, because the Trump administration has looked at a lot of private industry and said, hey, we need to shore up things because of our national defense interests. It happened with rare earth metals earlier this year. All of those rare earths are things that we want to make sure that companies are doing here in the United States. We've lost that for 25 years at this point. But yesterday, all of those stocks that are tied to that collapsed when it looked like the Trump administration was not going to promise a base price for any of these things. It's really complicated because we believe in capitalism. We want that to happen, but capitalism and the way the Chinese have dumped so much money into their industries are why our industries collapsed in some of these areas. How do we compete with a nation state on doing some of these things, but still stick to our capitalist roots And then if you are going to make sure you are guaranteeing some of these things, how do you keep a long-term promise for that so that companies will actually pour their own money into doing these things without feeling like they're going to lose their shirts on?
Yeah, look, I think it's a very big challenge, right? Because China subsidizes a number of industries, including shipbuilding,
Why all of this stuff happens.
et cetera. I think at the end of the day, American ingenuity and capitalism, I think that system is much better than a controlled system. But I think we have to create the appropriate demand signals to entice investors to come in and allow them to earn an appropriate return.
And what are those signals? How do you do it?
So for shipbuilding, for example, right, we are going to invest a significant amount of money in shipyards. And that includes wages, modernization, multi-year contracts for building.
I think that's probably the key, multi-year contracts,
Yes.
to say that the business will be here. If you build it, the business will be here. Can that survive a change in an administration? Because these are deals that you probably need more than 3 years to make sure you're going to make the return on your investment.
Yeah, look, I think the good thing is for the Navy is there's real bipartisan support behind the Navy. And I think people understand we need to do it. I personally think, I've said this many times, we spent the last 10 years teaching people to code. We're going to spend the next 10 teaching them how to use their hands. If you look at the economic model of going to college today and what you get getting a job, it doesn't make sense. Going to a vocational school or technical school, which is something else we're looking at doing, which the president's very supportive of, that you can get a real job and make real money.
And by the way, that's AI safe.
Yes.
You don't have a bot that's going to come in and perform better than you are.
That is correct.
You know, the president was displeased with certain defense contractors all the way to the point of saying, no, you know, cut down on the buybacks and the dividends, because you're so important to national security that you need to be treated differently than a normal private sector company. I'm not sure I totally agree with that, and you say investors need to step up. That would make maybe some investors, which are financing the defense contractors, obviously they're shareholders as well. They, you know, they're entitled to, if they, you know, deserve a dividend, they should get a dividend. If the corporate management thinks buybacks are the way to go, that's what they should do. Have they dropped the ball on building out our infrastructure to supply these weapons? Should they be incurring some of the president's displeasure?
Yeah, I think they should be.
They should be.
Yes, and I think Secretary Hegseth, you know, with the executive order, is really trying to bring them more in line. The fact is, they've invested very, very little capital into their infrastructure, and we've allowed the defense industry to get way too small.
In your old life, you would not have liked hearing this as an investor, right? If you had all your clients in defense stocks, and then, you know, they were going to be subject to more supervision or regulation.
So I think there's two ways to look at it, Joe, right? The president also announced, you know, a very, very large budget increase. So what he's basically saying is, get your act together, otherwise we're not going to allocate those deals to you. So the fact is, the defense stocks
It's almost
are
a carrot and stick thing.
That's correct, and I think that's
a little bit of both.
Yes,
A little
and that's
stick and a
what
little
we're
carrot.
trying to do, and I think these guys have to.
It's another one of the common sense things that's what the president would. I think he told me that in the interview recently. That I am a conservative. Yeah, I do want this. I do it. I am capitalist. I am private sector. But there's times where, I don't know, you're in a different situation, and he would call common sense.
Yeah, I mean, at the end of the day, these are national security assets, and they have got to build them.
Almost like utilities.
They are, and we're behind on every major program. We're behind. They're way over budget, and it's crazy. And I think he's tired of the performance. And we've rewarded bad behavior, and that's kind of what he's saying. I'm not going to reward bad behavior anymore.
Okay, Secretary Fallon, thank you. Good luck today. Thanks.
Thank you.
All right.
When we come back, the CEO of regional bank Valley National will join us right here on set. Earnings, the health of lending, and the commercial real estate business, all topics we will dig into with Ira Robbins. And later, key inflation data. We'll be getting the December Producer Price Index. Those numbers coming at 8:30 a.m. Eastern Time. Squawk Box. We'll be right back.
Valley National Bank Corp reported record fourth quarter earnings, beating expectations with net income rising to $195.4 million as lower deposit costs and loan growth lifted profitability. Join us now, Ira Robbins, Valley National CEO. It's a new year. Is the wind at your back, would you say, at this point?
Absolutely.
Why?
Well, I think it's definitely at Valley's back, and I would say it's just generally positive from a banking industry perspective. Really, there's two variables that I think are driving the positivity in bank stocks today. One is obviously increased GDP, and banks are a good barometer of what's going on from an economic perspective. But one broader trend that we're seeing is really the positive slope of the yield curve, right? And most people focus on the 2 versus 10 spread, and we've seen probably 50 to 70 basis points of positive slope. But for the first time in many, many quarters, we saw a positive slope between the Fed funds and 5-year rate, and that's going to continue to have a real positive impact, and more so on regional banks. You know, money center banks, most of their revenue comes from investment banking, capital markets, where most of the revenue for an organization like Valley and other regional banks comes from its net interest margin. And as that spread continues to widen, there is a tremendous tailwind in bank stocks today.
So GDP, you have fewer loan losses and more loan growth. I guess it's just that simple.
I think it's just loan demand, Joe. I mean, versus a year ago, our loan pipeline is 33% greater than what it was a year ago. Evenly mixed with commercial real estate, C&I activity as well. So we're generally seeing positivity within the U.S. economic environment today.
Did the president call you about who to pick for that, Joe?
I missed out, obviously, so otherwise I wouldn't be here this morning, but definitely.
Yeah, was it you? I don't remember. I don't see you on call sheet probably. Is this a good pick in your view?
He obviously has some experience being in the Fed previously. Look, I think anytime you have someone that's been in the industry driving outcomes, I think that's a real positive. So I think it'll be a benefit for the industry. Obviously, a concern about inflation. When you think about some of his hawkish views previously, I think inflation is a real concern when you think about some of the wealth divide that we've seen in this country and some other activities. So I'm pretty positive with him as a choice.
The administration has made it a priority to try to help people like you. Yeah, haven't they? I mean, smaller banks, regional banks. This is like the lifeblood of smaller communities. You know, you don't necessarily see J.P. Morgan going into a lot of the markets that you serve. What more can they do? What have they done so far?
We talked a little bit last time about deposit reform and what needed to be done there. We thought about insurance overall and how it was too big to fail. Too big to fail really led to too small to succeed across the entire industry. So I think a lot of that emphasis is a real positive. I think there's an understanding that one of the benefits of living in the United States is you have access to capital. If you're a large company, to go to a large bank. If you're a small entrepreneur, you can go to a small bank. And I think that's really what's driven a lot of the growth in this country. And when too much of the regulatory focus has been on providing an ability for the larger banks to succeed, we really miss out on the middle, and we miss out on the small banks.
The Secretary Bessel was either on camera or off talking about how important it was to try to give more aid or just grease the skids for smaller banks and redoing that.
In part because there's been such a huge decline over a decade. I think there were 5,607 regional banks at the end of 2014. It dropped to 3,928 by the end of 2024. Is there going to be more consolidation in your industry, or do you think we are at levels that can be sustained?
I think there's going to be more consolidation, but what happened in previous regulatory environments is there was no de novo banks that were actually started. And these are the banks that are locally serving your individual communities. They're the ones serving the small businesses. They're the ones serving the entrepreneurs. And when we don't have formation of new banks, we really miss out on the entrepreneurial and growth for some of these small
Are you starting to see sprouts like that now?
We're beginning to see de novo banks begin. The OCC has been very proactive in beginning to not just have de novos when it comes to some of the crypto and some of the other fintech banks, but they're doing it for traditional banks as well. And I think that's a real positive when you're beginning to see capital flow to that space.
Is the Fed your friend at this point, or could they be?
I think having
could they be better? They're the friend of the big banks.
I think having
the things that the reforms that Warsh would probably like to bring in that would help banks like yours.
I think we're seeing it already. I think you see it. We're a national bank regulated by the OCC, and I think the OCC has been much more conducive to us really beginning to grow and do things Mickey Bowman, I think, being a former banker, being a small community banker, I think really has an understanding of what is important to us as to how we think about contributing back to the society.
Right.
I can give you one example even about AI, all right? So we have a large auto book within Valley's portfolio. We wanted to start testing for delinquency costs. So we wanted to go out to any auto book that was 0 to 30 days delinquent. We created an AI model to begin to do this. The former regulators said, well, you need that model to be validated for 6 months. Then you need to be looked at for another 6 months. And we can never put it into production. The new regulatory environment, we put that model in place, and we caught 500 of our delinquent clients between 0 and 30 and got a 34% hit rate. That's a real positive for us, but we couldn't have even begun to test something like that under the old regulatory regime. So I think some of the deregulation that you're seeing is going to have a positive impact on us and a positive impact on the broader banking environment.
Robin, thanks. What are you in town for?
To see you.
Oh, that's nice. That's nice.
Yes. Thanks for coming in.
Thank you so much. It's very nice to see you again.
All right, folks, it is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Take a look at what's been happening. The markets are under some pressure today. Dow futures off by 234, S&P futures down by 31, the NASDAQ down by 145. President Trump posting on Truth Social earlier this morning that he has picked Kevin Warsh to be the next Fed chairman. Steve Leisman joins us right now with more on that. Steve, good morning again.
Good morning, Becky. Yeah, here's the tale of the tape. We reported yesterday that Kevin Warsh had actually been in the White House meeting with the president and also the Treasury Secretary. We were trying to confirm whether or not that meant he was the pick. But then the president later on that evening, I believe at the premiere of the Melania documentary, said, I'm going to pick my person tomorrow morning. That led to a lot of speculation, and ultimately what that meant is that the president this morning, as you know, coming out with True Social and saying he will be nominating Kevin Warsh as the Fed chair to replace Fed Chair Powell. He says, I'm pleased to announce that I'm nominating Kevin Warsh to be, in all caps, the chairman of the board of the governors of the Federal Reserve System. I guess it's not official until he formally nominates him. He says Kevin Lee currently serves as the Shepard Family Distinguished Visiting Fellow in Economics at the Hoover Institution and lecturer at the Stanford Graduate School of Business. He's a partner of Stanley Druckenmiller at the Duquesne Family Office, LLC. I think what the tale of this tape actually is, you remember Kevin Hassett was in the lead, then Rick Reeder, and now Kevin Warsh. This process goes back at least to the fall. There were 11 candidates interviewed with the Treasury. 4 were passed on to the White House, all interviewed by the president. And he ended up where he is right now, at a person who I believe is viewed as among the more hawkish of the candidates and more hawkish than Fed Chair Powell. At the same time, he's a tremendous supporter of the president's policies. And I think where we're at right now, Becky, is maybe on the doorstep of an experiment here, because the conservative critique of the Fed is that the Fed should be setting policy in line with what they believe President Trump's policies will do. And they believe that will increase supply, allow the economy to run hotter, and allow the Fed to run rates at a lower federal funds rate. I think there are people on the Fed, in fact, I know there's people on the Fed who agree with that general forecast if it comes true. I think the difference is a matter of timing, that they don't want to cut those rates preemptively. They want to see the lower inflation, see the higher productivity. So it may be that Fed Chair Warsh comes in and cuts rates right away, and does so in the face of what might still be 3% inflation. And that would be an experiment to see if this idea of a Trump-led supply side boom is going to happen, and whether the Fed ought to cut rates preemptively ahead of that.
It's not like Warsh is coming in tomorrow. You've got 6 months, basically, to work this out, to see what the data shows. Everybody on Wall Street has said that they are anticipating cuts probably won't resume till the second half of the year, or till June, let's say, because that would be his first meeting, right? Well, if everything goes smoothly and Warsh is confirmed on time, how's there through May?
That's correct. And I'm looking right now, Becky, at the Fed Fund futures, and it's interesting. maybe a little bit more of a probability of a June hike. It had been at 60. Now it's at 66. I don't know if they have those percentages in the back. The October one is now 60. It had been below 50 and December. So what's interesting here is I'm really confirming what you just said, Becky, which is that the market is not shifting dramatically in terms of its anticipation. And I don't know if you remember, we've talked about this a lot, that I've been, a lot of data, but I've been surprised that in the anticipation of a Trump-nominated Fed chair, the market has not believed for a very long time that the Fed chair was going to cut rates much below 3%. I don't know, Becky, if that sets the president up for a disappointment in his Fed chair, or if the Fed chair ends up, remember, the president wants a funds rate of 1%, and we believe he means nominal, which if you take a 2% target inflation rate, it means the president wants a negative real rate, which is the kind of rate you would have if we were in a recession or some kind of financial crisis. So the market right now is banking on a 3% neutral kind of rate, especially with all the stuff that's coming down the pike. If there's going to be a surge in investment, if there's going to be stronger growth, then I think the Fed chair is going to probably try to limit the extent to which the Fed would lower rates.
Okay, Steve, thank you. Got a lot of time, but we'll keep talking about
Pleasure.
this. We'll see you a little later this hour. By the way, Steve is going to be joining us with Atlanta Fed President Raphael Bostic, so a lot of news to discuss with him this morning.
Let's get to Dom Chu. Once again, let's look at this morning's pre-market movers. Hey, Dom.
All right, so Joe, Becky, let's go from the macro to the micro. More earnings movers to check in on this morning as well. We'll start with Chevron up right now. First with shares just around maybe up 1/3 of 1%. You can see there. And Exxon down about 1.5%. Chevron is the only oil producer currently operating in Venezuela and said it could ramp up production in the country by over 50% in the next 18 to 24 months. Meanwhile, ExxonMobil is posting a fourth quarter beat, but shares are still falling. By the way, we'll have the CEO, Darren Woods, on up next to unpack those results, so we'll have more on that story shortly. Verizon shares also rising just about 1 3/4% on an earnings beat and upbeat forecast for its annual profits. Verizon's end-of-year promos during the peak holiday season resonated with some of those customers, helping it add over 600,000 bill-paying subscribers, postpaid subscribers during the quarter. That's well above the 400,000 that analysts were expecting. And then let's cap things off with shares of American Express right now falling 1.5% after reporting mixed results. An earnings miss, but a revenue beat. The company also expects full-year revenue growth to hold steady at roughly 9 to 10%. The Street was looking for about that 9% range. The company had previously said its customer base, which is mostly that higher income tilt, has continued to spend despite some of that consumer sentiment pullback. Those shares, by the way, up just about 10.5% over the last 1 year period. So some of the micro story movers, Joe, that are driving the action here. I'll send things back over to you guys.
Right, okay. Thanks, Dom.
You got it.
Coming up, ExxonMobil CEO Darren Woods joins us after the break to talk earnings, the economy, much more. We'll be right back.
Welcome back, everybody. ExxonMobil beating on both the top and the bottom lines. Joining us right now for an exclusive interview is ExxonMobil's chairman and CEO, Darren Woods. Darren, welcome. It's great to see you this morning. We know oil prices have been down, but how has Exxon been operating under those lower oil prices?
Well, I think we had, as you saw in the quarter, a really strong quarter, which topped off a really strong year. As you said, oil prices are down, commodity prices down across the year. That took about $6 billion of earnings from our 2024 endpoint. We clawed back more than half of that through growing advantaged volumes and cutting additional cost. If you look at our total production in 2025, it's the highest it's been in over 40 years. We had record production in Guyana, record production in the Permian. We added an additional $3 billion of structural cost reductions on the year. That brings our total since 2019 to over $15 billion of structural cost reductions. That's more, Becky, than if you took all of our major competitors, added them together. Our single company number beats that.
Wow.
On top of that, we had a great year for projects. If you look at the portfolio of projects that we had to deliver in 2025, there were 10 very large, complex projects that we delivered on plan, many of them under budget and ahead of schedule. That provides $3 billion of earnings power going forward. So a critical component of the plans that we laid out in 2024 to grow earnings and cash flow. 2025, we updated those plans. Right now, we see our plans grow earnings by $25 billion through 2030 and gross cash flow by $35 billion to 2030 on a constant price and margin basis. So we feel really good about what we delivered and really good that we're on this track and on plan to continue to grow earnings and cash flow.
Yeah, Darren, we've been showing different links of the stock chart, and if you look over the last 5 years, it's been pretty phenomenal growth for Exxon shares, up by close to 210% over that time period. This has been an exercise in operational excellence, I would say, just in terms of trying to make sure you guys are putting your best foot forward, trying to find the right way to do things. It may get a little more complicated from here. You are facing pressure from the administration to do things, to drill in other places, to make sure that oil prices come down. The president likes seeing lower oil prices like we've seen over the last year. And you kind of ran into that front and center when you went to the White House to talk to the president about Venezuela. You came out of that meeting and said that Venezuela right now is uninvestable unless there are major political and legal reforms that take place in that country. Describe what your assessment of Venezuela is right now, and then we can talk a little bit more about where that puts you with the administration.
So back to the original point that you made, which was the transformation we've been making, and I would tell you the pillars on which this business, long-term value of this business is built is technology and the technical innovations that we continue to drive to convert hydrogen and carbon molecules into products that society needs to, continue to grow their life and raise prosperity around the world. Projects and the ability in a capital-intensive business to deliver projects at world-class pace and at world-class cost is absolutely critical. And we formed an organization that is doing that. And we just formed an organization that brings all of our operations together so that we continue to operate with excellence. And once you've developed the technology, you've implemented them through projects, you then got to run the kit reliably and very cost effectively. And our organizations are all now focused on doing that. So that is the foundation that we've laid that's led to this growth. The challenge is, as I talked with the president about at the White House with respect to Venezuela, is just the damage that the dictator that was recently removed and his predecessor did to the economy and to the industry. And the point that I was making at the White House is those are significant challenges that have to be addressed if we're going to achieve the priorities that the White House has. And those priorities, start with one, stabilizing the country. Second is to kickstart the economy and try to recover some of the damage that's been done over the decades of abuse that the dictators brought in. And then ultimately to transition into a representative government. I think those objectives are the right objectives, ones that I agree with, I think many people would agree with. The challenge is how best to do that. And from my perspective, with the history that we have, not only in Venezuela, but in operating around the world, is to help the administration and the policymakers understand the challenge. And from my perspective, you can't solve hard problems if you don't start by truly understanding what they are. And I think that's one of the things that as a company we've tried to do over the years is help administrations here in the U.S. and really around the world understand the challenges in our sector, the areas that we're very familiar with, so that the approach that they take, the policies they put in place, address those challenges appropriately and solve them. And I've got a lot of confidence that the administration can do that, working with the Venezuelan government and the people of Venezuela.
But as you've pointed out in the past, Venezuela owes you, what is it, 13 to $20 billion? I think you filed claims for $20 billion. You're seeking 12 to $13 billion in compensation. Pulled out of Venezuela twice as a company. What has to happen in order for you to look at that and say, okay, we'll dip our toe in again?
Yeah, so I would say, you know, that we were expropriated in the early days as Exxon, and when we merged with Mobil. Mobil came in, and we were expropriated again in 2007. The challenge here was they changed the rules of the game. And, you know, frankly, from our perspective, there's a principle that we stand on that if you don't uphold the sanctity of the contracts, if you choose to instead steal the investments that we made and undermine the work that we've been doing, that we can't continue to work with you. And so that principle is what led us to exit Venezuela. I think it's absolutely critical to do that, to establish precedents around the world, because it's a very slippery slope once you begin to cooperate and work with people who are stealing from you. So that's been a big challenge and one of the reasons why we've left. We've had success with our arbitration and recovery. We've recovered a substantial amount of the money. So today, the balance is not material with respect to the whole of the corporation, with what we're owed there. The bigger challenge is the investments that you have to make going forward for the next many decades, and making sure that the right legal frameworks are in place, the protections are in place, and the fiscal systems reward the investments that have to be made.
Oh, the pendulum. I know you're waiting for me, Darren, the way that... I know you are.
Good morning, Joe. Good morning, Joe. It's great to see you.
I know you are. I know you're waiting, but the pendulum, I would say you should be in a great mood, because you can, you know, probably get, you know, tables at a restaurant now. You might actually get a loan, might be able to get a loan from a bank without the Fed saying don't give any money to a fossil fuel company. I mean, there are good things happening. My question would be, you talk about your innovation and all these projects. Would you de-emphasize some of those, what I thought were crazy projects, the carbon capture stuff? Because is that profitable without subsidies from the government? And would you de-emphasize any of those at all, given the way just the whole, and it's colder than hell back here. I mean, well, hell's not cold, but it's cold, and it's 30 degrees. The global warming in Florida is really bizarre to witness right now, Darren. I don't know if you've noticed. But is any of that being de-emphasized given the sea change in that whole zeitgeist that we went through since Al Gore's movie?
So Joe, let me start by maybe trying to level set with you. If you look at what we've been doing since 2018, we took a lot of heat very early on because we've never backed away from the importance of oil and gas to the world energy system and the role that it plays in economic growth and raising people's prosperity levels. We have been investing and was heavily criticized for continuing to invest in those resources and developing throughout this time. We're the one company that didn't slow down and didn't back away from that. And so today, we're the largest producer in the U.S. and we're growing production faster than any other company in the world. So that foundation of focused on the things that we know how to do and contribute to what's needed by society has been a focus from the very beginning.
It was a big cheerleader for you. Maybe, in fact, you probably were listening to me. That's why you did that, didn't you? Is that?
No, I don't actually recall that, Joe, but I'll take your word for it. If you look at, so the other thing is, and I know this is where we probably disagree, I do think you can continue to do that and then find ways to decarbonize and to reduce emissions, just like we've done in a lot of other areas around our business. As we learn the impact of the products that we make, find ways to try to mitigate and offset and eliminate those impacts. We did it with sulfur in fuel. We've done it with lead and gasoline. This is another opportunity, and so we're looking at it from an invest what we can bring to the equation and whether we can generate a return on those investments.
The rug might get pulled out from under you if the whole world decides that We went to Davos, and not one person talked about climate this time. They're like, oh no, wait a minute. There was some crazy guy that like burst into some panel meeting, and he was like wild-eyed, and his hair was, and he was screaming. It was Al Gore, actually, was the one, right?
I knew you
He was the one guy that showed up there and was like heckling, and he's like, I think security escorted him out because he was just crazy, because there's still some ice in the Arctic.
I would separate out what I'd say the activists and the ideologues and just focus on it. Responsible companies ought to be looking at the impacts that they have on their environments and doing what they can to reduce it. And Joe, what I would tell you is the investments that we're making are generating returns. And if the markets don't develop for these investments, if there's not enough incentives to drive them, we won't make the investments. That's how we're running the business. We can't walk and chew gum. We can't walk and chew gum. We can do both these things.
You can. I don't know about
You
everybody.
can't, but that whole hysteria was not a friend to Europe and a lot of parts of the world that have no energy.
You are absolutely, I would tell you, you're absolutely right. And Europe is a classic example of how they've let that ideology drive their policy, which is significantly impacting the investability of Europe, the competitiveness of the assets that are there. Their businesses are shrinking. Our industry is shrinking there, and that is really putting them in a perilous position with respect to economic growth, but more importantly to energy security. And they haven't learned any lessons from the Russian invasion of Ukraine, the loss of gas there, and unfortunately it's a very slow spiral down. And Europe's got to make a significant change here and recognize there's a balance to be struck between economic growth, supporting the businesses that contribute to that economic growth and underpin today's living standards while addressing the emissions. And as I said, you can do both of these things. You don't have to give up on either one of them, but you need to be thoughtful and balanced.
Yeah. Darren, I know you don't have a crystal ball, and I know your job is to make sure that Exxon is profitable no matter what the price of oil is doing, but you have to also be constantly watching it, trying to figure out where you think oil prices are headed. I'm sure you have your own internal projections. Where do you see oil over the next year, and how does that guesstimate change if we actually do something in Iran?
So I think, if you look at a very high macro level, in part because of some of the points that Joe made with the president and his recognition of the importance of our industry, the markets are well supplied. So you've got I think, a comfortable supply of oil, which is why we haven't seen a lot of volatility in oil with all the geopolitical dynamics that have been playing out here over the last year. And that's, I think, a good thing in terms of where we're at. Obviously, as large sections of supply today potentially come off through some type of disruption, that's going to have a short-term impact. But I do think over time there's enough capacity and enough spare capacity in the world to step in and try to address that. So my view is, while there may be some bumps and some volatilities, the industry is pretty healthy today and pretty capable of responding to any short-term perturbations.
Darren, other things that you were watching that you're worried about, that you are thinking are good for the industry? What's in your brain?
I think, we continue to look at we hit the very long-term view, what's going to be needed to continue to support the growth. AI is the big thing folks are talking about. I think there's a growing recognition that what our industry can provide goes hand in hand with what AI needs to continue to drive and bring the benefits of that technology to bear. And so I think a recognition that there's a challenge here to how do we grow energy and do it in a responsible way. We're very much a part of that. We've actually working with a number of the hyperscalers to provide low emissions power generation for their data centers. We think there's an opportunity there, and I think we'll see something hopefully manifest itself here with a project by the end of this year. We're continuing to look at investments that leverage our advantages and continue to deliver products that the world needs. We actually have 2 new technologies that are going to extend the life of batteries by 30%. Make their charging much faster, give them broader ranges by dealing with materials. We're developing new materials for lightweighting vehicles and other things. So there's a lot of opportunities out there to take advantage of the hydrogen and carbon molecule.
Darren Woods, we always appreciate you coming on. Great to see you, sir. Thank you.
You're welcome. Thank you, Becky. Good seeing you.
Up next, PPI data plus Atlanta Fed President Raphael Boswell.
Welcome back to Squawk Box. Rick Santelli here live at CMEHQ with the last of the major breaking news of this week. And this is the wholesale side of inflation. The producer price index for December expected to be up 0.2, and this is not good news. Up 0.5%. Up 0.5%. That would be the warmest, boy, we have to go back a bit here. That'd be the warmest since SEP of last year when it was up 0.6. Strip out food and energy, it goes up 0.7. This is over 3 times what we were expecting. Up 0.7 would be the hottest since July of last year when it was up 0.8. Now, if we look at X-energy, food, and trade, it's up 0.4. Hey, that's at least only 1/10 away from expectations, and that would be the highest level since October last year when it was up 0.7. Now, we're going to go from month over month to year over year. Year over year, expecting 2.8 on headline, comes in at 3%, equaling exactly our look last month. And those 3% numbers, well, to find higher than that, you're going to July when it was 3.2. Now, if we strip out food and energy on a year-over-year perspective, we're looking for 2.9. Last look was 3.0. Up, 3.3. 3.3 would be the warmest since July of last year at 3.5. And finally, this is probably what I look at the most. X-food, X-energy, X-trade, year-over-year expected to be up 3.4. Last look, 3.5. Here we come at 3.5 again. To find a higher number, you're back to February of last year when it was 3.6. These are warm, but yet, if you look at what's going on with the Treasury complex, it hasn't really moved that much. We're roughly around 425-ish. We're still at 425. Maybe it went up 1 basis point. 120. We were at 424. Last Friday and yesterday we closed at 423. So we're basically up a couple of basis points. we need to really monitor how this proceeds throughout the day when we really see the thick of the opening of the equity markets, which dropped just a little bit. We're now down about 260 in the Dow futures. I think it's because A, it's the wholesale side, and B, I don't know that any of this is really surprising. We've seen sticky inflation. The difference between sticky and more active is what I think this number is kind of transitioning to, that we've had a long stretch where really nothing moved, but it didn't get closer to 2%. Now, at least on some of these metrics, it looks like it's starting to lift a bit higher. We still have Chicago PMI. Obviously, Warsh was the pick. You know, yesterday we had a trade deficit that went from minus 29 to almost minus 57, and I said probably a GDP downgrade because it was exports down, imports up, and indeed, I know you're in Atlanta, Steve. Atlanta GDP now flipped yesterday from 5.3999 to 4.237. Joe, back to you.
All right, good. All right, thanks, Rick. And you mentioned Steve Leisman, who's going to join us now with more, and a quick reaction. Hey, Steve.
Yeah, Joe, I don't have the numbers in front of me, but I would take a little bit more relaxed on this number if it ends up being inside the wholesale trade number, and it could be this portfolio management thing, which is basically picking up the idea that Wall Street did really well.
Yeah.
And when they make a lot of profits, that ends up boosting the price. So, Rick, are you there, Rick? Can you hear? Can you look at that thing and see what happened in the portfolio management section? When you told me that the wholesale trade number,
I only see the big chapters.
Okay, all right. So two things real quick. If it's that wholesale trade number and portfolio management, I'm a little bit less concerned. It's still concerning in the sense that this number will feed into PCE and might mean a slightly hotter PCE. We were looking for 2.9. We'll get that a little bit down the road. It's something that says to the Fed, well, why would I even say that when I have somebody from the Fed right here to ask you? I was going to ask you about Warsh and the new Fed chair nominee. Well, not nominee, but it's supposed to be nominee. But I want to ask you, were you able to hear Rick's reporting? Raphael Bostic, thank you for joining us.
Well, Steve, first of all, good to have you here in Atlanta. It's always good to be on.
This is the most convoluted intro I've ever done before. But let's get this right on track. You heard the idea. The producer price came in a little bit hotter, which, am I right, suggests maybe a little bit hotter when it comes to the PCE, which is what you guys follow.
Yeah, so that's usually what happens. But as you just noted, there's a lot of stuff on the inside that you have to tease through. Look, at the high level, my concern for the last 3 or 4 years has been inflation is too high, and we've got to get it down to a 2% target. What we've seen, we made good progress. We've made good progress. But for the last 2 years or so, we've kind of been just stuck in place in this high 2s, low 3s range. And so what I'm really looking for is clear evidence that we are returning in that direction toward 2%. This number doesn't sound like it's that, but I definitely want to look at it more, work with my team to understand it better.
Well, one of the things that I've been looking for inside this producer price number is whether or not the tariff shows up in there. And there's two ways of thinking about that. One is, well, the tariffs are showing up and showing up in the inflation data. We have seen it in the goods data at the consumer price level. If it's tariffs, though, are we a little bit less concerned because you see tariffs pushing through the economy and end up being a one-off price increase?
So tariffs is actually a complicated story because firms are using many different strategies on how they respond to them. Some have been able to push through prices immediately.
Right.
Some have tried to find efficiencies so they don't have to pass through as much. Some have actually tried to have their suppliers eat some of it. What we're hearing through our surveys is that there are still tariff effects that have yet to come through the economy.
Right.
Firms have used a lot of other things that have allowed them to prevent using price. But they're starting to get to the end. So I'm expecting there will be some tariff impact into the economy in the first half of this year. And then at that point, we'll kind of see how the economy evolves. My outlook is that inflation will really just mark time for most of this year, may start to come down just a little bit at the end of 2026. But we've still got a ways to go. And I think we need to remain quite vigilant in terms of making sure that we get to that target.
All right, I'm going to start with the second question I was going to start with because I'm working my way back up now. Tell us what the pause means. What people were puzzling over the pause, which was the idea that is the Fed stopped for a while here, or is it a meeting by meeting stop? How do you think about the pause that the Fed just did?
Well, I'd say two things. One, it's always meeting by meeting. I know you kind of have to say that. Yeah. I think for my outlook, I would say we should be waiting and be more patient. But we've had a period where we've got two mandates. They've kind of been in conflict. There's been downside risk to unemployment, or to the employment mandate. There's been upside risk to inflation. And everyone is trying to weigh which one is more significant. Right. I think today, when I talk to my business leaders, when I look at the data, it's a case can be made that they're kind of imbalanced right now. We are still too high on inflation, so I think we need to be somewhat restrictive, but we're not so high and the pressures aren't so great that we need to be moving down. To the extent that labor markets, and we've talked to a lot of folks, they were really concerned about labor markets in the last quarter, in third and fourth quarter of 2025. We talked in the last 4 or 5 weeks, and they all like, the pressure has come off. So I do feel like that downside risk, that a catastrophe is going to happen in employment, is much further away from us than it was even a month ago. And that gives me some confidence that we can be patient.
I'm going to make an editorial comment, which is that some people criticize the Fed for not talking to people in the real economy. I don't believe that's true, but I know a place it's not true, and that's right here. You guys have initiated a series of ongoing surveys asking CFOs, business leaders, and I think, Raphael, my sense of what you've been doing is you have sort of oriented your policy almost more than other bank presidents towards what those surveys are telling you.
So that's exactly right. And I would just say this. We've gone through a period of unprecedented things. A pandemic, war in Europe.
Right.
And so our models are based on data that evolved when those things didn't exist. So you would expect those models to have much wider confidence intervals around their estimates. And so we need to get supplemental information. It's one of the reasons why we have surveys. We actually have a whole nother team that goes out, all they do is talk to business leaders and ask them, how are you thinking about things? We call our regional economic information network. And that information has been really helpful in this world that has been evolving in unexpected ways quite rapidly.
So the last time I think I heard you speak, you talked a lot about these surveys and saying that you heard that businesses are going to be passing these prices along.
That's what they've told us, but I will tell you, the last round of survey responses, it was much more muted than we've seen for the first half of the year. So I do think that's actually a good development from an inflation perspective. And it's one of the reasons why, looking forward, I think it's less likely that we'll see inflation pop up to the mid-threes or anything like that. But the risk that inflation stays where it is at this level that is too high, I think still is out there and is a source of concern.
Well, now I got to get to the place I was going to start to begin with, which is with Kevin Warsh. The president is saying, what can you tell us about what you know about Kevin Warsh and what kind of policy you might expect from him?
Well, first of all, I want to congratulate him for being nominated. It's always an honor to do that. I actually don't know Kevin very well. He spoke at our conference that we held a couple of years ago. I got to say hello, but when you're hosting a conference, you're running around a lot. So I actually don't have a lot of experience with him. I've heard he's quite thoughtful and is someone who you can really engage with.
One thing he's talked a lot about is the balance sheet. He said the balance sheet is too large and wants to bring it down. He thinks the Fed's footprint in the economy is too large. How do you think about that?
Well, I actually think that we changed our balance sheet in response to a particular crisis. And that crisis was the great financial crisis. I think our portfolio of where there's a lot of mortgage-backed securities, what made sense at the time. I think over time we've got to back out of that, and I've been saying that for a while. I think the committee is actually.
But you just decided to go the other way. I mean, you were headed in the right direction.
There's a difference between the size of the balance sheet and the makeup of the balance sheet. I just think right now the size of the balance sheet, from what I've seen in terms of reserves, in terms of demand for cash, is about right. And as the economy grows, then the size of the balance sheet needs to grow with it, and that's kind of what we're doing right now. But there is still this question about what is the makeup of that balance sheet, what's the portfolio. For me, I would think it'd be best for us to have a portfolio of Treasury securities in a distribution that matches what's out in the marketplace. That then means we have no distortionary presence in the financial markets, and that's ideal.
One of the abiding concerns throughout this whole process of looking for a Fed chair has been the independence of the Federal Reserve, and there's widespread concern. The president has, not concern, but I think actual facts, the president has challenged the independence of the Fed, criminal investigation against Powell, firing Lisa Cook. How much concern with this nomination would you have for the independence of the Federal Reserve?
I think the independence of the Fed is always a concern, and it's always something that we need to protect, and so that's always there. I do think, though, that we have to wait and see how people respond. The Federal Reserve is designed to have a different time horizon for its policy thinking than other policymakers. That creates tension. That is going to inherently lead to people having different views about what is important and how things should be weighted. And we'll just have to see how Mr. Warsh is in the role. It's very interesting. So when I was getting ready to become the Atlanta Fed president, I had one set of thoughts. And then when I became the president, you get to see things in a different way and different perspective. So I actually expect that'll be exactly the same, maybe even magnified as a chair of Federal Reserve. And we'll just have to see how things play out.
To what extent does the fact that the chair has to get the vote of the committee in order to change interest rates, does that attenuate any kind of adherence or allegiance that a chair may have to the president of the country?
Well, look, every chair, I think, comes with their view about where the world is and how they think it's going to evolve. But ultimately, the institution's actions require votes of 12 people at any one time. Right. And you have to navigate that. You have to canvass where people are, figure out sweet spots, and then maybe try to make cases to convince them that your view is right.
So that's a stabilizing force on policy?
I actually do think it's a stabilizing force.
Speaking of policy, we're showing a probability chart here, Raphael, that shows 2 rate cuts built in for this year. Actually, they moved a little bit earlier on that second cut after the Warsh nomination news passed. What do you think about that assessment here? Is that something that's in your mind to be able to bring rates down by another 50 basis points this year?
That's not my baseline case, because I think inflation is actually going to be much more stubborn than maybe some other analysts are. But look, the economy is going to evolve in ways that allow us to make judgments. And for me, the thing I've become accustomed to is the unaccustomed, is the unusual, is the thing that's going to shake things up. And so, talk about outlooks 12 months from now, I think that's very difficult. But I do think in the next quarter, where we are is a good place, and I'd expect that the data that comes in is not going to change that view for me.
Raphael, you're leaving. Was that your last meeting, or is there one more to go?
That was it for me.
Last meeting.
Yeah.
So I just wonder what you would say to your successor about doing this job and doing it well.
So what I tell them, go out, talk to a lot of folks. Businesses actually know a lot about what's happening, and you can learn from them. And then trust the staff. We have one of the best staffs in the country, and they're fun to work with. I've learned things every day, and just be open to the world. The 6th District is a wonderful place. People are warm in their hearts. They're very generous and transparent, and it's just a great experience.
Raphael, I wish you the best. I understand you haven't figured out what you're going to do. You can take 6 months off, I understand it. But I suspect we'll be seeing you down the road.
I hope so.
Okay. Becky, back to you at the NASDAQ.
Steve, excellent, and our thanks to Raphael Bostic.
What's the temperature down there, Steve? It's like 30?
It's a balmy, like I think it's 30. You should have seen, Joe, I went from 20 in D.C. to 40, and you have no idea how warm 40 can be when you were in 20 the morning before.
I thought it was the opposite. When it's 40 in Florida, it's like, the ocean is there, and nobody's on the beach. It feels even colder than 20 back here. See, I think it's the opposite. It's like not supposed to happen down there. Huh?
I just had a fishing trip canceled. In Florida because it's not going to be above 60.
Yeah.
And you know why
It's
it's so
going to be
cold.
one of the worst cold snaps.
You know why it's so cold.
What's that?
You know why it's so cold.
Why is that, Joe?
Walking into it.
You're not going to go down the global warming thing.
Because of the global warming? It's cold because of the warming. Everybody knows that. Anyway, see you later.
Thank you,
Joe,
Steve.
it's climate change, Joe.
It's going to be a
Get with
cold,
it.
wet, warm, dry year.
Climate
I'm
change,
predicting
Joe.
that. Climate change.
Get with
Cold,
it.
wet, warm, dry year.
Weather Channel next. Up next, our new CNBC Cures initiative focuses on raising awareness of rare diseases. We'll have a preview of our latest podcast, which is out now. Squawk Box, we'll be right back. new CNBC Cures initiative focuses on raising awareness of rare diseases and improving the lives of people who have them. Rare diseases impact tiny patient populations, but there are thousands of individual diagnoses, and collectively, 1 in 10 Americans lives with a rare disease. For many families, hope is the best and sometimes only medicine. There's a new episode of the CNBC Cures podcast, The Path, out today. You can scan the QR code on your screen to listen into this. My guest this week is Luke Rosen. He's a New York father who faced his daughter's diagnosis of a degenerative disease that could rob her of her ability to walk, to talk, and to see with astonishing bravery.
What if this is the last time she sees me as she was falling asleep? And that was, how do you want your child to remember you? How do you... Because if I was being honest with her at that moment, and probably most of her life, the answer was terrified and helpless. And, that's not what you want your children to think of you, but that's how I feel with these diseases,
So what did you do? Did you smile?
I did. And I lied to her because I forced a smile.
I met Luke very early in my own family's rare disease journey. His incredible daughter, Susanna, is a pioneer in a groundbreaking therapy that's attempting to try and slow the progression of her disease. Susanna is beautiful, and she's a warrior. You can hear more of their family's story in The Path. It is available in our Squawk Pod feed wherever you listen to podcasts, and a video cast will be up on YouTube later today. We've got more on this story on cnbc.com/cures. That's where you can also subscribe to the Cures newsletter, which is out weekly. More than 10,000 people have already signed up in less than a month, and we hope you will join this community that we're building right now to take on rare diseases.
All right, let's talk big tech earnings. Joining us now is Tony Wang, T. Rowe Price portfolio manager. Tony, we had a guest on earlier saying, wow, you really do need to sort of look at each individual tech company and decide individually on the merits of an investment in the aforementioned stock. Is it gotten more so, or was it always like this?
Yeah, I think that at some points over the last few years, the group kind of traded together, like the Mag 7, and now there's more divergence. And I think that there is like a little bit of a space race going on with AI, but it's kind of going to multiple moons. And so I think that overall the TAM is expanding. I mean, Apple is still has a great ecosystem on personal computing. We'll see what they do with Siri and the new iPhone. I think Meta has all these digital properties they can roll out AI, and then NVIDIA and Broadcom are building out the AI infrastructure. So, they're all doing some different things. Tesla's doing full self-driving, and that's exciting. So, to me, they are very different in what they do, and then also the valuations are also very different as well.
Yeah, they all have their own, but it just seemed like, okay, Meta surged because it's going to spend a lot on AI, and Microsoft plummeted because it's going to spend a lot on AI. I mean, what is an investor supposed to? What are the ground rules?
Yeah, well, look, I mean, last quarter, Meta, kind of disappointed a little bit. I think they kind of got their mojo back, and the market knew its cost but didn't know its revenue. So when Meta guides up, huge acceleration from low 20s to over 30% on the guide. That's a massive improvement in the business. And so I think with those numbers, you can kind of spend whatever you want because people believe that you're getting a lot of ROI on it. So with Microsoft, I think that they came in a little light, and in this market when you're spending a lot, that spending kind of acts as leverage on your results. And so it could be really positive, or it could be pretty negative as well.
When you're up in the trillions on market cap, I guess that's when you really do need to start differentiating between narratives for all these different companies. What are your favorites at this point from here on out?
Yeah, so I think about I think the Mag 7 continue to be well positioned. They're have a lot of scale to develop AI and then roll AI across their platforms. What I'm looking at also is that there's areas where I think when you're early in the tech cycle, like the Mag 7 and large cap companies can do really well. And then there's a broadening as a result. And like I think about where the economic bottlenecks are going. And what's really exciting in tech is agentic AI. You think Claude Code, Claude Work. I mean, these are like really big step changes that we're seeing by the month. And as a result, I think the need for compute is going to continue to be there. And so, we're seeing like the economic bottlenecks shift around, and, the stocks that go up the most or that have become like really good investments often are those areas where they're capturing more value over time. So I think that's what's exciting to me, and, never been a better time to be a tech investor.
I don't know, Tony. Haven't you ever been on a phone where you just keep hitting 0 to try to get to a human? I mean, am I really going to have to? It's going to be agentic. There's going to be no way out. There's going to be no way to get there. Is that the future?
Look, I think the future is going to be better because agentic AI never needs to sleep. It's on 24/7, and it has the repository of all the history of customer service. So you'll get immediate kind of responses as a result.
All right, I just accept change slowly, Tony. But I'll give it a shot. Everybody talks agentic. It would be good if if they knew everything that they had done for me in the past. And I guess I could see if you hit success when you don't talk to a human at all to do something.
I don't need anyone else to not talk to a human. I don't need AI's help.
I keep hitting 0, and a lot of places they don't.
Oh, I just say customer representative.
So you do
customer
it too.
representative.
You do it
customer
too.
representative.
That's going away. There's going to be no customer representative eventually. Tony, thank you.
Yes, Dave.
Yeah.
May I help you, Dave?
Afraid I can't do that. Up next, stories making headlines on the show today. We're going to be right back.
Breaking news on Squawk Box this morning. President Trump has picked Kevin Warsh to be the next Fed chair, ending months of speculation about who would be chosen to replace Jay Powell. Just moments ago, BlackRock's Rick Reeder, who was also being considered for the job, told CNBC's Scott Wapner that this has been an incredible honor for him. I congratulate Kevin, he says, on his nomination and think he will serve the institution and our nation very well. American Express reporting a slight miss on earnings per share, but the credit card company beating revenue expectations. Card member spending was up by 9% last quarter. And the big data of the day was the producer price index for December. It came in higher than expected at 0.5% compared to an estimate of 0.3%.
Been down all day long. Warsh didn't help, and certainly the PPI.
Actually, worse when it was actually put out on Truth Social. We got to the best levels of the day, around
down 200,
down 125 or something. Yeah.
But as Rick pointed out, after all was said and done, not a lot of movement in the bond market either.
PPI didn't help at all, though.
PPI didn't help, but didn't really hurt too badly there. Gold and silver both trading lower this morning. There's WTI crude. Interesting talking to Darren Woods and hearing all of Chevron's comments as well. It's like 30 degrees in here.
It's so cold
Right now as
I'm
well.
wearing my coat.
People love it's going to be a cold, warm, wet, dry year. They love that. Climate change, predicting.
From our meteorologist, Phil Kernan.
Make sure you, meteorologists can't even tell you what's going on.
Goodbye.
Make sure you join us Monday.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl King today with Jim Cramer, David Faber, Post 9 of the New York Stock Exchange. Futures are slightly red as we wrap up the month of January with a likely S&P gain for the month. Finally got a Fed Chair Nom and Kevin Warsh. Yields fairly steady in the wake of that news, even with this hot December PPI, hottest core since July. Our road map begins with the president's pick to be the next Fed Chair, nominating Warsh to take over from Jay Powell.
Plus, Apple reports record revenue. CEO Tim Cook saying the company is seeing, quote, staggering demand for its iPhones, especially in China. Software stocks continue to get crushed, many of them now deep in bear market territory. Microsoft, by the way, wiped out about $350 billion worth of market cap. That was just yesterday. And of course, we also have Big Oil reporting earnings. Chevron beat estimates, raised its dividend. Its CEO, Mike Wirth, is going to join us. It'll be our first on CNBC interview this hour.
Let's begin with the president choosing Kevin Warsh to become the next Fed chair. If confirmed by the Senate, the former Fed governor would take the helm after Jerome Powell's term as chair ends in mid-May. In his announcement this morning on Truth Social, the president says, quote, "I've known Kevin for a long period of time. I have no doubt that he will go down as one of the great Fed chairmen, maybe the best." Jim, the profiles are out in full force. What do you think is important to know about him?
Well, I do think that what anyone coming in now knows the heat that you take if you don't agree with the president. So I don't think you have one persona, which is to agree with the president, and then get in and say, well, I got to change my mind. I think that, not because he's a house man, but there are a lot of people who have been appointed by Trump who realize the consequences of not agreeing with the president. The consequences are such that, David, I don't think you want to risk it.
You want to risk what? Sorry.
Being on the other side of the president.
You don't want to risk it.
Has anyone
done
well
just
that has been on the other side? How about if
not.
Hegseth went in there and said, we got to rethink this Iran thing, but how long would he be there?
So you think if it's a choice between the data and good policy for the country, it's better to stick with the president?
Yeah. This is not the same president as the one since Washington. He's a different guy.
The only things I would offer, guys, and again, we don't cover the Fed as closely as obviously some here. I've been able to spend a little time with Warsh. I mean, he does know the stock market really well.
Yeah,
He's been working with Stanley Druckenmiller for a long time at Duquesne, and of course, he doesn't like QE. And that may be reflected in what we're seeing in terms of the futures and the
you must share the attitude that I'm saying is not a heretical
market.
Right?
Say again?
It's not a heretical attitude.
No, but he has been hawkish in the past. Certainly was viewed as hawkish when he was a part of the Fed. That's quite some time ago at this point. But then I also think we clearly know that he's not a big fan of QE, and there is an expectation that would be rolled back more significantly. The balance sheet, Carl, is still where it's like over 6 trillion. I don't know where 6.8, something like that.
Meantime, there's still Senator Tillis in the way, who, by the way, this morning says he will continue to oppose any nomination until the DOJ flare-up with the current Fed chair is resolved, and Warren sort of backs him up today. It's a
Right.
key voice in Senate banking.
Well, I get that, but again, I come back to the idea that it's not like that Trump has some sort of wild-eyed way. Trump just says that you can have great growth, low inflation. And I think that if you take this job, you agree with that. And that's okay. It's not, I think that many of us would say, listen, wherever the chips fall, we're going to do what's necessary. So if inflation heats up, with growth, then maybe we have to tamp growth down. I just don't think that you're buying into that if you're Kevin Marsh. Maybe this Damascus-like conversion that he has when he gets from the president. That's what
But when it comes to qualifications to be Fed chair, nobody can argue that he doesn't have them,
Oh,
right?
I'm not saying that. Again, I'm not saying. I'm just saying that if you take this job, you do not. You know what happens if you disagree. And
you become an enemy of the president.
Right, and that's not a great position to be in for anyone in this country. Anyone that we know, if they are the enemy of the president, says behind back, not on air, wow.
Yeah, I know, but he's going to
Make
have to
the
deal
choice
with
here.
with a bunch of Fed governors who may disagree
okay.
with him.
Okay, forget it. He's not going to be a house man for the president. What do you want me to say? I'm
Well, I
saying.
guess one example would be the current chair hasn't gone anywhere despite all the browbeating. In fact, he might stay on.
That's true. He could stay on, but Jay Powell is a man of different set of principles. I think there are a lot of people would view this as a cabinet-like appointment because that's how I think Trump views it.
It's not a cabinet. It's not a cabinet.
It's not, but I understand your point. He views the Fed the same way he views the DOJ or the FBI.
Right now,
control them.
Right now, I mean, think about the DOJ has historically been sacrosanct, other than Bobby Kennedy, the brother of President Kennedy. I mean, even the DOJ was very sacrosanct against Nixon. I just think the DOJ is regarded as being the president. It's an arm. It's like his law firm. And I think, okay, I'm going to say it, even with Washington, I think the president regards it as his bank.
Okay, well, we'll see how it all goes then.
Oh, that's really great.
Yeah.
That's good. That's what I often say. Like, how about, who do you think, Seattle or the Patriots, or do you see how it goes?
No, we'll see how it goes. I think Seattle. But,
What you're not, well, the next question then is, do you expect it to result in destructive policy?
Well, no, but there are other people, and I don't believe it's just. See, this is where I think I don't believe that view of the presidents is that far away. Because I think that you want to have a growing country because you want many more people to participate in the growth. When you listen to Steve Squeary this morning, like I talked to him in American Express, the rich people are doing great. I think the attitude that the president has, that I think Warsh should have, is that maybe others should participate too. I listened to Andrew's Mondami interview. I mean, look, we can't have two countries. If you promote great growth and accept a little bit of inflation, then more people will get wealthy. Now, they're on the other side of Powell too. I'm not against what the president wants. I'm just saying that if you take Warsh's attitude, it's probably in sync with what the president wants. And the president's not asking for some sort of crazy thing here. He wants more people to do better. He does. You can't. Have more people done better in the last few years in this country? No. It's been just this rich group. And I don't think that it's so crazy what the president wants, and therefore if Warsh toes the line, I don't think it's that bad. I don't.
We'll talk more about what it means for Fed independence. Last night, the president sort of framed it as an us versus them thing between him and Fed governors. Steve Leisman's got some more breaking news on the Fed this morning on a busy day. Hey, Steve.
Yeah, Carl, this is worth paying attention to. I think Fed Governor Waller explaining his dissent, saying the policy rate should be closer to the neutral rate, which he considers to be 3%. Put another way, he thinks there's another 50 or 75 basis points the Fed should be lower right now. Monetary policy, he says, is still restricting economic activity, and he's very worried about the job market. Says the data is making clear that further easing is needed. The labor market it remains weak, and he goes on to say the 2025 jobs data will likely be revised to show no job growth. There's substantial deterioration in the labor market, he says, is a significant risk that he wants to watch out for. It's appropriate monetary policy to look through tariff effects. This, of course, coming with a higher than expected inflation, wholesale inflation this number, as long as he says inflation expectations are anchored. Excluding tariff effects, Fed is on a path to the 2% inflation goal. And Carl, I just want to agree with you. it's not a cabinet position.
Thanks for the clarification on the act.
I just think that I don't think this president
Not yet.
No, I don't think this president regards the same kind of separation of Fed and state that others have. And frankly, if anyone really disagrees with me, I mean, look at it. All the people
You're
with
right.
points.
He doesn't view it in that.
But I also think that, but I agree with Waller. I agree with Warsh. I mean, I'm seeing, if you look at automatic data, if you look at paychecks, if you listen to Judy Marks last night on Otis, if you talk to any of the housing executives, things are getting more stagnant. They are. And I don't think it's wrong to agree with what Warsh is saying, or what Waller is saying. I mean, it's okay. I talked to all these executives. These aren't as good as they were. And if we take AI as what David was talking about in this dystopian world, things aren't getting better.
That's Dario Modet's view. Yeah.
It sounds
well, you don't have to worry about it, actually, because we're all going to die.
Well, there's a good
Billy,
piece.
are you Billy and the Predator?
There is a good piece in the FT today about the layoffs we've seen just this week from Depot, UPS, Amazon, 52,000. That's this week.
Look at that UPS.
But can we really point to AI? I mean, are the companies making it clear? Some in the commentary includes mention of AI, others does not. It's not as clear to me.
Meta.
Meta what?
Meta is using AI.
I think arguably Jassy too.
Yeah, but Meta didn't talk about layoffs.
I think that when you read through the lines of Meta, he's saying that AI, the Agenticses are writing the code for a lot of us. Well,
No, I know. We use that. I focused on that in the coverage of Meta. I know that, but they're not laying people off saying it's because of AI.
Well, what is it because
I mean,
of?
they're not laying people off.
What is it because of?
Post-pandemic overhiring.
Right, that was Amazon that announced very large layoffs.
Right, no, but I'm saying when you listen to the conference calls, you don't hear it. When Meta is a growing company, I don't think that they're going to be hiring as many people as they would.
I think that's absolutely true. My only point is we have yet to really see the complete linkage between companies' hiring plans and/or firing plans and the advance of AI within their organization.
I agree, but Jen Suwan would tell you, look, it's going to happen. It's going to happen.
Of course it's going to happen. And it's going to be an issue that Kevin Warsh is going to have to deal with.
That's why I think, again, I don't think it's such a bad idea. It just happens to agree with my view happens to coincide with the president. I'm sorry.
Can we get to Apple?
I'm sorry.
You want to get to Apple?
I'm sorry.
I know you were reading that conference call very closely last night when I joined you, so let's get to Apple.
We had dinner last night together.
Oh, I hope it was good.
It was very good. I had the Dover sole.
Yummy. Let's get to Apple. It is a record-breaking quarter, at least that's what the company says. Q1 beat. iPhone sales up more than 23, helped by stronger demand in China. Current quarter revenue guide comes in above consensus, but the company says that higher memory may impact gross margins. Jim, that was sort of an incremental discussion about maybe more this quarter than last quarter.
All right, yeah, look, the long knives are out for Apple, which is ridiculous. The gross margins were gigantic. They were staggering, okay? I don't think that you can just say Apple's another NAND customer. I think it's entirely possible that they have something better. NAND being one of the memory sources. Now, they're up huge. I mean, you could say anywhere between 200% and 500%. But when I look at who Tim Cook is, he is a supply chain genius.
Yes.
One of the reasons why he got picked, David.
Yes.
I think if there's anyone who can confound SanDisk, it will be this man.
Yeah.
No, he's just going to say, hey, listen, flame me.
I'm going to agree with you.
You are.
But by the way, that revenue number and the guide, and you get nothing in the stock price because it's all about worries about memory. Is that what I'm supposed to believe?
Just like they did with tariffs. Remember all these naysayers with tariffs and it didn't matter? Listen, if you go to T-Mobile, do you think that you're going to get a cheaper price on like a Samsung phone? I mean, the one that they subsidize is this.
Right.
But how about China? We should forget about China. China was like unbelievable.
The point you're making is, as memory continues to be in very difficult supply, the price goes up, and therefore will that stem demand from iPhone buyers?
Right.
I guess that's
No,
what you.
the answer is no.
And you don't believe so.
No, because people buy it from Verizon. They buy it from T-Mobile.
Guys, I did choose a couple of different sound bites from both the Apple and the SanDisk call that I thought were appropriate.
How about my call? No?
Yeah, you got something? What
No,
do you
I'm
got?
saying, did you listen to my call?
Yeah, well, I have Tim Cook saying memory had a minimal impact on the first quarter, so the December quarter gross margin, we do expect it to be a bit more of an impact to the second quarter gross margin. And beyond the quarter, we don't obviously provide outlooks. We do continue to see market pricing for memory increasing significantly. As always, we'll look at a range of options. As you point out, they're the elephant. They can, I mean, they can, you know.
Yeah, I mean, look, now Sanders was very arrogant in the call, as far as I'm concerned. Although I love the guy, right? He's
doing okay this morning.
He deserved it. He's been under pressure for so long, David. He's a terrific guy. But I do think we have to know who we're dealing with. Apple, free cash flow for Apple is $51.5 billion in the quarter. For Meta, it's $14 billion. For Microsoft, it was only $5.8 billion.
Well,
I mean, they had a lot of room.
Look at their capex numbers. They're in a completely different world
I know,
than
but
Microsoft or Meta or Amazon, completely or Alphabet.
Well, they're all
their capex numbers are nothing compared to them.
Well, how about the fact that
Hence your free cash
I asked him about how much this Google relationship's going to cost. Now, all these people are saying that Google's going to cost them a fortune, right? And it wasn't like he really addressed it. He didn't address it. So how are they able to come up with that? For instance, I say to Tim, this is our pre-interview, what are the actual terms? People say it's $1 billion back, and $20 billion that you pay to them. But do we know the terms between you and Google? Now, here's what I found out. I have a good relation with Tim. Of course I know them. We're not revealing them. Laughter.
You found out very little, and it's an important relationship.
But they're making
obviously.
stuff up. They're making stuff up. They don't know any more than I do.
Gemini is going to power Siri for the AI.
Right. But I'm telling you, these people know no more than I do. And they're telling you that it's going to be really expensive. These are the people who told me that the tariff was going to wreck the numbers. I said, absolutely not. These are people who told me that China was going to be awful. I said, absolutely not. Now, I'm not saying I know more than they do. I'm saying they know less than I do.
Well, you should have just told everybody to buy SanDisk. Because
Which is up 23%.
Okay, SanDisk.
I mean,
I said it was going to 800.
It's
I
up
said it was going to
130
800
points.
I said it was going to 800.
I mean, look at this thing.
It's going in a straight line to 800. You can't get to 800 without going through 600.
There it is.
There.
Oh my. Oh my. Oh my.
Well, SanDisk deserves it too. They've been laboring in the vineyard, the vineyards forever. And I'm not talking about more of the Manischewitz.
No stopping demand for memory. Their CEO saying this is a completely demand-driven phenomenon. What's going on in the market? He says they've been transparent for well over a year. What their supply plans are. They're investing heavily in the market. What's happening is we're just not getting enough visibility into what the demand side is, what the demand really is.
Dave Gockler's a very conservative guy, and he is. We remember him in very rough times. By the way, he's paid down a lead debt. He deserves it. This guy, it's his time. It's his time.
Yes.
It's Dave's time. Okay?
Got it.
All right. Let's go. You know what? Can we just skip tech for a while, Carl, and go to oil and gas? We need a good oil and gas man right now. Chevron delivering an earnings beat as production hit a record. Oil giant Chevron sees a lot of upside in Venezuela. Hey, Mike Worth is the man who's in charge of Chevron. Mike, welcome back to the show.
Thank you, Jim. Good morning, everybody.
Good morning. Great quarter, raising quarterly dividend, output coming up. What are the what do you think is driving your increase in output? Because I don't want to just pin it on Venezuela.
Well, 2025 was a year, a record year for us, really, in growth, execution, and shareholder returns. Adjusted free cash flow was up 35%, even as oil prices were 15% lower. We set a production record worldwide. We set production records here in the U.S. We had our highest U.S. refinery throughput since the 1990s, and we returned a record $27 billion in cash to our shareholders. As you mentioned, we increased our dividend this week, 4%, the 39th year in a row that we've increased the dividend, and our shares yield about 3 times the S&P 500 in terms of the dividend yield. So we've got good organic growth. We've consolidated Hess for a portion of last year, started up a big project in Kazakhstan, continued to grow in the Permian, grow in the Gulf of America. We've got a broad, diversified portfolio that continues to deliver high margin, low cost growth.
Mike, I think it's important for our viewers to know this is being done at a time when oil is not doing that well. Your numbers seem to have gotten in a way to have, I hesitate to do this, but I'm going to say it, more secular growth than the other oil companies that I see.
Well, we've certainly been focused on growing free cash flow. Some of that comes with volume, some of it comes with margin expansion. And as I mentioned, even in a period of declining oil prices, which we've seen over the last 12 months, we've been able to grow our free cash flow, which supports those distributions to shareholders. We're taking cost out of our business. We're becoming more efficient. We're only scratching the surface on what we can do with AI. I think that's the next leg of both efficiency and asset productivity we'll see in our business. So we're working across the entire portfolio to drive that growth in free cash flow.
I'm glad you mentioned AI, not just for what you're doing with it, but I know that you use the amazing natural gas numbers. Have any hyperscalers contacted you and just said, Mike, we need to take down a huge amount of your natural gas. Let's do a deal.
Well, we're certainly talking to all the hyperscalers about power supply. Absolutely. They're very interested in a project that we're developing in West Texas. We produce 3 billion cubic feet per day in the U.S. And we've got 7 of GE Vernova's largest turbines with secure delivery dates. We've got a site. We're into permitting, engineering, and we're in discussions with the biggest companies in the world, some of which you've already mentioned this morning, about a purpose-built energy park not connected to the grid, so it doesn't drive up prices for consumers, but scaled alongside of their data center growth to support their ambitions. So we're in contact with them later this year. We would expect to announce a customer and more definitive details on this.
In 2026? Really?
Absolutely.
Soon?
First power in 2027.
Wow. Didn't know that. Okay, I just want to get to Venezuela before I go to my colleagues. I know that there are things called productive participation contracts in Venezuela, including one that literally just passed. It seems to be that they can make it so that they can tell you how much you're going to make, but it sounds like you would be able to produce a little bit more. And under this, because you stayed down there, is there a possibility that you will be the most, like a Costastan deal? You'll be the guys. Because they're the ones you trust, they trust you, and you know how to do it, and you know how to do it without employees getting hurt.
Well, we've stayed when others didn't. We're getting paid back some debts that we're owed, and it does give us a significant head start, and the country has tremendous long-term potential. We've been there for most of the last 100 years, and it's got the potential to grow up to 50% over just the next 18 to 24 months. Our position does, on top of going from 50,000 barrels a day to 250,000 over just the last 2 years. We'll need some additional authorizations from the U.S. government in order to do so, but we see this as a valuable resource option for the future in our portfolio. And as you say, our focus remains on safe and reliable operations as always.
Mike, Rubio was on the Hill this week. A lot of discussion about security and whether or not the administration would put forward more military assets to maintain security. Do you consider it safe? I mean, the president this week said Americans will be able to visit soon. Do you see it as that kind of stable ground?
Yeah, Carl, we've been operating there for, through the last many years, and including when there's been concerns about military action and other things. We've got good, strong safety protocols and security protocols in place in the country. Our people are safe, and that's the first focus that we have. So yes, there are parts of the country that I would say are less safe. The areas where we operate, certainly we feel it's appropriate for us to have expatriate employees there as well as national employees, and our operations have continued uninterrupted through this entire period of time.
You know, I think, Mike, it's David, when people talk about security, though, they're also just talking about the security of my ability to operate in the country and not be nationalized again. I mean, yesterday, literally yesterday, the president there signed a law that opens the nation's oil sector to privatization. Is it your expectation that if you do make plans to invest a lot more capital, you're going to be able to get a return on that? Because in 10 years, that privatization will still be in place, or 15 years? How confident are you about that?
Well, this will evolve over time, I think, David. You know, we're still taking a look at this new hydrocarbon law that passed yesterday. Stability of government and the rule of law is very important for us anywhere in the world that we operate. We consider security, contract terms, the ability to get a return on our investment, commercial stability, regulatory predictability when we make investment decisions. And so, like everywhere, those things matter. I think we see Venezuela taking steps in a positive direction to address those issues, which will encourage investment not only from a company like ours, but from others that I think are also considering the opportunities there.
Right. And yeah, when do you think you'll actually have a better sense for what that law really means? I mean, again, as you point out, just signed yesterday, but obviously seems to be an important moment for the country.
Well, I do think it's an important moment because they recognize that the terms there have made it difficult for companies like ours to invest there. Our position on the ground has been primarily focused on recovering debt that we're owed, and we've been successfully doing that. But the growth of the production of the country is going to require new capital and companies, well, beyond ours to come in and do the same kind of a thing. And so I think that's what they're trying to address. It'll take us a little while to understand what's in the new bill, and then of course we're looking for other signs of economic reforms and progress and stability in government. And so all of these factor into our plans. We'll stay very disciplined on capital. We've got a global portfolio that we can invest in around the world, as we've been discussing earlier. And so Venezuela's opportunities will be stacked up against those others, and we'll have to deliver returns that are competitive.
All right, but just quickly, Leviathan, final investment decision, 2.1 billion cubic feet off the coast of Israel. Where are you going to put that? Where's that going to go? You need a pipeline.
We just sanctioned a big project at Leviathan, which is offshore Israel. This is an area that's a world-class resource. We've got a platform, Leviathan and Tamar, both of which we're expanding already with production that will come on later this year, and then a bigger expansion of Leviathan that comes on towards the end of the decade. This supplies the majority of the gas into Israel, a lot of gas into Jordan, and the growth will also supply Egypt, where some of this gas goes today, but a significantly larger amount will go in the future. So it's important for regional energy supply, regional trade, and security. And it's a beautiful resource.
All right, Mike, thank you. I hope your knee surgery, you continue to get better. I know it's been a bear, but I suspect that you'll be running around in a week.
Making good progress, Jim. Thanks very much. Great to see everybody.
Absolutely. Mike runs Chevron with a great quarter. I love that dividend. It is.
And thank you. We'll get to others like Exxon, Verizon, AXP, SoFi when we come right back.
Okay, well, gotta get unshook up. I only got 4 minutes to do it in. Oh, my body, it's so sore. Can't believe how much stretching can make you so sore. Shocks me. Look. I'm just can't stand cold. I'm too old for it. There's always issues when it's cold around here. There's a knife right there. Oh. These boots. It's the last year. I might use them for garden bedding, but mud boots from now on. I'll put mink oil on my next pair. They taught us that in Boy Scouts. Okay. Whoa, there's a $3 dip. That's more like a $5 dip from that knife. Trump names Kevin Warsh as the new Fed chair pick. Never heard of him. Apple going down. AMD down again. Watch AMD. God, look at that, 235. It still can go lower. It's way overbought, but
What do you got? Okay, one of the things
can't tell that to the fat cats.
the last about 18 months is American Express reports a fantastic quarter, and then the stock goes down, and then you have to buy the stock hand over fist. Well, here we go again. I'm probably down 10 at one point. You want to get started right here. You want to get 1,000 shares by 250 at the opening, and then pick it during the day. The worst time has been around 11:30. This has happened repeatedly, and it's driving me crazy, but might as well make money.
Okay.
Thank you very much.
That makes sense.
Thank you very much.
Thank you. And they agree as well.
Let's get the CNBC real-time exchange in the opening bell here this morning with the big board. It's the American Heart Association launching its inaugural retail giving campaign. At the NASDAQ, it's the Fashion Foundation, a nonprofit that recycles.
I really don't want to hear screaming. Watch AMD right it open here. Moving up. Retail traders. AMD. Good morning, Bobby Shore Drums. Good morning, matey. Good morning, the 10 people that are watching YouTubers. AMD's moving up. SPY's pulled back down to the VWAP. Towards the VWAP. We're at the 200 on the SPX. That's your first support. We're at the 200 on, getting to the 200 on the slash ES. Getting SPX off the 200. AMD's pulling back right here. I'm about ready to go long in this sucker. February 6th. Ooh, they're expensive. Nah. Too expensive. /ES double top. /ES double top. Beautiful. Trump nominated. Don't worry about him. Rich is back. Sing to Tesla? Let me see. I said Tesla would be a good one today. Maybe. It opened up. Well, something pulled back. Yeah, sing Tesla. Elon Musk. I love you. If you're a woman, I would kiss you. 430's resistance, a little under 430. Dang, look at that SPY. Jim's not nothing. I'm going to let this play out today. We just now hit resistance levels on IWM. We hit support on the SPX. It's pulled back. Now we're doing the retest after the breakout. And right now, the SPX has the 200 EMAs and SMA as support. There's more drama for the SPY. SPY let out with some spinning top, a hammer, and an inverted hammer, and a hammer, and a tweezer top. AMD still going. 245 is resistance. 245.71. We got a double bottom on Tesla. New robo-taxi safety data is out. Hello, YouTube. For I am Washboardjim, the thinking strategist behind the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and premarital sex. Premarital sex is wrong. I have high standards.
Technologies, working on a variety of different hardware applications, initially in the area of missile defense. And now all of this comes on the heels of an announcement a couple of...
Sorry, I don't want to hear you today. Shave your mustache. SPX did have a good run yesterday. After that huge knife. In ordinary cases, I'd like to see it pull back. And about half of it, of yesterday's dip, maybe a... Definitely, I like that spot right there where we bounced up this morning. That's a good spot. That's a real good spot. Actually, it's... If you noticed yesterday, I started making most of my money after I screwed that first trade up. I suggest not try to rush unless you're ready. You're scalping, and wait for the correct setup. We could get a double bottom and retest that double bottom on the SPX, same as the day low right here off the 200 EMA. So I'm going to patiently wait. I'm not in no hurry today. UPS just broke resistance. UPS just broke resistance. One more time. UPS just broke resistance. Not financial advice. What? Who's giving me financial advice? Oh, I got pictures of the carpet. How'd that happen? How can I see that? I forget. There they are. Oh, God. Okay, it's no big deal. Okay, here we go. You ready? Prepare ye in the name of the Lord. SPY has to hold VWAP. You ready? No. Dadgummit. It's up. Off to 63. Oh, funny. I think I cleaned this room up with one single quote. Dadgummit, there it goes. Shit. Well, I would have probably took that off the 200. I mean, off the VWAP. And it hit the 63 twice. Tesla needs to respect 424.91. See if there's any cleavage. Microsoft is up from the pullback. Now, it had a pretty good knife. Okie dokie, okie dokie. I wonder how much that would have paid off. Okay. Let's do the watch list here.
Down, certainly off the lows already. No, I take that back. Right now, the Dow
Ooh,
down.
Regetta down another 86 cents.
128 points. So let's get to the market.
RGET. See if I hit my alert. RGTI. $18.46 and we hit $18.42. Should I wait? Yes.
Moment. Jenny, some of your thoughts on the earnings that you're watching.
Okay, I think now we're getting ready.
That showed that perhaps that Mag 7 index that we tend to look at isn't necessarily as.
Ladies and gentlemen, we have now just broached, we just now touched a triple bottom on the SPX, my first visual pattern. It's a symmetrical flag. Do you understand? And we got the double bottom here on the SPY. Still waiting for the 200. We could bounce off this, but I'm just not convinced. We could bomb the heck out of Iran this weekend. Who knows? Our ITM's pulling back some, Randy. You got 1089 for support. If you're still in, are you in here? Uh-oh. Ooh, Randy. Is it a double pane window? How you spell pain? P-A-I-N-E? I don't know how to spell pain, double pain. Let me look it up. P-A-I-N-E? P-A-N-E. P-A-N-E. You spelled pain wrong. Oh God. Randy. If you need me to any help, let me know. We got a double bottom on Regretta. Oh, all right, Tim, yeah. RGTI has a double bottom. But I got to get that off here. I don't want to trade it. This could be a scalp, but it's not bullish. Boeing. Boeing pulled back any? Look at there. TIRX had that horrible outing yesterday. Jeez. AMD double top at the 200 SMA. AMD double top called it out this morning at 235.50, around that area. And now it has double top to the 200 SMA on the 1 minute. Yes. Don't panic. I do believe the market is in a correction, so we do need to be a little bit more cautious, in my opinion. But there's some opportunities that are starting to show up. As I explained that yesterday on some of them on my watch list. I went through all my red ones yesterday. And I think I had a couple I liked. Amazon was one of them. Amazon's up about $5 from my alert. $4. Almost $5. Was up $5. And I can't remember the top of my head which ones I liked. I know Amazon was one. AMD was the other one. PLTR was the other one. And Meta's down $16. Mr. Let's see what's green here. See if I can remember any of these. Love, Kroger. Kroger has to break. Not much green on my watch list. What's that? Starbucks. I'm starting to have a little change in heart, but definitely we pulled back. They're pumping the Starbucks from 89 all the way to 116. No, nobody has the same number. No one. 120. No one, I mean, none of them are even close to each other. So that's something I want to bring up. If I see the fat cats with a common denominator on a resistance level, on an upgrade, I like that better than if I see a lot of mixed numbers and nobody matching with 5 or 10 points apart from everybody. That, you know, nobody. Coffee house opportunities could double over time and average unit volumes grow. Okay, we're at the 200 here. Randy, let's see if we can hold this support. Pay attention. You can't trade? You're too flustered? Take one hit. Tell your dog you love her. And kiss it on the mouth. Oh, I'm going to put the SPY up here. Okay. SPY, January 30th, the 694 strike, or the 693. $693 times 5. 5. So it's SPY 693. I've got January 30th, and I got 5 on order. I want to see if we can hold this. Still might be up too much. $14 outside. $10.89, Randy, on your RITM. We at 90. I was off a penny. I'm down to 123 here. See, this is encouraging. These two pullbacks with that hammer. And it just wasn't, I didn't take it. But now we're coming down. So we're going to do something here shortly. There it goes. These are the 693s off the 200. and we're squeezing out right now. You can tell it's getting ready to squeeze. We have higher lows. Let me see. We barely have higher lows. That's bullish. I'm at 162 now from 137. This is off the 200. How's he do it? Jim, my grandma loves you. She says you look like Dick Clark. Well, she's right. Can you believe I'm 64? Oh, there it is, 177. Woo! Nailed it. I'm not scared, Randy. 197. $194 out. I waited for my right opportunity and I took it off the 200. Oh, is there somebody on mic? Somebody on mic? Oh. Yeah. Livid Goose is on here too. Let me fix this. If I can remember how. Volume and voice. Man, I haven't changed this around in a while. Fuck, I can't remember. Well, now. I'm having a brain fart. Oh, I know what I'm doing wrong. It took a minute. Speak. Somebody speak. Not yet. Technical difficulties.
It would take those 77s and move them up to like 80, 81, try and draw it down.
Can't use that. I'm having technical difficulties. I don't know what's going on. Try my other set. It can't work either. No, these ain't gonna work. Now what happened? I'm strange. I can't get my headphone working. Let's try this. Yeah, I don't know. I have the freaking wrong headset on. Triple bottom on Starbucks. I can't get this microphone working, so headset. I don't know what the deal is. I'll be right back. Oh, maybe this is turned off. What's this? Somebody speak again. I'm going to see if I got my... There's an on and off switch on my headset. $540, yeah, that's on. Somebody say hello. Rocket got wrecked. And what was that other one? Lemonade? LMND? I haven't heard that one been talked about lately. LMND. Yeah, it's still up here. God, it's cold in here. I got to get back on track. I got a little on and off switch on my mic, so we'll see if that's the problem. No, it didn't work. Oh, well. PFSI. Wells Fargo maintains overweight on Penny Mac financials. Lowers price target to 135. Had earnings. Worse than expected earnings, Randy. Take it off your list. PFSI. We're at the 200 though. I mean, we're at a definitely support level on the weekly. Right now, a little bit lower, but not much. It could have had a pretty good enough correction. Earnings sucked. And we're at a support here on also right here. That went on for about 2 months, 3 months. So we're at a 3-month support also. Right at 92.88 to the penny. I want to see it hold 92.88. 200 EMA weekly. Um, 92.88. Then Rocket. Biden created a housing crisis with the illegals, so we have probably about 10 to 15 years of catching up to do. Get back to normal with the housing market. Well, definitely at my support level on Rocket for now. I mean, I have 1776 from a previous alert. And this had one heck of a run. So, bottom line, I'm going to say 1634 for the low support, 1776 for your first one. And that might not even hold. This had a real good bounce, 261 all the way to 24. Damn headset. I'll go out and get me a new headset tonight and see if that's the issue. I don't know, it might be my computer. Logo, audio, input. Oh, there it is. That should work. It's unlocked. The video. We got a Meta coming back to lows again. Okay, we have a pullback on the SPX here. Prepare ye. I'm not very bullish, so I just want to let y'all know that. I'm not. The SPYs here at 97 cents. Well, they were. Damn it. Should have bought them. I'll put my slippers. We'll be right back. Turn this heat up. Yeah, lowest support I have right now in Rocket is 1634. 1640 for now on the 90-day. Burry is a piece of shit. Nvidia. Tesla. Nvidia did bounce off the 200. I don't know if I mentioned that or not. AMD's approaching the 200 on the number 4. If you can count to 4, you might make a little bit more. Minus. Randy, I'll mail you some of my chicken soup. That'll make you feel better. Jimmy called this pullback here. Oh, I just now noticed something, maybe. No. It's the wicks. I was looking at these 3 black crows, and look how that thing rebounded. SPX. I've almost got them too. Almost. Three black crows with a hammer and an inverted hammer. Now, that candle is bigger than that one, so I don't know. That would have, I took that. And it's 9:37. I had 2 eggs with sleaze this morning. I don't know why my headset's not working. I haven't tested it out in months. Now what? No. Randy. Ask your wife if she wants you to buy Walmart. Honey, you want me to get Walmart? Recession stock. Yeah, you don't want to piss her off. Well, new high on WMT.
Morning movers, be the first to find out what's shaping early market
Resistance
action.
levels.
Check, options corner.
IWM's at the 200.
Technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Barnes, coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. Alex Coffey is here. Happy Friday to you, Alex. So we're seeing a little bit of a pullback as far as the major averages are concerned, but it's not all that bad beneath the surface. Just talk us through some of your takeaways in the first hour here.
Yeah, I don't think that the story is written yet for this day. It's a pretty sluggish start, all things considered, but it's been a whirlwind of a week. So many news items, from earnings to the Fed to a new Fed chair and more. About a third of the S&P 500 names are advancing so far this morning. We'll see if that firms up, and that could have a lot to say about how the day shapes up. From a sector standpoint, both consumer sectors are higher despite being down over the last 5 trading days. And energy is barely green right now, but it's the standout performer. It's the only sector up year to date, more than 10%, with a 13.2% rally so far this year. So it's been about the most consistent thing that we've seen. It did just flip red, but it's pretty close to unchanged as we speak. So I would say sluggish start, but you can tell by looking at the heat map here, there's not a lot of bright colors on the screen. And then what that tells me is it doesn't take much if this day starts to harden in one way or the other. You can see a pretty swift change in terms of the overall market movement without a whole lot to push it one way or the other.
It's been a big week for our Mag 7 with, of course, 4 of those names reporting. Next week we'll get the next cabs off the ranks as far as Google and Amazon is concerned. But we do have Apple down despite what was a record quarter there. Some really nice sales. Meta lower, perhaps taking a bit of a breather off the gains we saw yesterday. But just talk us through some of the price action, what perhaps is driving some of that today.
Yeah, I mean, today it's sort of the settling of the dust after what was a really big week for many of these names. Clearly, Apple's still sort of responding to that news as it was broke, of course, after the close yesterday. But I came into this week thinking that the biggest market-moving factor of the week was going to be Microsoft's earnings, with the only thing that maybe would have a say on that being Meta. And I think ultimately, given the size of the moves that both of those names had, I feel pretty vindicated in that. Microsoft, of course, I couldn't have envisioned a 10-12% decline post-earnings coming into this week. One of its biggest moves in the history as a stock. But all things considered, Microsoft, big drag. Meta and Apple so far this week have actually been net positives. Nvidia's been a net positive. Tesla's pretty close to unchanged. Today, though, Magnificent 7 providing about 40 basis points worth of upside if you were to index that. So certainly helping keep this market near unchanged.
Yeah, I saw a stat out yesterday. Microsoft lost $357 billion of market cap in one day. That was the second largest ever drop in market cap since Nvidia after DeepSeek. However, the NDX didn't close down too low, and that was perhaps thanks to Meta, which really helped out and saved the day there as far as balancing things out. So really interesting perspective, Alex. Really appreciate it. Thanks so much for that. I'll talk to you a little bit later. Let's take a look at some of the movers in regional markets. Shares in Adidas are jumping 6% after the German sportswear company reported preliminary sales numbers and announced a $1.2 billion share buyback. Q4 currency neutral revenues for the brand increased 11%, which was better than some expectations. Analysts are still concerned, though, about the guidance. Adidas will be out with full results in March, but for now, the numbers have been good for the stock, which had been down 45% over the last 12 months, although these ADRs are shedding right now in what is a broadly down market for us here. But it was a mostly down day out in Asia.
SPX triple top.
The bright spot, though, was, you guessed it, the South Korean Kospi, which managed to eke out a slight gain. Stocks briefly hit the 5,300 mark during the session to touch an intraday high. Some of that strength coming from SK Hynix, which hit a new high, rallying over 5% to cap off a big week for memory earnings, to say the least. But Chinese stocks were the underperformers to end the week. The Hang Seng Index snapping a 7-day rally, closing down over 2%. Shares in the companies in the business of metals and mining were a big drag after the so-called gold mania cooled off and other commodity prices got beaten down. Tech names like Alibaba also sold off. Chinese Apple suppliers were also weaker despite the company's record sales. All right, moving on and coming up, it's time for Inside Out. We'll take a closer look at Deckers after a strong earnings report and bring you an example trade when Morning Trade Live returns.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward
That SPX triple top
every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near term catalyst.
Next Gen Investing, 1 p.m.
Soon I'll be walking into the kitchen and preparing my lunch. It is 16 degrees here. Nvidia, high of day. Remember they came out yesterday bad-mouthing Tesla? The competition, and this guy says it. What'd Jimmy say? Jimmy said Friday was going to be a good day. I said it yesterday. I said your number one watch should be Tesla. Okay, well, I'm going to go make my lunch, and I'll be right back. We had a V recovery on SPX to the orb and hit my resistance level that I had on the triple top. We pulled back. So you triple top, what do? You scale out or you get out. And then you add on the dip. Unless you're just real long in it, then you just wait. Here we are at the 200 SMA. That's the SPX. '30th. The 6980s, 360. Now this could drop more. $350. We got a kind of a head and shoulders right there, but kind of. We got the top of that third crow right there, so that's where I'm going to put my support for now. That first crow. That's that pattern. 3 black crows. And 340. SPX, the 6980s at 340. 360. Back to 390. Take it. Come on, hold it. I gotta hold this support. All right. If I don't hold it, it'll drop all the way down here. Oh, shit. I keep wanting to drink something. I don't have nothing. 295. Well, I think I'm gonna. It's a pretty good drop now. It was support. We got a bull flag right there on that candlestick. Could get the reversal here. This in here is a pretty nice little candle. Almost like a squeeze. I'm back to even. I should have added. I had good 380. I could have got 390 for sure. 380 maybe. 280, I mean. I'm going to go turn on my iron skillet and get my soup out and nuke it. I'll accept a $70 loss on this. That's got one at 340. We could come back up and hit the head and shoulders. First stop would be right there at 59.53. Headset don't work. Let me try something here. I tried that. Oh, that's that. Oh, wrong kind. 270. Yeah. Come on, Jimmy. Woo, Marley. You get a 10. Down 50. I'm still holding on it. We got kind of an inverse head and shoulders. But that turns into a two-headed snake. Three-headed snake. You got your shoulder lines. Head, and then your shoulder. And right there, and right there.
Revenue at $3.03 billion is way above the estimate. Tremendous growth. Adjusted gross margins at 51.7%.
SNDK.
Way better than the 42% that was expected. EPS unadjusted, $5.15. On the adjusted basis, $6.20. But the guidance, I think, was really what got this move excited for current quarter. So we're not speculating out for the end of the year. It's just like, hey, we've gotten some information. This is what we're on pace for. This is what we think it's going to be for this quarter, which is third quarter. Revenue between $4.4 billion and $4.8 billion. So monster sequential growth. And then the adjusted EPS, it's like this is one of those ones where you're tapping the screen, you're refreshing, like, is there a typo here? $12 to $14 per share for the quarter. Just incredible. It's basically doubling quarter over quarter if
That's
they were to
good.
get sort of in that midpoint range.
That is good.
But, and this is the but, it's not 13%, but it's like 10% off its intraday highs. This is a volatile stock right now, so bear that in mind. Incredible blowout home run, and even with that, a 10% drawdown intraday.
And honestly, I had that same reaction when I saw that EPS number. I thought, it has to be a typo. Maybe this is fiscal year or not for Q3, but it was, and that's what they're projecting. And analysts now coming out and saying they think that they may even be able to beat those estimates.
Yeah, analysts are excited about this one. Joseph Moore over at Morgan Stanley say despite a persistent march higher in SanDisk shares, earnings power continues to keep pace. And they say that the earnings at the midpoint reflect, for that guidance, reflect an environment that's strong. Big time price target adjustment from 483 to 690, overweight rating. But my favorite was CJ Muse over at Cantor Fitzgerald. $800 price target, overweight rating. And I quote, with extremely elevated expectations into earnings, SanDisk delivered the goods and then some. Now, I could keep going. I guess one that I think stands out, Melissa Fairbanks talks about her upgrade as one of the most delayed in the history of upgrades, but they do go to outperform from market perform. Price target set at 725, and they say even after all this, they still see opportunities.
Yeah, Bernstein up theirs to 1,000. So, I mean, some really massive moves, a lot of bullish sentiment after this report. Alex, thanks for breaking down those numbers for us. Alex Coffey, our senior equities contributor here on the network. I do want to broaden it out, though. We've heard a lot today. We've gotten a lot of information this morning, including earnings. So have a more macro conversation. Joining us now, Andrew Ahrens, founder and partner at Synergy Advisor Management Group. Andrew, wonderful to see you. Thank you for taking the time this morning. I'd love to get your thoughts here. We're seeing a sea of red, but we've gotten some arguably strong earnings from Magnificent
there's
and
knife.
other big names that have reported. We also know who the new Fed chair is going
Now.
to be. What are your thoughts on the action we've seen this week?
Yeah, so I mean the action's been mixed, obviously.
245.
Some really good numbers
from a lot of the companies out there. But
Got
again, you know,
340
with
and
AI,
245.
there's a lot of you know, doubt as to what's going to happen in the future and how quickly these companies.
Shut up. I'm talking. So I got SPX scalping the lotto strike 69.80. I have one at 340 and two at 245. Prime Washboard Jim. And then we just hit the 200. Back to even. There's a Head and Shoulders right there. And people at the IRS are all pissed off right now because they don't get to work from home with their cozy jobs, making $100,000 a year. I mean, they are pissed. All they think about that they have to go to work. I'll be right back. Oh. $240 right now. Down 120, well, $190. 75. Well, shoot. Here we go, retesting that right shoulder. This is a big deal right here. This is do or die now. We got two touches here. should be it. Come on, you dog.
Well, Andrew, thank you for being with us to talk macro and also.
You got the right shoulder twice. It should bounce here.
Andrew Aarons, founder and partner at Synergy Advisor Management Group. And thank you again for being with us.
If not, we're going to have double bottom, and I got to get out of it.
Next, we've got the big three stocks, three charts. Kevin Green will take us through the technicals. Tim Bowen will join us to take us through his trades for SanDisk, Alphabet, and U.S. Rare Earth. That's next on Trading 360 on Schwab Network.
U.S. Rare Earth. USAR. USAR. US. USAR. US. US. USAR. Put it on watch. And don't forget, Rare Earth. We love our environment, but we're going to tear it up looking for these dirty cobalt minerals. Break it. Break it. Let's go. Go. Got a triple top coming up.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalini.
No, it ain't.
Live on the floor of the New York Stock
It's a sneaky snake trading strategy. Ah, shit.
The stories that
Triple bottom.
move. Minute by minute breakdown of the biggest headlines.
Now, it's pushed its limits.
Trades that matter. As the bell hits and the markets react in real time, Opening Bell
God
live
damn
at
it.
the NYSE right when it counts.
Okay, last support. And we're at the orb.
She's got your smile, Carl.
So I'm going to stay in it.
One brokers here to welcome your new
See if we can hold the orb and go back up.
They have everything we need.
I'm staying in it.
In one place.
I can set it for college fund.
I've been learning about the trading strategies. Schwab helps me generate.
By adding.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
I haven't got to watch that commercial yet
Invest your way with Schwab.
for my approval.
Welcome back to Trading
1.90.
I'm Marley Kate.
Now I got
It's
6.
Time for the big 3. We've got 3 stocks, 3 charts for you. Kevin Green joining us this morning to take us through the charts. And here to take us through the trades is Tim Bowen, Chief Technical Trainer at StocksToTrade.com. Great to have you both here. Tim, would love to close out the week with a big picture thought on the market. We've got several Mag 7 names, some other big bellwether companies reported this week. We've got a new name for Fed chair. A lot has happened. We got a Fed decision, or lack of decision, I guess we should call it.
Yeah, so really, kind of encouraging to finally get the whole Fed thing out of the way. I'm a big believer that a lot of the uncertainty, there's that quote, markets hate uncertainty, and this whole little feud between Powell and Trump, at least it's done. I mean, at the end of the day, we'll see if it's the right decision, if it's the right person, but that uncertainty is behind us, and we can kind of move on from that. Speaking of earnings, was very encouraging to see a lot of these big winners this.
It's funny how they write all these uncertainties off. Big talk for months about Powell, and all of a sudden, oh well, it's no big deal.
Agents, particularly Claude Bot, it's been renamed Bolt Bot. Got renamed again, but it really kind of goes into another idea I have with you about compute hardware. I mean, like basically, you've got enterprise, you've got commercial. And now you've got consumers just buying up every bit of hardware that they can get their hands on to run local agents and cloud agents and really take advantage of AI and kind of set up another one of the ideas. So one of the things that's most exciting is I look at, I've talked about the golden age of America, the second golden age many times, but we're setting up right now with all of these AI agents. I mean, it really reminds me of like a combination of the Renaissance and the printing press, bringing the democratization of education and tools to everyday people, and then the industrial revolution to be able to create these goods. It's like a combination because you look at Claude Code and Vibe coding. I built 4 projects last week in about 15 minutes apiece that I didn't have to go to my development team to build. It's just an amazing time. Now, for those of you that don't want to have your local compute and run all of these agents, what's exciting is these themes are going to create so many trading opportunities, which at the end of the day is what your audience cares about.
Certainly.
Richard,
and
you still on here?
That if you got into this name at any point since February, you're doing well. SanDisk, of course, we're talking about up more than 12%.
Did you get your Tesla?
Right now, your first pick in the big 3. One of the top performers today, blowout earnings. Walk us through this one, Tim.
So kind of going back to what I said, that idea behind compute being, like I said, whether that be desktop compute, enterprise compute, or, servers, etc. Listen, memory, the flat out, the explosion of AI, the explosion of content creation every day, that data needs to be stored somewhere. This is very similar to
double bottom
idea I shared back a few months ago or a few weeks ago. Same idea. You can't expand and create more content, create more agents, create more data without some place to put it. And obviously that's SanDisk business. And then you look at that chart,
double bottom,
kind of like a no-brainer type idea. Now,
that's the whole.
I know it's parabolic, huge.
You put a stop here.
But I just don't see this story changing anytime this year. So even though this stock's in rare air, I think you look back in a few months, end of the year, and be like, it wasn't up too much back in January.
All right, so KG, as we take a look at SanDisk and this, year to date up 157+%. Take us through the chart here, because this chart is not going to look like many others that we feature.
Yeah, obviously it's making higher highs as well as higher lows. So the chart's obviously bullish. We've been talking about it pretty much on a day-by-day basis. If you look back at the 1-year time frame, obviously, if you look at the left-hand side, that price action is going to be very, squished here because of this parabolic move to the upside here. But we obviously are seeing a breakout, and we have been in a breakout here. And we do have a primary trend line that actually has been broken because of these earnings here, this kind of rising wedge pattern that has now officially broken out. And what you're kind of looking at is today's candle. Obviously, we're still up about 11%, but we are off of the highs here. This could actually result help in potentially a island reversal candle and it's actually kind of exciting.
And Tim, I think we may have lost Kevin there. We'll try to get his
Okay,
feed.
I thought maybe that was me.
I did too. I adjusted my earpiece just to make sure, but certainly with SanDisk, I'm not sure about you, but when I was covering these numbers live on air yesterday, I was just talking to Alex Coffey about this. I actually I was refreshing the wire feed, and then I went into the report itself when I saw their EPS number come across, and I thought, that has to be a typo. That can't be next quarter. It didn't quite track for fiscal year, but I thought someone's messed something up here. I mean, what were your thoughts when you saw those numbers come across?
Well,
I was freaked out, man.
I expected good. I didn't expect that good, but kind of going back to what I said, and this is where people, and I've spoke on Schwab about, it's still funny. I remember 2 months ago, everyone was calling AI a bubble except for me, and I was like, this ain't no bubble. But it kind of just, when people compare it to like the dot-com boom, I mean, sure, you had companies that were, hardware companies like SanDisk going parabolic back then, Cisco, the 3Coms, the Nortels, a lot of these companies are dead and buried. But I think what is so much different now, again, is this is so much more real. I mean, it isn't just someone adding .com to the end of their name and saying we're an internet business now. It's a company like SanDisk has those types of ridiculous earnings. It's a lot like NVIDIA. We talked about that all last year, where they're like, we can't produce enough of these chips to feed our suppliers. Everyone's standing out there saying, give us more. And I think you're seeing the same thing with SanDisk. We need more storage. We need more memory. What can you guys produce? We'll buy it.
All right, let's move on to another big name, a big name we're going to hear from next week. In fact, you're talking about Alphabet here. I know Alphabet is one of your top picks for the year, Tim. Are you still feeling good going into earnings?
Yeah, so, I need to apologize, Marley. I didn't have my bull mask back on the Halloween episode. Major fumble of last year. I let you down. But I still remember on the Halloween episode, Google was really my favorite kind of what I would call mainstream AI. It's not a startup. It's not something that, as much as I love Anthropic and Perplexity and some of these, I mean, they're not publicly traded. You can't buy them yet. Google was my favorite idea back then. And then you kind of look at their main competitor in this kind of enterprise space, in my opinion, was Microsoft. Microsoft fumbled the ball this week. I think that a lot of that money that came out of Microsoft the last couple days is going to flow into Google and keep pushing it higher.
All right, KG, so as we look at the charts here for Alphabet, Google, what are you seeing?
Well, Marley, I was going to have a bearish take on SanDisk, but obviously the rug got a little pulled on that one. Look, for Google, this is actually a little bit of a more constructive stock. Obviously, we have seen this pullback pretty much this time last year, like all stocks for the most part of the market did. And now we have a primary move to the upside here. That trend line has been holding ever since this bull run actually did take place from 140. Now, what's nice about Google, or Alphabet, if you will, is that throughout this bull run, we actually have seen pretty decent bull flags, or basically consolidation patterns before moving higher, moving and checking back on that trend line or checking back to a key moving average before moving higher. Now, right now, you could make the case potentially setting up for a double top type of pattern here, maybe a hanging man candle that does take place here today, which would actually be a little bit more of a reversal candle. But you get a little bit more confident that you actually have some structural area support. That 50-day moving average in yellow sitting at around $318 going to be your first area support. Be mindful we do have a gap to the downside still. It's pretty far away from where we are at right now, around that 215 to 225-ish area. MACD not really doing much. RSI is actually making lower highs, so the price momentum is kind of moving to the downside. But at the end of the day, the primary trend is still to the upside here, and once again, the fundamentals have been able to align for Google at this point in time. So I would say bullish for the most part. You got to get a breakout above that 340 level and confirm that on high volume in order to make sure that this run continues. And if it does, I'm looking at 360 as the next area of resistance.
All All right, and we're just below that 340 level you highlighted right now. We're at 338.23 for Alphabet. Your last pick here is one that had some big headlines recently. USA Rare Earth, the government has taken a stake in them. They're the latest company and a part of this reshoring effort to reduce some of our reliance on China. But they had some move to the downside higher today. They are up 3% and up 90% in the last month with that announcement tied in. But we did see a bit of a pullback as well.
First off, KG, I need to apologize. I heard you were starting to flip kind of bearish on SanDisk, so I had my Claude bot hack into your Wi-Fi and shut it off. So I do apologize for that, but, just for future reference. Anyway, back to USAR. This was a stock that showed up last Friday on my one of the algos that I've built.
Quit flirting with her.
Using a lot of these AI tools. They kind of flagged just based on price action. So I bought it last Friday.
It's inappropriate.
We got that news of the government stake over the weekend, big gap up, but then I'm still kind of looking into it.
Okay, let's go.
There was this Reuters piece that, they keep editing real time that was very bearish.
It's going to be nice now.
Rare earth plays. So a lot of people panicked out of USAR over the last couple of days, and now that stock is basically back to the same level it was last Friday. And I shared this idea over the weekend. A lot of people were like, Tim's going to gap up huge. I missed it, and I'm like, yeah, I know, but it was there Friday. So I kind of look at this right back to last Friday's levels, rare earths, government stake. I think you got a gift on that Reuters piece that pulled it right back to the same levels from last Friday.
All right, KG, as we take a look at USA Rare Earth, an interesting company. They're up 93% year to date. Last 12 months, 81. A lot of that move tied to this stake from the government here. But as you look at the technical setup, what does it look like?
Yeah, obviously it is pulling back, but it's pulling back to an area of support here. We did have that blow-off top that we had back around in October of last year, sitting at around $43.98. We did see a pullback, a basing out pattern for about a month and a half or so, trading between $18 to the upside, to the downside, $11.50. That has actually been a pretty key area of support. And then we started to see this move once again to the upside, hitting around that $31, $32 level. It's pulling back right now. This isn't a formal cup and handle because obviously we did not go back to those highs of $43, $44, or $44. But you could make the case that if it does come back to that 20-day moving average at around $19.75, maybe it does get a technical bounce. RSI kind of breaking down a tad bit. MACD kind of rolling over here a tad bit. I mean, technically speaking, once again, maybe coming back to those moving averages before getting really pulled up in these names. But at the end of the day, it does have some positive news catalysts over the last couple of months or so. And we'll see if this one actually does kind of fare out. I would just kind of caution MP Materials, LAC, once those announcements did hit around the U.S. government actually providing some involvement, those stocks haven't been trading at those highs ever since. So maybe this is one of those buy the rumor, sell the news type of an event. But 20-day moving average is the first key area of support for technical downtime.
All right, well, KG, thanks for that closer look and also for flagging some of the reaction we've seen from companies with similar investments there. I want to thank both of you, though, for being with us for Big Three today. Of course, Kevin Green and Tim Bowen, the Chief Technical Trainer at StocksToTrade.com. Coming up next, we are going to spotlight the Mag 7. We've already heard from 4 of those names. They reported earnings this week. We'll get 2 more next week. We'll break down what we know and what we can expect coming up.
Man. Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live
Come on,
breaks
baby.
down the
Let's
macro
go.
moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight Mag 7 earnings. Joining us now to help us do that, Ali Mogharabi, Senior Equity Analyst at West End Capital Management. Ali, great to see you. We heard from 4 names this week. Good reports, mixed reactions here. Of who we've heard from, what report sticks out to you most and why?
Well, 2 of them, and that's mainly because we've gotten some pretty much opposite reactions, right? One of them is obviously Microsoft. In terms of their aggressive CapEx, they remain aggressive in terms of spending and investing in AI. However, the question is their dependency on OpenAI and whether they can actually generate enough ROI, and this is in terms of revenue. And this is where the Azure growth comes into play, where Azure growth sequentially, it appears that based on their guidance, is not necessarily going to improve that much. But I would say, anything over 35% is still very, very impressive. So
150.
So we certainly got a negative reaction to those guys. But then you've got Meta, where they continue to invest aggressively in AI. However, at the same time, internally, not necessarily through selling the AI technology, but internally, they are demonstrating that all of those investments are actually generating some returns for those guys. So you saw the ad prices
VWAP on /ES
go up because of this the AI generated content and so forth. So and obviously we saw a very good reaction.
Okay, I'm back to a resistance.
They are pursuing the same types of strategies in being very.
This will get me close to even, or it did. Right when I hit that 63, see how it pulled back? Damn it. Yeah. That's brutal. Could add another 12 at 115, but I didn't. Right now I got 17 in it.
However, it is also made clear that Microsoft is working with Anthropic also. So they're trying to basically minimize,
Get my
or I should say,
phone.
lessen their dependency on OpenAI's technology too. And internally, they're also working on their own LLMs. So initially in the early phases, we saw Microsoft certainly benefit as being the cloud provider for OpenAI, but now it's very, very high dependency on OpenAI is being questioned.
And with Meta, you mentioned that CapEx number, that huge number of up to $135 billion for their spend. Investors seemed much more comfortable with that nearly doubled figure than what we saw in reaction to the last report that we got from Meta.
I
What
missed you this
specifically in
Christmas.
this report do you think justified that confidence and the more positive reaction we saw this time?
Just the revenue growth that they generated, and again, if you think about it, the AI, Meta is a pretty good example of how they're utilizing the AI to not necessarily sell the technology, but the technology itself enables for them to improve their offerings. And what's their main offering? It's basically the ad placement, and to a certain extent ad creation, the conversion rates of those ads. And AI has helped them improve significantly on all of those fronts, and that's why you see ad revenue continue to grow at just amazing rates. So that's the main explanation. Now the question still remains with Meta that its business is not diversified enough yet. You can compare that with Google. I mean, Google has many other platforms. It has a much larger ecosystem, where Meta still only has that ad revenue to depend on. So obviously they're trying to progress more towards the enterprise side with WhatsApp, and we'll see what happens there. They haven't necessarily made much significant progress, I should say, the last 3 to 5 years, but they're moving in the right direction. But I would also say, though, maybe as we go further along, more focus should be shifted onto Meta's balance sheet, because they are basically, their free cash flow generated this year, according to the consensus, is going to be very, very low. I think it's going to be around, 12-13 billion. And that's significantly below last year's nearly 50 billion and the year before that. So, and at the same time, they've got some off-balance sheet.
I'm gonna go to my watch list. Oh, here we go.
They're raising debt and so forth. So I think
we're back to the triple bottom.
May begin focusing a little bit.
So we got the triple bottom, and we got the 63. So we got a hard resistance here. If this breaks like now, we're going to shoot up fast. But if you're in the hole a little bit, put your finger on the mouse. Because if this breaks this is very strong. That's a very strong impact right there on that one. Should have pulled back, but it didn't. Still can, because that triple bottom resistance. But if we break the 63, it's an easy shot to 64, 69, 44, 43. Or let's say this, 69, 44, 44, 44, 44, 44, 44, 44, 44, 44, 44, 44. How'd you like that, Funk? We got the 9 across the 21. Got a symmetrical flag on Apple. We got a 1, 2, 3 on Meta. We got to bounce off the 200 off the NVIDIA.
is sticking out to you?
We're at 170.
Yeah, as I look at the market overall, you see the down arrows, just the selling across the board here. Risk off kind of day. And we are seeing, I mean, we watched Apple, which is moving just
You got the
slightly, and
VWAP.
also Visa as well. Those are two names that have been on the move. I just think the big picture, the numbers that really stick out.
Now I got 10, 12 of them at 115. I could sell them, and then if it dips, I can buy them back in, or I just hold this and hope or think that we'll break the VWAP. I don't want to use the word hope, but maybe manifest the breakout of the VWAP. Or I sell them and buy the dip. That's a SPY. Slash, you guess, is at the VWAP. Her nose looks different too. Woman shares moment she was detained at airport when agents claimed her passport photo did not look like her. Like, no shit. There ain't nothing in there that looks the same. It doesn't look like the same woman. Not even the chin, the nose, the eyes, I prefer that over that any day of the week. We're at 170. At 200 exit idea. Judge. That was the exit idea right there. Did you see that big gains? Magnificent. I sent you a message in the room. Nvidia. You heard me. So I didn't make a lot of money on that trade. Not a lot at all. Jim, you make the best frickin' soup in the world. I think when I retire, I might buy a soup truck and feed homeless people. Just stay away from Tampon Tim State. You know, that's the only politician I ever want to punch out. And I said it. YouTube. I can't help it, YouTube. He asked for it. He called me out. He said he'd kick any Republican's ass. Well, come on. I want it. Do you remember me doing those leg exercises the other day? My legs are killing me. 50 reps of them stretches. I couldn't believe it. I've never felt so sore working out, ever. Oh, Jenny Horny. Back at 1:15.
Short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
So this was my strategy. I'm going to go over the watch list.
I have a question for you.
Sure.
Dad.
When did Granddad first start investing?
God, I hate this.
Granddad had an account with Schwab before there were branches in the area.
The most perverted family in the world. That family right there. I'm sick. Okay, we got a head and shoulder, kind of a head and shoulders. We got a right shoulder there for sure. So let's clean this up. Let's get back in this baby. Got a buck. There it is. Okay. There's the right shoulder right there. Lotto. SPX scalping lotto strike, same one. 69.80 at a buck. There's the right shoulder the second time. So this has failed me once. Did it? No, it didn't fail me. Yeah, it did. Yeah, it did. Failed me once before. Right there. Come on. Fuck. This is very important. This is one of my favorite trades. And I don't think there's any books out there that talks about this trade. And it's very important that you listen to me here in the next 10 minutes. I was talking to a guy last night about the strategy. He says he has a hard time reading these inverse head and shoulders. And I gave him 2 clues. I said, they're not always horizontal. And the second clue is don't take it off the first break. Be patient enough to take it off the second pull back on that right shoulder. So you could have scalped it to here to the VWAP, which I did. And then got out at the VWAP. So it's important that you know that VWAP, how important that VWAP is as a resistance level. If you don't have a VWAP chart, get one. And put it next to your SPY, SPX, and IWM. I don't know about the IWM, but... So I'm up 150. I'm new to trading, and I was talking about this yesterday. You're on a down streak. We had 2 good trades after my speech, and there's the 3rd one now, and you get out of the trade and just make $150. But you got to buy 10 contracts. I'm going to see if I can take this up to triple top and hit this 200. So I'm going to draw a trend line from right there on that body to there to that body, and that takes me right to the 200, and that's the 200 SMA. So that's my exit idea. I don't know what it's going to do. Oh, yeah. Ah, shoot. Should have went off right there. Now we got 3 touches. I don't know about that. It's been too hard for me. And everything. NVIDIA is at the 200. We got a triple bottom here on AMD. Kind of a, it's a wedge. Not much of a wedge. Very little bit. Very little slant down, but a triple bottom here coming up on AMD. Still in the symmetrical flag on the Apple. Coming to a double bottom wick on Meta. SanDisk, I need to see a lower support right around 553. So I got another $40 dip tomorrow morning or Monday morning on SanDisk for scalp. This here's support level. How'd I get it? Pull up the yearly and the 90-day. And that previous resistance now becomes support. And you could get it off the 9 or off the 50 SMA or the 63. I'm not having a good time here. Got double bottom. Time to add and hope that holds. Double bottom. SPX. Prepare ye in the name of the Lord. $69.26.59. $0.75. .75. Double bottom. Had 70 and 75 and I took the bit. Double bottom in every way. Double bottom. Come on. Gosh, what a... Oh man, I see your sig. I see the 10. Livid goose. I'll be right back. I'll turn on this here radio, so. Oh gosh.
Interesting to see the adoption now. You know, that brings up the next question is, are we going to be able to vote on a Fed governor in the Senate until, you know, the whole, mess around Powell's, what's happening in terms of what, you know, he's spending on in terms of the Federal Reserve, you know, until that gets cleared. So we've already heard that from Tom Phillips that, hey, I'm not voting on this until we get this cleared up. So I think that'll be the next interesting data point to look at is does that change and kind of how does that affect the Fed nomination process?
And that's probably the next thing that's already popping off in the prediction market, say poly market and call sheet. But once again, I need to just continue to just peruse those. All right, let's talk about the metals. Some shine coming off there. Gold and silver getting hit really hard. Silver especially down 18%, broke below that 100 level. Gold breaking below $5,000 an ounce. Kevin, what's your take looking across the metals?
You know, I heard Stephen Myron was just on television, and he made a statement that I have some experience with because of my history trading the grain markets. These are not big markets, so they can really move. And I think that's what you're seeing when gold ran up as high as it did. It was a 90 on the RSI. And so obviously gold rallies, a lot of the metals follow along, but these moves in gold and even bigger in silver, nothing short of incredible. And we knew these markets were starting to get a little thin and a little volatile, but man, these moves are massive in terms of what they're doing. And why? Well, we really don't know. We have some theories on why they were going up, but we don't know for sure. And we can have some theories on why they're going down, but we don't know for sure. But it was, from a relative strength perspective, seriously overbought. And so the fact that it's just going down, gold is still trading just right around $5,000. So it's still a massive rally year to date and all of last year in gold. So, you know, these markets are still incredibly volatile and they are moving. If you're doing it, risk-defying trading there, guys.
Okay, great perspective. But the view was definitely that we would probably see silver at some point break down. Great point that you made about gold. Joe, what's your thought?
Smelting's melting. I think that's the headline, is the idea that there's some deleveraging for sure going on right now. And, you know, Kevin mentioned the idea that when you're trading commodities, you know, grains, and any type of I don't want to say illiquid markets, but markets that just aren't as deep as, you know, financial markets. Little moves, and these aren't little moves, right? But they can exacerbate into bigger moves. And I think, you know, one of the things that we put out yesterday in our Schwab Market Update newsletter was the idea of looking at the rate of change of gold on a monthly chart in 2025 and 2026 relative to maybe, you know, times in past periods. We hadn't seen moves like that since the 1970s.
Oh my God, I think coffee's
And so,
really
you know,
good.
yes, completely different economic backdrop, but the whole idea of that parabolic move at some point means that people get over their skis. And I think today is one of those deleveraging trades where there might be some margin calls, there might be some other activity going on, you know, that's forcing some selling. And so, you know, one of the things that you know, we've talked about before is this idea of, okay, well, where's all this money coming in from, right? And because we actually started to see positions weren't expanding so much in some of the U.S. Silver ETFs, or at least by U.S. buyers of the silver ETFs, and a lot of that activity was coming from the Asian markets. And a lot of the Asian markets, as we've seen before, you know, they tend to skew a little bit more on gambling. And so when you start to see the retail traders from Asia start to kind of peel off some of those positions, what happens is, you know, the deleveraging trade occurs and things kind of
Okay, all right. Let's talk about Apple, you guys. Apple gave a big holiday quarter.
I need a rebound.
Revenue jumped 16% year over year. You had profit topping expectations.
Well, we got a nice little hammer right here at the bottom. That's a good indicator for a start. I better take a loss on this trade. Oh, shit. Always clean. This is Jim.
Hi, my name is Alex. How are you?
Yeah, I'm doing good, man. I'm snorting up some good cocaine right now. You need anything?
Well, what you say? Well, I'm calling you from Marketplace, and you already have health insurance from Marketplace, right?
No, I don't, sir.
Right now, you don't have insurance like many.
I'm homeless.
Educator, you have job insurance.
I'm homeless and nobody wants to help me.
So you are fully uninsured. You don't have any health insurance.
Do you have any money I can borrow? I'm homeless.
And you don't have any job.
Do you have any money I can borrow?
Sir, I'm saying that right now you're homeless and you don't have any job, right?
Well, I had a job and they fired me.
They fired you?
Yeah, because I said the word shit. I'm way out of the money. I don't think I have a chance on this now, unless we get Miracle. They kind of shot it down. About to take a loss here. Not worry about it. And move these things up, or just move them up. Right now it's 11. It's still early in the day. Come on. Let me see here, see if I can go in here and do something. Hey, Funk, say something. Yeah, I can hear you now. Yeah, they're fixed. They're both on spot now. It was simple. All I had to do was go to Discord. I kept going to OBS trying to fix it. Now I'm going to go to OBS and see if I can. Ten 4. I can hear you. Yep. Go to your Discord. You can hit speaker. God. Yep. We got a double bottom right now, so let's test. No. Well, we got two hammers. We got a nice little candle right here too. Yeah, I think the people on YouTube can hear you all now. You heard what he said. You showing your chart? Or just post it, or you can just post it. Well, we've got that. This is the chart that Funk gave me right here, and this is the bottom opening price, probably pre-market, 687. See, I would probably stop it right there at that hit and call that a head and shoulders. Yep. Yeah, I think I just got a little bit too far out of the money on these now. I think my coffee's sat in a pot for an hour. In a French press. Yeah. Mm-hmm. Yep. Kind of squeezing above it a little bit. Whoops, I'm in. No. I need to. I got 10 at $1, 10 at 75, and 20 at 50. Yeah. Now this. We're at 63 right now. Could get a little pullback to the 9 on the /ES if it doesn't break the 63. Mm-hmm. 200. Oh. Yeah. Well, no. Sure. 69, 66, 27. Oh, what time frame? What time frame? Yeah, there you go. That makes a difference.
Yeah, it's already bounced up 3 times today, so that's why I watched it on the up.
Yeah. So the 200 and the 63 meet even almost on the 5 and the 1 minute. And it shows a little bit of leverage on the 1 minute, the 63. See, the chart's about ready to clean up. Which it already. Plus, that's a shorter line now. PLTR bounced off the double bottom. Oh, that's a good spot.
Yeah,
Not,
this is. I might go long here if the next 10 opens up above this 12.
you're not. Oh yeah, you're not in it. Spank. We got to break this. This is a serious pivot point right here. 6/9/32.
These are a lot of powers stepping in, and you just broke the 5-minute handling powder. The longer you close by it, you can always get sellers stepping in the last 3 minutes.
You got triple top. And I'm gonna clean this chart up here in a second. And there's 90. I'd be happy.
I don't see a lot of orders on the books. I see some 62 that it might try to contra, but if you're even, I would definitely
Yeah. See if we hold this triple top. There we go. Hold it, hold it, hold it. That body's got to stay above that trend line. Right there. And we do have a hard resistance coming up. The support on the orb has now become a resistance. And we got the 200 EMA, which has been a solid resistance almost for a while, anyway, since 10 o'clock, 11 o'clock Eastern. What did I just say? The 200 EMA. So that's definitely going to be my exit idea. And it can run up and hit that top of that triple top here, a quad. We got body, body, wick right under the 200 SMA. On the 1 minute. Now, you know, I asked a little bit ago, I asked Funk, I said, no, our moving averages aren't lining up. That's because they're in different time frames. So it's always good to look at different time frames. An hour, 15-minute. Because you might see something on them time frames that you don't see on the 5 minute or the 1 minute. It'll probably tell you, no, we're at a resistance, or I think we're breaking a resistance. 85 times 40. Big old long hammer right there. Let's go. Break it.
On the 5 minute, I think you run the 67 on ES.
5 minute. In 5 minute, more like 69, 42, 46. You see that double top? Past the orb. Yeah, that one chart you got, I can't hardly read.
Deviations?
Yeah, with all them colors.
Well, this is what it's been going on the 5 minute.
Now I can read that.
Regardless of those colors,
Is that a linear channel?
Yep.
Deviation channel.
Yep.
So.
Except for I edited it and made so cost what you need to. I edited it and make 5.
Oh, really?
Go all the way out. Now go all the way out to the.
I added 2. Yeah, I got 2 on there. So this is called a linear channel or a standard deviation channel. You see that right there on the 5 minute, that double top where that green line is that you have on there.
Yeah, that would be your -1 deviation.
But we're at a solid resistance right now on this orb. You can see it's support here, pivot point more or less. If that breaks, I think we'll shoot her up. We've got 3 white soldiers. So you got a real strong, you got 3 black crows. and 3 white soldiers, so that's a trade of its own right there. If you got in that trade, I'd get out right now. That's just an idea. I can show you here. I've traded that strategy over and over and over and over. And it's beautiful because you got your 3 black crows, you got your inverted hammer, which is bullish on the 5-minute. Then you got 3 white soldiers. And that takes you up to the orb. You got a confirmation to get out of that trade there too. There's 105. Yeah. Now we're talking some big bucks. I was wondering what happened to you. I seen your last note in that other room. I figured, oh, there he goes again. You probably don't remember what you wrote, do you? You want me to remind you? Sure. It's one thing I like about Funk. He's here not to give alerts, but to give educational viewpoint. And he wants to make sure that people understand that he's here to help, not to exactly just follow his calls, but to learn what he's calling out and to verify it on your own. And that's what I like about him. Now we're coming back down. So this, like I said, this here was kind of like a trading strategy. You have the 3 black crows and your 3 white soldiers. Then you have an inverted hammer. So that's like an exit idea. Then you have the tweezer top. It comes back down. So now you're retesting. It should come back up and retest back to the upside here soon. And I'm down. I mean, I got out of that at $1, and it's at 50 cents now, just on them 2 candles. Market top signal. So we hit the orb in the 63 also for a resistance level. And then when I was down here, I said that orb's going to be your hard resistance. So if we come back up, that's what we got to break. That or the 63. I was called out mystery yesterday, Funk. Look at it now.
Nice. Yeah, I saw it.
Coin too. if it comes up. The coin's back down. Starbucks is down $2 now. Every time that guy gets out there, it pulls back. I'm having problems with my platform.
Big Bear hits $5 on the grab 1,000 shares. Period. Like, okay, I have no idea why they're so long. They just announced a partnership.
Who's this?
Big Bear AI, BBAI.
BBAI?
BBAI, yeah, so it's Big Bear AI. So I've been watching them ever since it started trading. Like, the stock pretty reliable actually. It'll go from 5 to 10 to 5 to 10 to 5 to 10 over periods of time. One year guys in here actually used to love to trade it. He had it that anymore.
Mike?
Yeah.
I don't know what happened to that guy. He just gone.
But it's pretty oversold right now. It's coming down to the negative 2 standard deviation on the 4-hour chart. Freaking 23 on the RSI on the 4-hour chart. Like, it hits 5 on grabbing 1,000 shares right it back up.
Oh, yeah. Greta definitely had a support here on the 90-day. Platforms are running slow. I might shut this down and reboot it. You're at the 63 on the weekly, which is pretty solid support, right around $5, 505. $5, yeah. That's a good spot. I got 448. I'll probably raise that up above the 200, but we hit the 63 right now. We're definitely at a support. I'm going to put an alert right here off the 200.
Yeah, I just put it high order in. Grab 1,000 if it hits 5 overnight or whatever. But I will not be mad about over 1,000 shares at $5. I promise you that.
Okay. Yeah, I'm going to shut my platform down. Things moving slow, or it could be the weather. We got a real strong head and shoulders here. /ES. Well, you got us curious.
I'm drawing it up now. Look at that bullet short side versions on the 100.
Yep. BBAI type of ticker in there. So if we pull it up, we can pull it up by reference. BBAI. Funk. Come on. Water. Damn. Someone asked me the other day about silver, and I said I'd probably sell it at $100. Something up like that over a year, up 400%. Just sold it the other day. I got a few of it, a little bit. Richard gave me an ounce. And when he gave it to me, it was at $34. And I had a little bit of, I said, damn. They said that the new Fed is, or the Treasury is trying to bring back the gold standard. And they said that you could see gold at 77,000 an ounce. Yeah, I would have. George, talk about love.
Growth is improving, as well as the fact that if you look at BMO Capital's call, they actually
Called
see a
Love out
larger
the other
share of
day.
Southwest moving into the corporate travel sector, and that's important because that gives you an idea that they're increasing the average revenue per seat mile because corporate travelers tend to spend more. Southwest was typically more of a tourist and
Way
leisure
overbought.
traveler airline. As they move up scale, that's becoming more accretive in top line sales at fixed or lower costs, and that speaks to why I think their earnings growth estimates are quite high. They're around 27% for this year relative to last year, and it's still trading at around 13 times this year's earnings. So one would say it's cheap. I think this is why the stock has been moving higher, irrespective of the fact that they missed on sales last quarter. And
It's way
some of the
overbought.
analysts are still constructively bullish, like BMO Capital.
George, it's fascinating
George,
to watch this one because one
piece
had
of crap.
moved yesterday, and earlier it was higher. Great point about in the context of today's market action. It makes me think of your overlooked stock segment because you don't think of Southwest Airlines as kind of an overlooked stock, but it fits the profile, I guess, to a certain degree when you see all the re-rating happening.
The only good thing for airlines right now is the gas prices are down. So fuel costs are down. Goldman Sachs maintains a $32 price target, raises it to 32. So it's overbought right now. We got a $50 price target.
Largely, you're seeing more and more analysts increase.
Bank of America has 57.50. BMO, I mean. We got Morgan Stanley at 55. Bank of America at 42. Seaport raises it to 58. This is a monthly time frame chart here. It goes back 20 years, 15 years. So during Trump years, it was pretty good. Then we had a crash into the election. That might have been when them trained. I can't remember when the planes crashed. It might have been it. Yeah, I'd say we're going to pull back to 46.50 and retest it first. So I wouldn't jump in it right now. 46. See if it retests that. Oh, bring it down just a little bit right there. Right off this here pivot point. Right off that 63. Perfect. And I'll set a little alert right above it. $46.36. We'll make it 35. We're flagging out here. Kind of a mixed bag on the candlesticks right now. I almost went out and bought me a new microphone. Didn't need it. Is Funk talking? Damn, you.
No, I'm looking.
Oh, I've seen your thing blinking there. Your name.
I think they're going to push us down. I think we head down towards the 69.20 level on the ES.
Oh, you do.
I just see contraction
How about
the expansion, and now it looks like we're going to trend down.
how about 69.40?
See, I thought about that too, but all my orders, I got 250 orders on the books at 69.20, and 69.20 is a major pivot point. It's almost pre-market low, and it's that pivot point from yesterday when we tried to bounce.
Okay.
It makes sense.
Yeah.
That looks like something important is sitting there.
I got inverse. The only reason I say that's inverse head and shoulders on the 1 minute.
Yeah, see.
But I see the double bottom. I see the 20 on the SPX too. The 69.20 on the SPX, double bottom. Off them three crows. Yep. Yeah, kind of. I think it lowers itself to a double bottom on the body of that candle. I call it a double, triple bottom with that wick. You see it? And you have slanted head and shoulders. Oh, the head and shoulders on top, yes, and on the bottom, but it's slanted down. So I would have called that a triple bottom, counting the wick. With a confirmation of an inverse head and shoulders. And both of them are strong, right? So you got your double bottom here. You got your head and shoulders. I'll draw it out. That body right there to that one. So you got your left shoulder, your right shoulder, and your right shoulder. You got your head right here. And then you got a triple bottom, kinda.
That's what I'm talking about that I see. So I've been studying fraction expansion trend.
But what was it again?
Contraction expansion trend, the three market
Yeah,
phases.
there you go.
So you contract for a little while, and you get into an expansion where it starts pushing boundaries, find out which way it wants to go. And then when you get in the trend, you usually get in the trend right off the middle of the contraction.
Yep.
So that's basically all I'm seeing right there is that we did not reclaim the middle of that contraction. I'm afraid we're going to trend straight down.
Okay. Kind of like an Elliott wave, downwards. There's your right shoulder right there. There's your double bottom. I'm going to see if it holds the 40, jump in the trade. /ES. There it is. I don't think I get my alert in here in time. Yep, it hit my alert. Okay, let's give it a shot. See if they're cheap enough. $69.40s. Right about now. $69.40s at 380.
There's all your quarters as it stands right now.
We just double bottomed. I got 69.80s at 380. Yeah, that's the chart. That's your main one, right? That's called an inverse head and shoulders. Okay, I'm at 430, 440 right now. So pay attention to what I'm going to say right here. I have two confirmations why I want to take this trade. Maybe three. We have inverse head and shoulders. We came back and touched the shoulder for the second time, chopping it off at a triple bottom. So I got a triple bottom and the second touch on the right shoulder twice. I'm using the /ES chart to trade the SPX. And I have a two-headed snake right now on the SPX that needs to break the shoulder right here on the right shoulder. And your left shoulder, your right shoulder, your first snake, and then you got your second head right there. So we got to bounce past that. Then you got a pivot point at 6.956.84 where that wick is, and that body right there. So there's another head and shoulders. Now it's on the 1 minute. Now 5 minute. You still have your inverse head and shoulders with your second touch on the 5 minute, along with a double bottom. So that's confirmation to take the trade. We're at 460 right now. I'm going to hold on to it. Anybody see the next resistance? On the 5 minute, it'd be the 200, right? Or the 63, somewhere in this channel. If you break the 9, they're at 510 right now. I'm happy with this trade. I can get out of it right now. So if you're in this trade, get out. Scale out. I want you to be profitable. I want you to read these patterns. 520. Thank you, Funk. $560. The VWAP is resistance. On the 1 minute, that's the 5 minute. 1 minute VWAP will be the resistance, or no, I think it'd be lower. Yeah, VWAP. 1 minute's a little bit more difficult. You have to break to 63, so that's going to be your resistance. Here's your trend right there, you see it? Right there. So we're fighting that we're squeezing right now. Any second, we're going to know something. Any minute. Okay, here we go again. We got a fallen wedge too. Back to 350. Let's do it again. New low on silver. Back to double bottom. Another head and shoulders. We've got a triple bottom, quad bottom, triple bottom with a higher low into a head and shoulders. Looks pretty solid right here. I should have got that 360. It comes back down. comes Papa. $69.40s at 340. Off of Head and Shoulders. He's at 330, they're 320. Let's go again. Do it again. Give me another $1.
That's a pretty important level on the 15.
What was it you said earlier? Oh, that was a slash ES. 69.20.
Yeah, all my orders are 69.20, but the chart is on the 15 minute shows me 26 is the level that it likes.
Yeah. I took a little knife.
I was trying to warn you about that top week on that last 15 minute candle before you got in.
Yeah. We'll see if we hold this support right here. If not, I'll just jump right back out. Take.
This is actually my favorite chart. This is, I get earlier entries than if I watch the hourly, but I don't get head faked as much as I do on the 5 minute. The 15 minute is almost perfect for what I do.
Yeah. The clear candles are red or?
Yeah, yeah. So white with no filling is the down move. Yeah. That's just a psychological thing for me. It's one of the things that I figured out. That is, if I just change the color of the down candles from red to white, don't get spooked as easy. I guess red just triggers a lot in the human sight. You know, red, like stop, danger. Like it's associated with so many things that trigger your brain.
Yeah.
That I just turn the candle white, and now I don't get freaking spooked as easy.
I think that's why I like dark background. $2.35. Yeah, 380 and 235. God. Nvidia's about to support 190.68. Tell her I said hi. Tell her my name. Tell her my. Yeah. How you doing, baby?
Big Daddy, what? Yeah, it's make it work, woman. Kind of skimp it right here, not gonna lie.
Yeah.
I just see one more cluster orders on Coke Mats at 69.20 that I want to go eat. Because if it's 69.20, it'll be in regardless. I've already called that.
Yep. You're fucking spot on. I call this good enough. Mm-hmm. Yeah. We call it book get. Hold on. Oh, hold on. Gosh, what's going on here? This thing today. Book may go where now? Yeah. Yeah. $39 a month. Try for free. I'll check it out later. So I got 6 of these suckers. Perfect. I'm green now, or was for a second. Sorry to hear that, Randy. That's a word I used to use a lot at Complacent. I'm at 255 now.
Yeah, I'm at 69.42. Got him at 170.
Very good. That's where I got them. We're up at the shoulder line. We got to break that on the 1 minute. I got 6 contracts. Hmm.
Just like that.
275. I'm happy with that.
Yeah. They want to finish those orders, though.
694228. We're above the shoulder line now of that inverse head and shoulders that we have a two-headed snake. One head, two head, left shoulder, right shoulder, and now we broke it.
Boom. Hey, I'm out. 280. 170 to 280.
Watch this. I want to get one more little boost.
You get it. You got more orders at 69.50, so if you want to go up there, you can grab those.
Now this is a fallen wedge. Resistance right here at 310. $3. 310. I can get 310 now. And if it breaks it, it's shot up to the 200. But this is a hard resistance, mind you. Because you got that top, that trend line. You break that, it's a bigger shot up to the double top up here for sure. But yeah, you hit a resistance, funk got right out. Boom, baby.
69.20 to 69.40.
Target. That was a real good call. I'm impressed.
I'm cheating. I'm telling you I'm cheating.
I know.
You can see where the orders are. It's cheating.
Break it. Give me a big fat check. That's the slash.
I think you can run to 50.
Yeah. There it goes. I want it all the way up to 6956.84. We're at the 63 on the SPX right now. If you break that, we're at the 50. So this is definitely a reason.
That's a lot of volatility. You see how fast that 5-minute candle was moving?
Yep. Good exit idea. Tweezer top on the 63 and the 50 SMA.
What's it at? 45 to the dot.
So, Wirtz. I never heard of this Wirtz guy. I got to see who he is. He's a young guy. Who is Kevin Warsh? Trump's Fed pick has close ties to billionaire GOP donor. I see it now. Okay, we're coming back down now to the shoulder line of this Head and Shoulders. That's the third Head and Shoulders there. I'm about ready to get back in here. Another Head and Shoulders. I'm going to move them up. Three of them at 69.30s.
It's pretty clean channel right there.
About now. There it is, 340. You got the Head and Shoulders. 3.30, 340. 3.40. The SPX 6930s at 340. Head and Shoulders. Inverse. Right off that right shoulder, getting up to resistance. Like here you are, right here, 460. Make a business decision. 440. So you got an inverse Head and Shoulders. Now, if we come back to the right shoulder one more time, I'll get back in it here. Well, that's pretty cool. Oh, I just got out of the SPX on the inverse head and shoulders. When it came back, you can see it up there in the window. $100. It went to 360. I got out at 340. That's 350. Company of Lies. This ice cream brand has gone downhill according to the Costco shoppers. Ben and Jerry's? I don't eat much ice cream. Oh, this is a good idea. I hate paying full prices for glasses, so I wait until the yearly sale to buy new frames. Did you get a lot of snow, Funk? Did you get a lot of snow?
No, we don't get snow in Alabama.
No shit.
We didn't get any.
Come on. We got 10 inches. 14-degree weather. Now it's 22. I don't know, are they doing to tell us we got another one coming?
She's about to pop.
Is she? Okay. Someone said we're going to get more.
Cloud is green and it's got that little curl to it that I like.
Tuesday.
I just need to break through this channel.
$450. Jeez. If it breaks, yeah, if it breaks to 63, I'll get back in it. 69, 13, 58.
I wanted a little bit of a pullback, but it's not going to give it to me. There it goes. Fuck.
Nice.
I should have just got in it anyway.
Yeah. Well, maybe I'll encourage you sometimes. That's what you're afraid of. Yeah. Takes confidence. After a couple of years, you'll have it.
I know what the hell I'm talking about. I've seen the pattern for years.
$5 to $6.40. $6.
It did the funky girl. And if it busts through the trend line at 69.44, it's going to go to 200 SMA at 54.
So last resistance was the 200 EMA on the 1 minute.
Close this. I'll show you what I'm talking about. You can see the funky curl in all its glory.
Yep. Come on, baby. Knock, knock. Who's there? The 200 EMA. Get it.
That is what I mean when I say the funky cross. That is what I see the EMA cloud do. And whether it points up or down, when it does that very, very smooth curl, you know, an EMA cloud can be really erratic.
Yep.
What I've found is that when it does that smooth curl, whether it's up or down, it's about to friggin' blow the roof off.
And that's off the cloud.
Damn, dude, my contracts are up freaking $300 a contract since I called it, and I didn't even take it.
210 right now on the second call. That's got one at 5. There it is, 210. I want this 60. I want this right here.
Oh, it wants the 200. It's going up to 54. Strong as hell. CBD is climbing.
So YouTubers called this off at down here off this right shoulder, head and shoulders. You can extend this line out here to the left just to see what it runs up into. But I'm using that body and then that body. And I just took a guess on that trade right there, jumped in it, because I usually don't jump in them until they pull back the second time. But in this case, I just jumped right in it because of them 3 black crows. And the tweezer bottom. We have 3 black crows with the tweezer bottom. Then you got target of 200 EMA and the 200 SMA. And you always want to try to get out of them a little bit early before you hit them. Then you get out when all the heat and everybody else is not thinking about it. You beat them out of it and then they get stuck. $8.30. See, right now is where I need to get out of this sucker. But we could still, I mean, this could be the V bottom that we've been looking for, right? $9. $9.40. That's it. This could be a $2,000 if it breaks the 200. Sorry. Sorry.
Whatever. One day I'll trust myself.
Trust the wash. I'm happy. I'll take 1050.
There she is.
11 something gone. Woo!
Yeah. Bunch of orders at 57 and 58.
Right to the 200.
But I think all those orders sitting above it are going to pull it up one more time.
Yeah, the 200 SMA in small caps.
Good defense, sellers. Not enough there. This is just sideways motion until the next leg up. That EMA cloud's actually getting bigger. That was the wick down to stop some people out. Now they'll go eat. God, I should listen to myself. Still stacking orders above it. We cleared the 200. This trade's gonna be juicy. Or did you already get out?
I'm out.
Oh. I see orders all the way up to 75.
We got the VWAP coming up here soon.
Damn, what a trade. Those fucking orders I was gonna order were going from $4.80 to $16.70.
1310 now. Might be a $20 one.
$1,200 in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes. $100 a minute. Whatever. I'll get them next time.
Right to the VWAP. /ES. Yeah, we're going to go higher according to the SPX. God darn, 1440. I just left $440 on the table. $400 on the table. 15. Walmart new high. Silver rebounded some off $70. We're at 76.83 now.
What? Silver? Holy.
Yeah.
I don't even have it on my watch list. It's $70.
Yep. It hit 70. 69.12.
100 a couple days ago?
115, 110 yesterday.
Jesus Christ. The hell? Oh my God.
Yep.
That 1 hour chart is gross.
Still bullish. As long as you stay above 64.29.
I mean, look at the top wick. I mean, look at the bottom wick on this hourly candle on silver.
Yep.
That tells you buyers have stepped in hard.
Now, on the yearly candlestick, look at the yearly.
I don't even think I have that time frame. What is that? 5 years year or something like that? Like,
Yeah.
It doesn't come standard with those.
I guess it goes back to 2007 SLV.
Okay, 5 years year.
It's a perfect support level off that $65, a little bit below it.
Oh yeah, dude, that is.
They got that right. They nailed that one to the penny by looking at the yearly. You see that YouTube?
Look at where silver's sitting on the 4 hour.
I'll look at that in a second.
That's why it stopped.
So YouTube, this is a yearly candlestick pattern. We spent 4 years trying to break resistance back in 2010 to 2013, and we just couldn't do it. She pulled on back, and finally we broke it with a big old engulfing candle right here last year, and then this year. So that when this pullback comes back and you got that wick, you want to use the wick and it lines up with the body of that candle. That's how you can find that support level. And that's like a confirmation. And he said, look at the 4 hour.
Yeah, look at the 4 hour. You'll see why it stopped where it stopped. You got the 200 SMA on there?
Yep. Perfect. Yep. 4 hour, 200 SMA. Body of the candle stays above that. You're still good. And that's a double top breakout or a triple top breakout. You got a gap right there too. So that's like a triple top breakout right there.
Yeah, plus at some point you're going to have to fill that 4 hour fair value gap back up to 95.
Come on. Oh, that's beautiful. That really is a good hard resistance too. I'm going to tell you what it is. If I can get this. Come on. There, we finally got it. Whew. Okay. Now this is the 4 hour time frame, and we got a triple top breakout with a gap. And that gap broke out above that triple top, right at that triple top, above it, and it maintained that resistance. So as you come back here, pull back to the 200, like you said, we got to break this resistance on this trend line right here.
Thoughts on IWM?
What's that?
Thoughts on IWM here?
IWM? Was that you, Big Gains?
Yes, sir.
All right, nice to meet you, my friend.
Well, I've known you for a long time. We haven't known your voice.
All right.
Been years since we've traded with Lucky.
Oh, yeah. In United Traders?
And what's that?
In United Traders?
No, Lucky's or what's her name?
The Asian girl?
No, the one from Vegas. No, Vegas.
Vegas, so Vegas. Vegas. Yeah.
Do you think a break 261? You think we're going to pull a full reversal here?
The IWM?
Yeah.
You got a triple top. 261, is that what you said?
That's what I'm looking at.
Yep. Yeah, and it's got to hold this previous high right here if it pulls back to 259.74. But yeah, that's a triple top though.
Right, I don't want to interrupt you guys from you guys' trade, so I just want to hear your thoughts.
Yeah, 259.20 is a support level off the 200 on the 1 minute.
Alright, sounds good. Let's hope this pushes. Hopefully we pull a day like yesterday.
Yes, sir. Yeah, oh yeah. What we were on?
Okay. Thank you.
Once you put that gaining about on 5 minute, I can go bullshit right now.
Alright, yeah, I think I'm gonna have to add that to my charts. I'll have to check that on the ENA pod. What are you using? Okay. Okay, thank you.
What am I using, Jim? What did you teach me? What did you use on the
I told you to use a belt. No. VWAP? Was it the VWAP? 9 and 21. Oh yeah. Shit. Yeah, I've done a few videos on the crossovers and stuff on that one. And it kind of keeps you bullish too. Once that 9, for example, like on this SPY, when that 9 crosses the 21 and keeps you respecting that 9 all the way up, you stay in the trade until it deletes that 9, then you jump right out.
Okay.
This is when I go bullish. Doesn't matter what card it is. Doesn't matter if it's PS, SPX, I don't care. When the 5 minute flips green and I get a candle above it, I'm now bullish. I don't care what the points are. That strategy works so damn much. And I do not go out of the break till you lose the freaking 5.
Yep.
Yeah, this is looking super strong here on the 5 days, 15 minutes, and that beat's pretty low. But I got the CCI really high. You watch CCI a lot?
CCI? No.
Yeah.
That's for swing traders. But I know people that do watch it a lot, but I think more of them are swing traders.
Okay.
Yeah. I just
My calls went from $4.80 to $27.
Oh yeah, I'm impressed.
Oh, I'm hot. I'm not
How much are those contracts now, those SPXs?
They're 23.80.
Shoot, man. One day I bought some 50 cent when Kyle was speaking. I bought 10 for 50 cents. Dude, I zipped into 15 bucks, 15 grand, 500 to 15 grand in one day. One trade. Trump seems to be the market
24.
now.
Yep. Well, you got Wall Street that hate him, and
Well, I'm almost 100% on these calls here. Well, fine, man.
well, what are you doing, man? You gonna give me 10%?
I was very deep on. I didn't even pick the bottom, man. I averaged down a little bit, but I don't know, man. This thing's been on a tear for the last 25 minutes, so.
You know,
I'm expecting a reset here. Hopefully, a reset and higher.
pulling back a little bit. Man. I know this dude that plays it. I'm gonna go $55. There's some pretty good sell-offs.
I've been watching like VBA, GBTS, Rocket Lab, Oppo, and Iron selling off all day.
Yep.
Also goes way down. I don't know why they have processors down. It announced there's some sort a delivery service in France and Spain with an Instacart. So I had big news yesterday and it gets freaking hammered.
Probably a big investment. Easy buy rides into China's instant commerce war zone. Whatever that means. Costco launching delivery service in France, Spain with Instacart. A baby food maker and furniture retailer will test appetites and blah, blah, blah. No big deal there. Jeff Bezos' worth is 5.7.
I don't really like Costco. I don't really like Schwab News.
You don't like it?
It gives you a lot of BS that doesn't apply to the ticker that you have selected.
Oh, yeah. And then there's a lot of bias on some of their headlines. But I got to read it. Just kind of keep me in the now. You know, I'm a devil's advocate when it comes to this, reading news. I got to see where it's coming from, and like Barron's, and it's bull crap. Mostly.
What's your guys' thoughts on the Williams alligator?
I've traded it with it before. Okay. Years ago. When the jaw opens.
Steered away from it?
Yeah, I steered away from it. I don't know why, but I started learning more about chart patterns and stuff instead of
indicators.
Yeah, indicators to me sometimes are. You know, as you can tell, I trade different than a lot of other people.
Yeah.
I don't have a lot of shit on my charts and.
Yeah, same here. I got very few.
Hey, Jimbo.
Yeah.
Pop quiz. Tell me what the absolute bottom was for ES today.
The ES? What'd you do? Nail it? Oh yeah, 69.20. I heard you. Yeah, very good. That's why I said you did a good one on that one. I said 40. You said 20. That's beautiful.
Deviation channel and rejected.
Yeah, I can kind of see the SPY. IWM is kind of correlating with SPY today. The last couple of weeks, it really hasn't. It's been on a small cap tear all January.
Mm-hmm.
I don't know. I mean, I'm probably not as, I've been trading for 15 years, but
yeah,
the way you're talking, you sound a little more in depth. I'm kind of seeing a little temporary pullback here for the next leg up. I'd like a little reset. I'm hoping they don't pull the rug though.
Yeah.
Now, if it pulls back, it's going to pull back on the 5 minute. You're going to watch it. It'll pull back to the 21, so it'll pull back to the bottom of the cloud, and then it'll launch. It uses the cloud as a trampoline.
You're at the 9 right now, so it's going to tell you. It's now.
Yes, should pull back to around 54. Yeah, I've had in a bunch of those, like, those paid Discords.
Yeah.
So they let me in, obviously, free as like whatever they call a pro trader.
Yep. What'd you think about it?
Because a lot of those guys don't know jack shit about what they're talking about.
I know it. I know it.
So, I mean, I had free access to all the paid Discords, and I still let all the damn Discords.
Yep.
Yeah, I did too with Vegas because she was calling calls at the top, and I'd call puts, and then because I was kind of, you know, making calls, and she kind of got upset, like, "Hey, you're conflicting with what I'm doing. It's my room," and I'm like, "Well, you said I could put out alerts and calls," and then I was right on the puts, so it was like she got upset with me, and I just ended up leaving the room.
Yeah. Yeah.
I don't make calls. It's like Jim said. I don't want people's money riding on what I say or do. What I do is put out charts and I put out analysis and I take the thousands and thousands of hours I've spent learning all these strategies and I take all the BS from the YouTube talking heads that is false information and I scrap it and I give people the strategies that actually work.
Yep.
That's why I'm definitely like being here. I just came back up. I know Washboardjim for years, but we haven't traded for a while. So
No.
I hit him up, got back in the room, and definitely like you guys' style.
Well, I'm about 5 times better than what I used to be.
I could see. I know you guys killed it yesterday. I was out, but I checked in the room, and I was like, oh, man.
Yep. Well, everybody trades different. And some, you know, trades work for people that in different kind of strategies, and there's all kinds of ways you can do this. And there's a lot of thick heads out there. I mean, I pound the table. Just all you got to do is learn these 16, 12 charts, and that's it. And you just got to learn them, and it don't take long. But there's a lot of strategies, a lot of people, a lot of pumpers. You got to. I was listening to Trader Warrior or whatever his name is commercial. You got.
Yeah, Warrior Trading.
Yeah, Warrior Trading.
Listen to J-Dub, listen to freaking JT.
Exactly.
All those ICT and all those BS. Like, I've tried them all.
Yeah.
Oh, yeah, I can't come to the conclusion to pay $150, $200 a month for a ring. It's just...
I don't think I've ever paid for one.
Neither have I. They've just gotten outrageous.
Yeah.
I used Black Box way back when it first came out. Not that as a room just for the. I mean, it was okay, but I used it a couple months and then just didn't really care for it. Here's that reset I was talking about. Are you getting it on SPY too or no?
You reset it to the 21. We're squeezing.
Yes, what I want to see is 3 5-minute black crows, and I want to see it bounce off the 54. And if I see that, that's I love 3 5-minute black crows back down to the EMA cloud.
Oh yeah, and you got the VWAP on the /ES first.
You got the 200 sitting there. The 200 is in the exact middle of the EMA cloud on the 5-minute. So you would have 3 confluences. You would have 3 black crows. You would have the EMA cloud, and you would have the 200. That's pretty strong argument for taking along.
Yeah, I need to be a little bit more patient jumping into my trades. My entries have been good, or my entries have been bad, and then my exits have been bad. It's like I was up over 200% yesterday and ended up only closing 100. For why? I don't know why. You know,
Mm-hmm.
just mentality things. And it's like I think I'm hearing what you guys are hearing is blocking out all the noise from all the different traders or this and that. You know.
Yeah, you have to be focused. If you can't focus in a Discord, then it's going against you.
Yeah, Jim was jumping in those SPXs, and I was gonna pull 691 puts on that thing called the double top.
Yep.
And they were like 58 cents. They went to like 240. But I was like, okay, Jim's been spot on, and I've been kind of off lately out of my phone, so I didn't want to take it. Sure enough, we got that pullback on from that wick yesterday. I was looking at the charts last night. I'm like, they're gonna take this wick back.
Yeah.
You know, that
So-
was my conviction all day, even on IWM and SPY, they did the same thing.
Did I nail it?
The what?
Whatever. Did
No,
I?
the put. I was going to call puts. You said double. You nailed the double top.
Yeah. Oh yeah. Okay, I got you. I nailed it. I nailed it then.
Yeah, you nailed it because it went. Those puts went from 58 cents to 250 or something.
Yep.
I think they were 691 puts I was looking at, and it was at 693. Here we go. Here goes IWM trying to push this 261. What do you guys think?
I don't trade IWM. I get crushed when I trade IWM.
Really?
I've looked at ES for thousands of hours. It's the only paper I know how to do something with it.
Yeah.
I get beat to death when I try to trade IWM.
Okay, I want you to take an IWM. I want you to take that. We hit that 63. And it's straight across resistance level at 261.20, straight across.
And I got that. I got the same thing.
Yep. If that don't break, do what you got to do.
Yeah, I'll get it stopping. Yeah, I was on SBS for a while, man. I was killing it back a year ago. I'm talking $15,000 trades, $37,000 trades.
Damn.
And, I went through some stuff, and then I just was getting crushed on SPX. I mean, I would get in some for $5, and then one candle was like $2, $1 without a stop. And I'm just like, I had to get away from it for a little bit, but get back into my groove. Like you said, you took 3 months off. That's kind of what I kind of had to do.
Yeah. Well, I took about 3 weeks off and got real stoned. Now, I'll probably stay clean for the rest of the year now.
Well, with my insomnia, I'm a VA veteran, so you know I got to check in with them. So
Yeah.
can't smoke here.
Good deal.
What they would say.
Hey Jim, for real, bids 54. Matter of fact, bids 55
On what?
on ES. I like the setup. You need to turn it off.
I'm gonna wait for the VWAP.
I see orders all the way up at 69.90. I think they're going to try to run this menu today.
Maybe even the 63.
Yeah, I'm gonna hold my position here because IWM's falling, SPX today and SPY. So if you guys are jumping in calls here, I'm gonna hold mine. Pretty soon I'll be back with you guys trading on the SPX. I won't be on.
All right.
And I need this little bit of confidence builder.
Yeah. Yeah. The SPX has a symmetrical flag on the big old tall flagpole. So this is called a pennant flag. I'm going to draw this out for you.
It is bear flagging. I mean bull flagging.
Yep.
I didn't even look at the 1 minute you said that.
Yep. You get higher lows in the megaphone on /ES, about to hit resistance to break. But this is called a flagpole. It's called a flagpole, and then you got a triple top and you got a triple bottom right here. It comes up, and then it might come back and retest one more time, and then boom, but you're getting in that sweet spot.
Yeah, some dealer just put 850 orders at 69.63. Drag it down there. That's a lot of damn orders. You hardly ever see anything over 250. There we go. I thought I was going to dip down the lips of the alligator, Williams alligator. I didn't want to dip that far, but it definitely spiked here on IWM. You see SPY.
Good job.
Yeah, you're definitely in a bull flag. I like that little curl, that little cup there, the little flag on the 1 minute. Needs to break here, that high, right?
Yep.
I think I'm in the same position with IWM. IWM's already broke, but I'm testing VWAP right now. Pretty kind of broke it by a couple cents, but could be a little fake out.
Well, we hit her 20, didn't we?
They went to 20
Close to it.
I don't want to look at it. Dude, one day I mean, I was up like 200% on another trade, and I figured I'd give it. I was like, I'm gonna give no money back. I'm up like $4,000 today. I was gonna take some SPXs at 170. They freaking went to $17. I was gonna take 10 of them just for shits and giggles, and they went to 17 grand. Man, I didn't sleep good that night.
So last week I was in the 5 SPX calls at 190 when he announced that Greenland framework. They immediately went from 190 to $20 a piece.
Dang, that is sweet, man. I know, I seen that day.
20 grand last week in under an hour.
I'm gonna go make me a hot chocolate. I'll be back. Yay.
Man, I feel like we're just melting up here. What do you see on orders for your SPX?
I thought that somebody stuck a bunch of orders at 69.63.
For sale?
A hell of a lot. Now they're my orders, but orders don't hang like magnets. There's 850 of them. That's very unusual. You never see more than 250 orders. That's it now. Go kind of bring it up. Yep. I hope everybody was watching that on Bookmap as it happened.
Good God, that 1 minute is freaking.
That's exactly what I was worried about.
That was a dollar move for me in 1 minute. 261 to 260. Bounced right off 260 though. Back to 260. Good. Think it's gonna bounce back?
Pull back to support.
Hopefully at a higher The same thing happened yesterday with IWM, man. I think slammed the dollar and the grid turned around the grid, it's right back. And when you're looking at that, are you looking at the take? You're not looking at the take, you're looking at what are you looking at? Look, Matt, we have to pay for that, like you were saying on Figure Swim?
Yeah, but $39 a month.
Yeah, that's
This one trade.
I thought I had this.
One trade, this one I'm already up $400.
Yeah.
It did exactly what I said it was going to do, Jim. Went straight to those orders on Bookmap.
Yeah. It stopped right at the 200 EMA. And the slash ES is now above the VWAP. squeezing.
All the orders now are above us. Like we already cleared that low. I'm in 2 of the 6960s at.
God.
I don't even know what the fuck I'm. Alright, I'm into the 6960s at 180. Down 290. 3. Hell yeah. Let's go. Hey, love. Look, man.
Getting to a shorter line of resistance on the slash ES. Not head and shoulders. And I'll be back. I did the other day when I was sitting in here, remember me doing that exercise with my legs? They have been sore ever since. And I did 50 reps of those stretches. I can't believe how sore I am. I'm going to start doing a lot more of those chair exercises once I heal from this leg thing.
Prison squat, up against the wall.
Yeah, prison, yeah, and the back against the wall kind of squats. That's my next job, prison exercise. It kind of shows that up on Active Trader too. Well, not the SPX though. It doesn't show up on here.
No, SPX doesn't have
No,
numbers.
it doesn't.
No.
Now you're at 691.58. It's bouncing around pretty big. I think we're ready for some volatility.
This is why I love. This is why I love movement. This is how I knew we were about to drop. That's how you read it.
Okay.
That big red line, you hardly ever see 250 orders.
Yeah.
At a time. So the order numbers are everything, right? Opposite strikes.
Oh, yeah.
That big red line had 850 orders there.
I see.
When they start stacking orders like that, like those 3 stacks, you know you're fixing to go get them. Especially if you're in a bullish uptrend. I think of it like hungry hippos is how I think of the market. Like it can't do anything until it eats. So if it wants to run it up, it's gotta eat something first. So it goes down and eats and then runs up.
Yep. Oh, yeah. That's why I like catching knives. Yeah. I think it's why I like catching knives. I got stuck so many times trying to get out of triple top or break out of resistance, and I said, I ain't doing this shit no more.
But you see those orders sitting there at 69.90. That's relatively they're probably going to try to push us down today because if you look, now that we've cleared those 3 stacks, there's no more orders below us. I mean, there's a bunch of little blue ones, but those are nothing orders. You don't even worry about the blue lines. There's like 40 to 50 orders. But you do always have to keep one eye on the map because they're always moving orders around.
Yeah. Seems that active trader.
Like right now, they just stuck 350 at 69.59. So they'll draw us right down there.
Okay, I'm going to go through my watch list real fast. Unless you see something coming up, let me know. Hims is down to 27. That's almost down 150% from a high. I got to get a chart up here. That's what I want. Oh gosh, new lows. This was at 40 then. Let me see what it says on a year ago. 72.98 to 27. I'm gonna send this to Vegas if she even cares. We got shop. Hims looks cheap, but I don't know. I never did follow it that much, but they were pumping the heck out of that thing. Earnings were down. Maybe that could be the reason. Shopify, we're below the 200. Now we are totally bearish. We got a triple top breakout on the daily. AMD, we're still bullish. We're above the 21, so it needs to hold or we drop down to 223. 224 for a strong buy. 230. That's what I'd look at. Set it right above 230 for AMD. PLTR 146, up a little bit from my call, I think. No. 145.21 I have as support. $145.21, and we're real close. GM needs to knife. Meta, I got a resistance level of a shoulder just right above 750. Support off the 200 and the 100 at 681. Oracle, we're getting to support. I got 158.50. 5 more bucks. Coin. I got a 180.64 alert set for coin. Nike is in my support channel right now at 61.28. We hit that today. We hit 61. Adidas announces fourth quarter. Goldman Sachs adjusts price target to 76 from 77, maintains a buy. We got snow in the red. We're definitely bearish on snow. We got a double bottom coming up at 190.90. Actually, it's a pretty good pivot point. Real strong support right around 191. I'd set an alert on that. That looks pretty good. That's a good strong pivot point on snow. PayPal, I just don't like trading it. I'm pissed off at PayPal. They censor.
Traders in those discords that got burned on PayPal.
Yeah, they censored a lot of people during Biden, so I'm pissed off at them.
I'm just talking about these pro traders that
Yeah.
have lost so much damn money on PayPal.
PayPal sucks. I've never been I've traded it when it first COVID came out. It was a winner, but then we got cost with that France news and everything. We definitely pulled back to the 200 EMA, so we're definitely at a solid support.
Yeah, so I've got a scanner that I set up on Thinkorswim that my deviation channels. So
Yeah.
It tells me when it hits that -2 deviation.
Mm-hmm.
And I just scanned it. The only one that I see that's actually really surprising to me because I haven't heard bad news about him is damn ARM.
ARM.
Way down there.
Now I'll look at ARM in a second because I used to trade that with Vegas. We have 5-day rule also on cost. 5-day sell-off. And ARM. Texas Instrument.
Uber is down there. Pizza is down there. Chewy is down there. Chewy's under $30.
Yeah. ARM's been upgraded on the 21st. I think it must have earnings coming out soon too.
Earnings were on 11.3.
Hmm.
It's got a double bottom on the daily 101.
Outperform rating at 140. No PayPal cost. Love.
The mean price I had for it on the day with my deviation was 37.
SPX is back at the 200. I'm going to see if this will bounce off the 100. I added a new moving average 100 SMA on my charts I'm testing out, and the 5 EMA.
Yeah, the 5 EMA is what Ripster uses in his clouds on TradingView.
Does he?
It's like the number one cloud on TradingView. The 5 and the 12, except where we use the 9 and the 21.
Yep.
The 5 and the 12.
Yep. Probably a little tighter. He probably gets stopped out a lot.
Somebody stuck 650 orders at 69.52. Thinking we're probably going to get pulled down there to it. Yeah. They're trying to pull us down because they're stacking orders now at 69.50. So they're just doing that stack, lower, lower, lower.
We got 8 minutes to power hour. I've noticed one thing, that hour before power hour is probably one of my most difficult hours to trade. So I've more or less have cut my trading in that period of time almost 80%.
1 to 2 central.
Yep. Yep. I've just got fed up with it. I get stuck every time. Almost, not every time, but I mean.
Anything after like 11 central?
Yeah.
Up until 2 central. So from 11 to 2 central, volumes low, the algos can whipsaw the price any way they want to. They can track people
Don't mess around. 200 EMA, double bottom. Bull flag. Up. Now you can get out here at the 50 SMA or see if you can double top to the shoulder line. But you're definitely at a resistance level here.
Still got my eye on these damn orders though.
That's called a bull flag, people. And your resistance is going to be the shoulder line right here. Right there. And this is the 200 EMA. This is a double bottom.
It's pushing.
So what does Jim do? He exits.
You think?
Uh-huh. Because we're at the shoulder line of the head and shoulders on the SPX. They're like $300.
He's gonna push to this high. His MACD is currently ripping up in the 1 minute.
You got a double top coming, and you got a triple top.
Yeah, triple top.
69.50. If it doesn't break the shoulder line. I mean, it has to break the shoulder line. $69.51.40. Beauty has beauty. Apple ended up having a fairly good day after that drama. $4, $6 on that knife this morning. You okay, Randy?
Randy ain't gonna be okay for a long time.
Probably not. He left, didn't he? The Zomic hype fading Zim, yep. Did you get out of your Tesla, Richard? Green? Jimmy said it would be a good trade today, didn't he? Very good. 2 minutes to power hour. And I'm going to go for a little walk, move some blood around, just take a few minutes. And I'll be right back. Oak. Do it. Yeah, don't let you go. I'm back in my apartment. Yeah. Trying to deal with the weather. We've got 3 black crows off the 200 on the Spy and the SPX. It's dealing with the snow and shoveling and trying to keep everybody happy. 3 black, 3 red candles. Okay. I'll holler at you later. Keep warm. Yep. Bye. Okay, it's that time of day when the volatility is here to play. Okay, today's story, before we get back into everything. Poop and Learn session with Washboardjim. Some animals glow naturally. Now, here's something I got to figure out. Bioluminescence. Bioluminescence is the ability of living things to produce light. Fireflies are the most famous example, but many deep sea creatures do it too. They use their glow to attract mates, confuse predators, or light up their surroundings. In the ocean, glowing might be more common than not glowing. The animals that glow naturally. Yep. They got them, what, the jellyfish? KOLD, ProShares Ultra Short Natural Gas. So, natural gas went up for why? Because of the snowstorm. And after the snowstorm, it sold off. You got to keep.
It's an inverse ETF. So as natural gas goes up, it goes down.
ProShares?
Yeah, that's
Ultra short?
Inverse leveraged ETF against natural gas prices.
Okay. So.
As it gets colder, you lose money. Because natural gas gets more expensive and the ETF goes down.
Well, I had that backwards, didn't I?
So Randy and all the others need the weather to get to like 90 degrees this week.
Yeah. Yep.
The biggest loss I've ever taken in trading is EQQQ. Do not mess with leverage ETFs anymore. I'm gonna grab me a contract right here.
We're definitely at I mean, this is at an all-time low. So let me go to 90-day. There's no bottom right now. $90-day, 20-day, 1 hour. Yeah, shit, I can get.
somebody's being real persistent. They expect another 400. Like, they will not let her go up. They just keep putting big orders right below her.
Let's see here. I'm trying to find it.
You get your book map working?
No, I haven't yet. I'll do some homework on it tonight.
You'll be really amazed at actually what's going on. Like, you can actually see what's going on in the market. Like, it's almost like looking through glass.
Yeah.
You can see exactly how they're manipulating it in real time. And since it runs in Schwab, like it runs in Thinkorswim, you know how you detach a chart?
Mm-hmm.
Put it in
Yeah.
another window?
Yeah.
That's all you do with book map. You just detach it and put it in another window.
And I got 4 of them.
Yeah. I have my chart in one window, my main trader in one window, and my book map in a window.
Not today, 1 day, 1 year, daily. Okay, I got it. Here it is. Yeah, it's definitely. Code has to reverse and get up to 16. There's no support now at all. $16.63. Thanks for clarifying that, Funky, on that code. Oh shit, that ain't gonna work.
I was wondering why it wouldn't fill me. You know, I hit the $5 buy order on BBAI.
Yeah.
It's sitting here at 5, and I was wondering why it wasn't filling me, so I pulled up book map.
Yep.
You know how many buy orders are sitting in here at 5?
No. Lot?
285,000.
Oh my. Need some volume.
I gotta get in line to get my damn shares.
We had a pretty good drop here on the SPX. Double bottom. /ES. We have 1, 2, 3 triple bottom here coming down on a fallen wedge. It's the third time I've cleaned this up now.
Watch 69.40 ES. See how it reacts there.
Yeah.
There's some orders at 69.25, but just a few of them. And 69.40 is the mean line from a deviation channels on the 1 minute that lines up with where all the orders are.
This could be it. We're coming back into the wedge. Yep, we're at also at a support level on a neckline, double neckline. Pulled back to a triple top breakout. I should have grabbed him at $4. That's pretty respected all the way down through there. There's 380. Strike. $69.30. $3.80. It went back down again, so I grabbed 2. Yeah. God. No. It's at my support. It needs to hold here, but now we're getting a little bit below it.
69, 40, 34 was my support.
All right, 69, 37, 13. Got a double bottom on the QQQ. Look how much that IWM pulled back. Big Biz.
Yeah, that killed me.
You didn't get out? What'd Jimmy say?
Yeah, you're right. And I should have known they ran it from a low day of 258 to 261 for IWM. That was a big $3 move.
Yep.
There we go. Yeah.
I don't know why I didn't add $3. I could have added 2 at least. That'd look nice by now if I added 2 of them. Right?
Yeah. So this, man, I'm getting to be in love with deviation units.
All right.
Look at that 1 minute deviation down. That main line.
I know a lot of good traders. It's good to swing with too.
Oh yeah, that's what I mainly wrote it for, was swinging.
Yep.
So I could look at that daily negative deviation and swing those. And I noticed that freaking it was kind of spot on for a day trader too. So if that ain't a freaking 69, 40, 30, that's it to the 1 minute that bounced.
$5.30, baby. Ha 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 da 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 da.
Didn't I sing to you? Didn't I sing to you? Then I go, don't worry.
Yep. Yay.
Alright, now they just added a bunch of orders at 69 and 39, so they're gonna drop most of it down there.
5.30. I'm gonna take it. 5.50. Thank you very much. 5.70. 6.20. I'll take that. I can't argue with that. 3.80 to 6. One contract. back down to 4. I don't know why I put average on there. $350. Oh.
Careful in loans. There's no orders above us. I like that. All the orders are below us.
Yeah.
There's 550 orders at 69.39.
We're doing the retest out of the snake, out of the wedge. I still think it needs to hold at 69.1736 to me to stay bullish. And we were right to the penny on that, almost, in the body there. Yep, there it was. I should have took it $3. $3.20. $3.60, I mean. $3.40, something around there. Now it's at $5.30. Back to the 200. Snake, breakout, pull back. Boom! Inverse head and shoulders. Off the wedge. To the 200. That $200 contract right there, just on them 2 candles. Had a hammer too off that 50 or that 9. That they're probably a catalyst right there. So you got a fallen wedge. Too much support, which held that last time, 3 white soldiers. Then you got that pullback. They always retest after a pattern. Not always, but lot. And then backs down. So now this is the 200, I think. No, 63. $6.40. You hear that wind out there? Can you hear it?
Yeah.
It's pretty tough right now. There we go. $6.90, $7. We're at the 200 EMA. Pretty sure that's what that is. Yeah. 202. Huh? That's probably one of your numbers. $202.
What's 202?
This here dotted moving average you have here on one of your charts with the orbs. That's what it says here if you look at it. I got the 202 length drawn as could change it to 200.
You sure that's one of mine?
Yeah.
My pre-market high and pre-market low, that was a different indicator than you were looking at.
This is
It looks like you're only running my orbs and my pre-market high, pre-market low.
orb indicator.
The smarter PM high low I gave you and the orb indicator I gave you.
Yeah.
Some of yours. You must have missed tight. You got a 200 and 2 instead of a 200. Because that's your exponential moving average. And
Actually, that
I can make you a study that has all those moving averages in the single study, so you don't have to put them in one by one.
yeah.
I've gotten really good at making studies in Thinkorswim.
It's 780 now. Got a double bottom on AMD with a new low and breakout on Apple.
Hot dog. Somebody opened a friggin' Tesla 450 call from March at 11 million. Your internet must really suck today.
Market makers?
You got or either you got a setting wrong. You know you're streaming at 5 frames a second? You're streaming at 5 FPS.
What's that mean?
Extremely low quality.
How do you know that?
I can see it up in the top right hand corner.
What? Where?
You may not be able to say the same thing I can see. So down there, let me find it.
You can see what I can't see. What the hell can you see? What else can you see? You see me sitting here naked?
See everything. I can see everything.
You are a little bit ahead of me. I don't see where you're talking
So
about.
when you go all the way to the bottom and you see your little toolbar that has like stop watching and mute and all that stuff, see it? If you scroll all the way to the bottom of your Discord screen.
Are we looking at the same picture here?
Absolutely. I'm gonna take a screenshot. Here's what this is. Very trustworthy person.
Mute. Oh, no.
Okay, so you're streaming at 5 FPS. Now this is the setting that you need for this. Alright, let me. Where is this? Good.
Streaming quality. Where do you get that at?
If you're looking at your, shit. Can you see my stream? So when you're streaming, there's something up in the top right of your Discord. It shows you like preview picture, right?
Preview picture.
Yeah, you can see what you're streaming. It's like a little preview window up in the top right. And it shows you what you're streaming.
Like Jim's layout?
No, this is in Discord. It's not in Box.
Oh. Fuck. Well, I've been looking at TOS.
You don't stream from Box, you stream from Discord.
So what do I do now?
Click that little gear icon that says screen settings and change your screen quality.
The gear setting? Server boost. Oh God. I'm about as dumb as they come. Streamer mode. I don't see how you can. Boom. Uh-oh. I lost my thing. I know it. 1020. I'm right at resistance right now. Got 3 white soldiers. Good up to a double top. Or inverse head and shoulders. Or head and shoulders. 69, 40, 81. Boom, baby. Figure out the streaming thing. What's this?
Good God.
Yep.
What do you want to see? Yep. In exactly 2 minutes, it's either going to shoot way the hell up or way the hell down. You better be ready at that 250 rollover. That 10-minute mark is killer.
Six, 9, 4, 3, 24 double top.
Yes, said it. I don't care about that double top. Said it's hungry. Actually, 69.75 is going to be a quad top. No wonder those orders are sitting there.
Oh yeah. How's he do it?
How does he do it? With the help of that's how he does it.
Yep.
Is a literal cheat code. Oh my god. I just looked at freaking natural gas for the first time since free market.
Yep.
Oh, that's not even funny.
No.
It's not funny. I tried to warn him. I told him to get out this morning and he freaking, I think he PCA'd down.
Mm.
Oh my god.
Randy's in it. Oh.
Holy shit, what a day.
Yeah, he's probably not too happy.
I like Randy, I just had no idea what the hell he was thinking going to get. You don't inverse natural gas prices when there's a damn market storm coming. That's the definition of insanity.
It's definitely been one here. These things are back to 550 just like that.
This 5-minute candle is freaking ridiculous. That's a parachute opening.
I mean, I'd trade it again, but I'm done.
But they've got a bunch orders close at 69.43 and 69.38. They want to pull it back down.
I'll be right back. 5 minutes left. Been a good day. Washboard toy. Jim. Let it roll. Bottom of his core. Narcissistic Jim. Care what you think. Burn down till his room stinks. Woo!
Lots of fun he had. His ego's ablaze. Burps and farts collide. The room is so amazing. Narcissistic Jim, the legend, the king, playing his old washboard till the closing bell rings. Narcissistic Jim.
You like it? I want the 9 EMA and the 21, the 63, the 200, and then the 200 EMA, 200 SMA and EMA. Yeah. I use the 50. Yes. Yeah, I put it in there. Let me try the cloud. I want to work. I want to some kind of some. It's red. Oh yeah, let me give you my red. Let me give you my colors. A dotted yellow. Green. Orange or gold. Orange. In that brownish, light brown color. Let me see here. Back in the room. Oh. Yeah.
So that would tell you the current bar volume, previous bar volume, and that bar volume is relative volume, so it compares the volume with the current candle to the past 5 candles.
Yeah.
When it goes past 1.5, it turns green. When it goes past 2, it turns purple. It means there's a big explosion in volume.
Okay.
Anything else you want to add to it?
Yeah, put the volume bar on the bottom. In the RSI.
RSI is a label, like those other 4 labels?
No, just
Those other 3 labels?
no, just RSI. Yeah. No. Just put it on the bottom of the chart.
That's something you do.
Oh, okay. Okay, I'll do it.
This is a study. This is a study for the top study.
Yeah.
I explain this. Like you can do the volume for the settings, and you can do the RSI and magnitude for the settings. What I'm trying to do is take a bunch of random stuff that you have to throw together and turn it into a study. So,
Yeah.
like I used to have RSI as a label. It sat right beside that bar ball label. So I would have VWAP, RSI, I would have to put it back D, which scrolls up or scrolls down. And I can do all that. I can do cumulative volume delta, so CVD, APR, if you do APR, like there's all kind of labels I can throw together.
Yep.
Or I can just stick with those basic ones.
Basic. Make it simple.
Hey, get you one study that has all your moving averages and volume levels.
That's very well appreciated. I'm going to get on out of here. Time to meditate and relax. Let me explain.
Grades, everybody in there should have made money. We did not lose a single grade. We did not. I don't even think we had dollar cost average.
I had to twice.
Entries like hell.
I did twice, but just little dips. But what was I going to say? I'm going to say the winter time, you burn 20% more energy not even knowing it. Then I have to work twice as hard. So, this is the time of year where I really have to concentrate, driving and everything else, because I got so much on, I don't do good in cold. I love heat. I can lick my own sweat all day. Oh yeah, mosquitoes. Alabama. Okay. Well, thanks a lot, Funk. You're a lot of help to the room. Add a little bit of patience. You add a little bit of patience. I've been telling the room for the last month that I've showed a lot more patience in my trading. And I think you have to when there's a lot of volatility like this. You have to know, get in and out. Yeah. Yep. Later dates, YouTubers. Yep.